एवरीवन, गुड मॉर्निंग, गुड आफ्टरनून, गुड इवनिंग टू ऑल ऑफ यू। आज हैं 3 अप्रैल 2025। वेलकम वंस अगेन टू दिस लाइव एनालिसिस। क्रूड ऑयल और नेचुरल गैस को देखें तो मार्केट वॉलेटाइल हुआ है कम्प्लीटली। फर्स्ट कैंडल ही क्रूड ऑयल की बिल्कुल खतरनाक बनी है। कल एक सेलिंग का ट्रेड बनाया था, वही सेलिंग कंटिन्यू कर गई नीचे। लेट्स सी कोई नए लेवल बनते हैं बिकॉज मार्केट इज़ टू वॉलेटाइल। कुछ नए लेवल क्रिएट होने जरूरी हैं तभी कुछ नया हो पाएगा। नेचुरल गैस भी कल सेलिंग के लेवल पे था। लेट्स सी यहाँ पर भी कुछ अगर नए सिनेरियो क्रिएट होते हैं तो ठीक है। बाकी बैंक निफ्टी निफ्टी देखोगे तो एज एक्सपेक्टेड नीचे गैप डाउन ही ओपन हुआ है। निफ्टी तो कुछ ज़्यादा ही गैप डाउन ओपन हुआ है। बैंक निफ्टी भी एक गैप डाउन ओपनिंग ही कर रहा है। मार्केट ओपन होने वाला है 5 मिनट में। बाकी मुंबई सेशन ओपन है, लंदन सेशन 12:30 पे ओपन होगा। डेटा की अगर बात करें आज के दिन तो आज 3 अप्रैल को शाम को 6 बजे आपको डेटा देखने के लिए मिलेगा अनएम्प्लॉयमेंट क्लेम्स का, फिर सर्विस पीएमआई का। तो ये डेटा इंपॉर्टेंट रहेंगे। बाकी निफ्टी बैंक निफ्टी को अगर देखोगे फिलहाल के लिए तो लेट्स सी कोई नए लेवल बनते हैं तो गैप डाउन तो ओपन हो रहा है जितना एक्सपेक्टेड था। चाइना पे बहुत हैवी सैंक्शन लगा दिए इन लोगों ने। देखना पड़ेगा चाइना क्या रिटेलिएट करता है। बहुत हैवी, लगभग 50% से ऊपर टैरिफ कम नहीं होते। लाइक देयर इज अ हैवी टैरिफ एक्चुअली। बाकी कंट्री पे उतने नहीं लगे। यूरोप पे 30%, वो भी बहुत ज़्यादा है। बाकी इन्वेंट्री आएगी आज नेचुरल गैस की तो उस पर भी फोकस रखेंगे। ठीक है, न्यूज़ वैसे टैरिफ वाली थी तो नेगेटिव ही। बाकी बैंक निफ्टी निफ्टी को अगर देखें क्रूड ऑयल तो मूव ही नहीं कर रहा है, अटक ही गया है बिल्कुल। कल अच्छा मूव आया था बैंक निफ्टी में बाइंग साइड पे, अभी तो गैप डाउन ही ओपन हो रहा है सीधा। नीचे देखो सपोर्ट है अभी भी 50,800 50,600 के अराउंड। कल का सारा जितना गेन था वो अप साइड पे सब निकल गया नीचे डाउन साइड पे। कल के लो के आसपास ही ओपनिंग है मार्केट की। बैंक निफ्टी ऑलमोस्ट 400 पॉइंट और निफ्टी अप्रोक्सीमेटली 180। निफ्टी फिर भी थोड़ा बहुत रिकवर कर गया है गिफ्ट निफ्टी की वजह से। अदरवाइज मॉर्निंग पे तो 300 पॉइंट गैप डाउन हो गया था कल क्लोजिंग के बाद। प्लान क्या कर सकते हैं, एक बार बैंक निफ्टी फ्यूचर ओपन हो जाए। नीचे अगर देखोगे बैंक निफ्टी में तो बैंक निफ्टी में फ्यूचर की बात कर रहा हूँ। जब मैं बैंक निफ्टी निफ्टी बोल रहा हूँ तो समझ जाना, आई एम टॉकिंग अबाउट फ्यूचर। मैं सिर्फ फ्यूचर की ही बात कर रहा हूँ। 3 मिनट, 3 मिनट और हैं, 3 मिनट और हैं बस। क्रूड ऑयल स्टक, मोमेंटम ही नहीं है क्रूड ऑयल में। ओके 2 मिनट लेफ्ट, 2 मिनट है। ठीक है, क्रूड ऑयल नेचुरल गैस के लेवल भी देखते हैं फिर से, नहीं अब मार्केट थोड़ा सेटल होने दो। बैंक निफ्टी इंटरेस्टिंग है। 1 मिनट, 1 मिनट, 50 सेकेंड्स। ठीक है, तो नीचे सपोर्ट है बैंक निफ्टी फ्यूचर में, देखते हैं। गुड मॉर्निंग अखिलेश जी। ओपनिंग तो कल के लो के आसपास ही हो रही है, दैट इज सपोर्ट। 3 बार सपोर्ट ले चुका है वहां से। फ्यूचर में फर्स्ट टाइम 24 ऑफ मार्च को लिया था, फिर 26 मार्च को लिया था, फिर कल ले चुका है। देखते हैं अगर थोड़ा और नीचे आ जाए 50,000, 100 टू 150 के बीच में एक सपोर्ट है, बाकी ये भी सपोर्ट है। बट इतने बार टेस्ट कर गया, गैप डाउन हो रहा है न्यूज़ की वजह से। अगर एक वीक बना देता है तो वेल एंड गुड, अगर नहीं बनाता है, रुकता है अगर यहाँ पर 50,800 के अराउंड, तो फिर नहीं तो यहीं से बाई करेंगे फ्यूचर में। ओके, ओपन हो गया है, ओपन होते ही हाँ बाइंग ही आ रही है थोड़ा बहुत वॉलेटिलिटी के साथ। लेट्स सी, थोड़ा नीचे आना चाहिए एग्जैक्ट सपोर्ट पे, तभी ले पाएंगे। ऊपर एक रेजिस्टेंस भी देख लेते हैं बैंक निफ्टी फ्यूचर की अगर बात करें। ठीक है, वैसे ओवरऑल देखोगे तो इंडियन इंडियन साइड पे इतना टैरिफ नहीं लगाया है जितना नॉर्मली एक्सपेक्ट कर रहे थे इंडिया पे लगाने के लिए। जो 10% सभी कंट्री पे लगाया है वही एक नॉर्मल है। लाइक भी करते रहो गाइस। हाँ गोल्ड तो क्या है, बुलिस, सुपर बुलिस हो गया था। इंडियन रुपीस भी देखोगे वो भी डॉलर के कंपैरिजन में और गिर गया। कल ओपन हुआ था 83 84 के अराउंड, सीधा 86 चला गया आज। ये अभी ट्रेड कर रहा है 85.73 के अराउंड। तो इंडियन रुपीस भी अच्छा खासा गिर गया उस वजह से। डॉलर काफी स्ट्रांग हो गया। और नीचे है सपोर्ट बैंक निफ्टी फ्यूचर में 49,950, 50,000 के अराउंड अच्छा सपोर्ट है। बट अभी थोड़ा सा ऊपर लेवल पे भी एक सपोर्ट है, अगर वहां आता है तो वेल एंड गुड, नहीं तो ऊपर से सेलिंग का देखते हैं वापस। अभी तो पहली कैंडल फ्यूचर की देखोगे बिल्कुल डोजी कैंडल बनी है। अभी भी क्लोज होने में टाइम है। 15 मिनट का चार्ट देख रहा हूँ, ध्यान रखना। अलग अलग टाइम फ्रेम पे अलग अलग कैंडल फॉर्म हो सकती है। थोड़ा सा अगर ऊपर आ जाए ये। ठीक है, कल के हाई के अराउंड अगर ऊपर आ गया तो कल के हाई के अराउंड सेलिंग हो जाएगी बैंक निफ्टी में। 51,550, इस रेंज के आसपास सेलिंग। अगर नीचे आ जाता है तो वेल एंड गुड ही है, बट अगर ऊपर जाता है तो फिर ये रेजिस्टेंस बन जाएगा। टाइम लगेगा इसमें भी आने में। ठीक है, 51,550 और उसके नीचे वैसे तो 51,450 से 51,550 पूरा ही जोन है, उसके बीच में ही सेलिंग बनती है। बाकी नीचे मेजर रेजिस्टेंस एक 49,950 50,000 पे है, बट उससे पहले कल का जो लो है वो भी एक सपोर्ट की तरह काम करेगा 15 मिनट फ्यूचर चार्ट में सेलिंग के लिए ना। ठीक है, रिकवरी करी है गैप डाउन के बाद, लगभग 300 पॉइंट गैप डाउन ओपन हुआ था, 150 पॉइंट तो रिकवर कर गया है। रेजिस्टेंस को हिट करने वाला है बैंक निफ्टी 15 मिनट में, एक छोटे से एसएल के साथ यहाँ पर एक सेलिंग का प्लान। लाइक भी करो गाइस, जिन लोगों ने लाइक नहीं किया स्ट्रीम को, कम ऑन एंड सब्सक्राइब द चैनल। कोई क्वेश्चन हो तो कमेंट बॉक्स में पूछ सकते हो। अभी क्रूड ऑयल और नेचुरल गैस का थोड़ा सा वेट कर रहे हैं लेवल का। क्रूड ऑयल तो वॉलेटिलिटी क्रिएट कर चुका है, कल रेजिस्टेंस पे था, क्लोज होते होते एक रेजिस्टेंस का ट्रेड, सेलिंग का ट्रेड बनाया था, वहीं पर क्लोज हो गया था, गैप डाउन ओपन हो गया, फॉरेक्स में आ गया था नीचे। नीचे भी एक सपोर्ट था, वो भी हिट कर चुका है, यहाँ पर जो कल वाला सपोर्ट बनाया था वो वहाँ से भी सपोर्ट ले चुका है, तो मिडिल ऑफ द लेवल है। ऊपर सेलिंग से नीचे और नीचे सपोर्ट से ऊपर जा चुका है। थोड़ा सा और सेटल डाउन हो जाए तो मेरे अकॉर्डिंग तब ट्रेड करना और बेटर रहेगा, rather देन डायरेक्टली अभी ट्रेड करना। अगर ये होता तो यहाँ पर ही इजीली बन जाता है यहाँ से, क्या पता वो हो, पॉसिबिलिटी है। अखिलेश सिंह जी 8,100 बुकिंग क्रूड ऑयल, ओवरनाइट होल्ड किया था क्या सेलिंग में, या फिर मॉर्निंग पे बाई कर लिया? मॉर्निंग पे पहली कैंडल पे ले लिया क्या ट्रेड? बड़ी फास्ट एग्जीक्यूशन कर दी लग रहा है। कल शाम सेलिंग होल्ड किया था, चलो बढ़िया है फिर तो। रात भर देख तो नहीं रहे थे फिर? क्रूड ऑयल फॉरेक्स का चार्ट, कि ऊपर गया या नीचे गया। किसी ने अगर होल्ड किया था सेलिंग का ट्रेड तो अच्छा प्रॉफिट हो गया होगा। गैप डाउन ही अच्छा हुआ एक्चुअली। कल यहाँ पर जो सेलिंग का ट्रेड बनाया था वहां से देखोगे वैसे तो 130 पॉइंट गैप डाउन हुआ था, वही विक भी काउंट करोगे तो 250 पॉइंट, बट ये पहली कैंडल बहुत वॉलेटाइल थी तो मुझे नहीं लग रहा उसमें सडनली कोई कैच कर गया होगा। नहीं तो एटलीस्ट 100 पॉइंट तो वहां पर थे। सिक्स, अच्छा ऑप्शन पुट बाई किया था 6200 का। बढ़िया है बढ़िया है। अब देखते हैं इसका क्या कंटिन्यूएशन मोमेंटम मिलता है या फिर मार्केट करता है क्या अब। टैरिफ जो लगने थे लग गए, ट्रिगर पॉइंट मिलना था मिल चुका है। क्या मार्केट अब रुकेगा, क्योंकि अब मार्केट को डायरेक्शन पकड़नी चाहिए जहां भी जाना है, अपसाइड या फिर डाउन साइड। ठीक है, अब और टैरिफ लगेंगे इसके चांसेस कम है। जो रिटेलिएट करेगा उन्हीं पे लगेंगे, इंडिया पे तो नहीं लगने वाले। इंडिया वैसे भी रिटेलिएट करने वाला नहीं है। देयर इज अ वेरी हाई चांसेस कि एक फ्री ट्रेड एग्रीमेंट साइन हो सकता है अगले कुछ सालों में। अकॉर्डिंग अब कमोडिटीज और इक्विटी मार्केट को एक डायरेक्शन लेनी चाहिए। बाकी अगर आप इवन यूएस मार्केट को भी देखोगे कल, सडनली वो न्यूज़ आई थी उसके बाद फॉल ही करता चला गया 2 बजे के बाद। थोड़ी बहुत रिकवरी करी है बट मार्केट हाई लेवल से काफ़ी अच्छा गिर गया था कल इक्विटी मार्केट। ठीक है, 5% से ज़्यादा। बाकी आप गोल्ड को देखोगे, अगेन अपने एक नए ऑल टाइम हाई के अराउंड गया, 3160, अभी वहीं साइडवेज है। बाकी अगर क्रूड ऑयल में कोई क्रूड ऑयल भी सेल करके गया था तो वो भी ट्रेड सही चल रहा है। थोड़ा बहुत वॉलेटाइल हुई थी, वॉलेटिलिटी हुई थी अपर लेवल पे, बट होल्ड कर गया मार्केट। कि थोड़ा बहुत मोमेंटम ही आ रहा है बस नेचुरल गैस में। ऐसा ना हो मार्केट आज इसी रेंज के अंदर साइडवे चला जाए कंप्लीटली, बिकॉज एक कैंडल का हाई लो ही कम से कम 250 पॉइंट का है। डिस्टेंस देखोगे अगर हाई से लो के बीच में क्रूड ऑयल में। ये बैंक निफ्टी ऑलमोस्ट फ्लैट हो गया है। गैप डाउन 300, उसके बाद रिकवरी है 300 पॉइंट की, रेजिस्टेंस के काफी करीब। कितने पॉइंट का एसएल है फ्यूचर में अप्रोक्सीमेटली, और 15 मिनट टाइम फ्रेम पे लगभग 180 पॉइंट का एसएल बन रहा है, रेजिस्टेंस पर है 1:3 के टारगेट के लिए। 51,910, 51,920 फ्यूचर का एसएल। 51,700, 750 के बीच में बाई कहीं। डे लो टारगेट 51,200, उसके नीचे जाएगा तो फिर देखते हैं। ओके, बैंक निफ्टी सॉरी क्रूड ऑयल सेलिंग थोड़ी बहुत कंटिन्यू है नीचे। सपोर्ट को होल्ड करता है तो देखते हैं, ठीक है। फिर से मॉर्निंग पर टेस्ट तो हुआ है ऑलरेडी। अखिलेश सिंह जी, क्रूड ऑयल फॉरेक्स में 69 पे सपोर्ट लिया है, $69 पे सपोर्ट लिया है। बिल्कुल कह सकते हैं फॉरेक्स में $69 वाला जो कॉन्सेप्ट है, बिल्कुल कह सकते हैं वहां पर सपोर्ट है।
The Middle East region, home to the world's largest sovereign wealth funds, managing $3.5 trillion in assets, $4 trillion economy, young, digital-first population, driving
always a toss-up between how the negative impact of tariffs offset with the positive impact of other policies, tax cuts, deregulation. So I think it's about balancing the two.
Do you see this as short-term pain, long-term gain for the U.S.? I mean, ultimately, do you think the U.S., Trump may actually succeed at delivering on what he wants to achieve, i.e. a rewiring of the global trading system, making trade more fair for the U.S., bringing manufacturing jobs back to the U.S., and he talks about all of these things. Do you think there's a chance he actually is successful in the medium term?
Well, it's clearly a gamble. I mean, we've all read the research in terms of how this policy, is meant to pan out. And look, you can't sort of rule the fact that these things could work out. But for financial market investors, though, I think the pathway to any such final outcome is equally important. And I think that's where a lot of the debate today about the recession risk versus the offsetting factors. I think for us to help answer that question and understand what pathway we're going down, the success or not long term, I think the clue will sit in indicators like the US dollar. Because I think that would be perhaps one of the first areas we'd start to see whether we break out of the range, truly get a weaker dollar or not.
Yeah, but the theme seems to be one of dollar weakness. Let me ask you, are you changing any of your investment thesis based on what you found out in the last 24 hours? Have you changed your allocation? Are you looking to change your asset allocation because of the news?
Look, at the moment, we have not. And look, it's prudent to relook at it. We do that every single month, so I don't see any changes from that perspective. But I think what's interesting is where we start the conversation. The headlines, of course, coming as quite a potential negative. But then if I look at the dollar, it's still in the range. I look at VIX, it's very much like, the two sort of short-lived corrections we had over the past year. So that's why, we wouldn't look at this universally negative. We would wait for the dust to settle. Clearly, markets where there's equities or bonds clearly moving towards supports, which are still a few percentage points away, but we would take a more balanced approach. We think diversification, but also being open to the idea that perhaps there are a few opportunities to buy if markets continue to move to those supports.
So where are you allocating right now?
So I think number one, we'd still keep a moderate overweight to equities within the context of a diversified portfolio. I think the diversification is important because we've just seen the value of bonds, of gold, of the Japanese yen as diversifiers. So it's not a singular call. Second is across regions. I think in the US, we've always been fans of the little pocket in technology software. I think adding more to Europe, we're much more neutral across regions. That's one shift we made in the last couple of weeks. So especially if we get a pullback in European equities, we'll look a bit stretched. We'll be looking to even out our positioning between the US and Europe compared to the overweight we had in the US. And I think in China, we have been of the view that we're due a healthy correction. We've seen quite a strong rally, but if we saw the Hang Seng pull back to about 21,600 or so, that's another area we'd be willing to potentially dip our toes in a little bit more.
Yeah, and even the price action today suggests a moderate response out of some of these Hong Kong and Chinese indices. It tells you that maybe a lot of the pessimism was actually priced in already.
That's what we're really trying to gauge.
Manpreet, thank you so much. Great to have you with us on such a big day. Manpreet Gill, a Chief Investment Officer at Standard Chartered Wealth Management. And still ahead on Bloomberg, we'll be speaking live with U.S. Commerce Secretary Howard Lutnick following President Trump's Liberation Day tariff rollout. That's coming up on Bloomberg Surveillance at the Times on your screen much later in the day. This is Bloomberg.
The Langham is more than a hotel. It's a cultural landmark, a symbol of timeless style and luxury. It's not just about expanding, it's about thoughtful growth. Each location reflects our dedication to preserving heritage and creating something extraordinary. That coupled with our own legacy for having been around for over 160 years, that's what sets us apart, a focus on your story, our legacy.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising chorus conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. Israel has launched multiple airstrikes across Syria, hitting the capital Damascus, as well as the cities of Hama and Homs. Syria's foreign ministry says the bombardment lasted 30 minutes and injured civilians and military personnel. Israel has attacked military infrastructure and seized weapons in Syria since the fall of President Bashar al-Assad as part of a new defense doctrine intended to prevent a surprise attack. And Tesla sales fell 13% last quarter to an almost 3-year low as the car maker revamped its Model Y EV and dealt with an international backlash against the CEO Elon Musk. The electric car pioneer delivered just under 337,000 vehicles, its worst showing since the second quarter of 2022. Musk's involvement in government cutbacks and support of far-right candidates and causes has sparked protests across the U.S. and Europe. Shares are down more than 40% from a high after President Trump's election win. And today we are tracking the price action across global markets after Trump's tariff announcements yesterday. S&P futures down 2.7%, Nasdaq down 3%. A heavy session inside for European markets as well, leaning towards the red, down 1.7%. And then the handover from Asia, not so pretty this morning either, with the Nikkei down 3.2%. More on that in just a moment. We'll be right back analyzing the impact and the potential reaction out of some of these major nations to that big tariff announcement yesterday. This is Bloomberg.
The Langham is more than a hotel. It's a cultural landmark, a symbol of timeless style and luxury. It's not just about expanding, it's about thoughtful growth. Each location reflects our dedication to preserving heritage and creating something extraordinary. That coupled with our own legacy for having been around for over 160 years, that's what sets us apart. A focus on your story, our legacy.
In case you missed it on the close.
I think our sports fund is very exciting. We've invested in a number of new leagues that are doing exceptionally well. A number of the investments we've made, we've already seen prices that have gone up already about 50% plus. So what you find in new leagues and new teams is if you're right, it's going to grow exponentially. Right, so the whole key and the nice thing about that is you see the ratings the next day. So I can tell you if it's grown, like we've invested in PBR and professional bull riding. That league is growing 30% plus a year.
There's professional bull riding?
Yes, do you want to get on a bull? You'll end up, if you could stay 8 seconds.
I don't know, this sounds awesome. Do I have to go I don't have to go to rodeo for that. That's
no, you could do it. We are here in New York.
Okay.
We own the New York Mavericks, so you can come anytime you want to go.
Okay.
Come, you'll love it. Yeah, we'll chat offline.
Don't miss the close, live every weekday.
In case you missed it on Bloomberg Surveillance.
I worry less about AI taking my job. I worry more about someone who uses AI really well taking my job. AI is still not going to have the human instinct and the judgment that you're going to need to have. You're still going to need to do oversight. There's a human in the loop, but now that developer is going to have a companion. And so what AI will allow us to do is not just go do things that humans don't do as well, but actually do things that humans don't have the time to get done.
Don't miss Bloomberg Surveillance live every weekday.
Bloomberg has the Fed decision under surveillance with the fastest coverage and exclusive analysis, including Powell's press conference. Nobody covers the Fed like Bloomberg.
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
I've never seen cash machines as lucrative as these companies are.
Just close your eyes and buy.
Many Koreans find this really shocking and unbelievable.
This needs to be a wake-up call for Europe.
You can have only one captain of the ship, and we are the captain of the ship.
You love it or hate it, you can't ignore it.
Insight with Haslinda Amin, only on Bloomberg.
Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Global sell-off. President Trump's announcement of a minimum 10% tariff on all exporters to the U.S. spooks investors. Havens rally on fears of an escalating trade war. Do not retaliate. U.S. Treasury Secretary Scott Bessent warns trading partners it could get worse if they fight back. And oil declines on fears a trade war could threaten global demand despite energy being spared in the tariff rollout. Well, it has just gone 8:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. A tariff earthquake is what I would call it. And the announcement that we got yesterday, many people saying that the overall announcements, both on broad tariffs to imported goods into the U.S. and on those reciprocal tariffs targeting 50 nations, are close to the worst case scenario. And it's very clear that the Trump administration is pursuing a maximalist approach on these tariffs impositions. And on the back of that, markets are buoyed this morning. There's a sea of red behind me for all of these global stock market indices. Futures in the U.S. leaning deeply towards the red. The S&P futures down 2.8%. NASDAQ down 3.3%. Again, tracking losses for the year. The NASDAQ close to 10% losses year to date now. And this on concerns very much around the U.S. economy. Poly markets, recession odds overnight have now shot up to more than 50%. People really are concerned about the impact that these tariffs are going to have, not just on the U.S. economy, but the global economy as well. Hence why we're seeing a reaction in European markets this morning, 1.8% weaker, as we heard from the likes of the European Commission President Ursula von der Leyen a short while ago, saying that this is not the path that they wanted, but they will likely have to come up with some sort of counter response as well. We'll speak shortly to Oliver Crook about what Europe are planning on doing. And then the handover from Asia Pacific also negative as well, down 1.4%. Close eye on some of those key indices, Chinese markets, Hong Kong markets in the red, but perhaps not as deeply negative as we thought it was going to be. Vietnam, for example, posting its worst day in more than 4 years. So many of these Southeast Asian economies are feeling the heat as well. Switching over, this is what we're seeing in terms of safe haven flights today. The yen, we've seen a big shakeout in the Nikkei earlier on. Ava was just talking through the impact on the banking space, with some of those stocks down more than 5 to 8%. But the yen is stronger, 1.4% firmer versus the USD. So a typical sort of risk-off trades going on there. Gold, all-time highs once more, up 0.4%. Geopolitical uncertainty, inflation scares, all of that contributing to gold that continues to go up. 10-year yields, take a look at that. 8 basis points lower today. We're getting close to 4% again. It wasn't that long ago. We were talking about 4.3, 4.4%. We've come a really long way this year in terms of how far these yields have traveled. So sitting close to 4%. And then crude, you can see now, we have broken through $70 to the downside, so down 2.5% this morning. And this, again, on fundamentals and the fact that not only are OPEC Plus bringing back extra supply to the market this month, but there are now serious concerns about global demand, given the impacts that these tariffs could have on the demand outlook for some of the biggest nations around the world, from the U.S. to Europe to China. Okay, let's zoom in a little bit on how Asian currencies are faring. Avel, in the first part of the show, we were talking about the equity market reaction, but I think Asian currency reaction is interesting as well, because for the most part, we have seen dollar trading weaker this morning. How is that having an impact on some of these key Asian currencies we're tracking as well?
Yeah, it's really interesting, right? Because if you zoom out into the region, most of the currencies are declining despite some slight dollar weakness. And I think this page is a good one to show you because it shows you the market dislocation and how traders are treating the EMs versus the DMs. Vietnam, for example, 46% tariffs, and the currency, the Vietnam dong, plunging to the lowest on record. We're also seeing the Japanese yen, as you highlighted, receiving that safe haven demand. And keep in mind that as dollar yen moves towards 147, it's also not far from the lows of the year, 146.5, thereabouts. Even the Singapore dollar, despite Singapore getting 10% tariffs, is firming up a little. So maybe in the region, Southeast Asia, is also seen as a bit of a safe haven. Now, the Chinese renminbi is also really interesting to watch. I mean, we saw the onshore hitting lowest in about 7 weeks, but offshore, we're seeing it relatively stable. And for this, I think it's key to watch the signals from the PBOC because we got the weakest fix since January, but it was still stronger than traders' estimates. So what this tells us is that even for the likes of the PBOC, what they don't want to see is rapid depreciation of the Chinese currency, even with these tariff headwinds. So that's what you're seeing across FX today.
Yeah, keeping a close eye on the yuan there. Avril Hong in Singapore, thank you so much. Let's go back to the top story. President Trump has imposed the steepest American tariffs in a century on all U.S. imports. His campaign to reshape the global economy will see higher duties on some of its biggest trading partners, such as China, the EU, Japan, and Vietnam. Now let's take a deep dive into the reaction from across Europe and Asia with Bloomberg's Oliver Crook in Brussels and China correspondent Min Min Lo from Hong Kong, our roundtable this morning. Good morning to you both. Min Min, let me just start with you. Our Bloomberg economics team were saying that this imposition, these set of tariffs, are close to the worst case scenario that they had actually envisioned for China, taking the total tariff rate to above 50%. What has been the reaction from Chinese authorities so far?
Yeah, it's really worse than the worst case scenario that many people had been planning for, because you look at the 34%, the reciprocal tariffs there, you add to that the 20% that were pre-existing, plus you add the legacy tariffs that were in place before Trump came into power. Bloomberg Economics saying that it's about 67% tariffs on Chinese goods so far, more than even what Trump had telegraphed on the campaign trail. And Bloomberg Economics say this could shave off about 2.3% of China's GDP, which is pretty significant. And it could cut China's exports to the United States by 80%. That's just talking about direct exports. If you look at indirect exports, the sort of goods that were transported to the U.S. via third-party countries like Vietnam, that could be even bigger of an impact. In terms of China's response so far, we heard from the Commerce Ministry this morning saying they are strongly opposed to the tariffs. They're asking the U.S. to scrap all these unilateral tariffs, saying that China is vowing to take countermeasures. They have not detailed what those measures will be or when they will be in place, but judging from previous rounds of tariffs that had been imposed from the U.S., China typically takes those countermeasures on the day they take effect. So we're looking at April 5th or potentially April 9th for any countermeasures from China. We are also hearing from sources unofficially that the NDRC, the top economic planner, had been told to put on hold any approvals for Chinese companies looking to invest in the U.S. So holding back that foreign direct investment into the U.S. for now while they assess the impact. And as Avril said, the first big move we had seen is from the PBOC's fix, which was about 0.13% higher than yesterday, showing that China is willing to use that currency as a potential way to soften the impact of tariffs.
Yeah, interesting point there on the fix. Let's turn to Oliver Crook and the reaction from European nations at 20% reciprocal tariff rates. Oliver, I guess the question is, do they fight back or do they try to negotiate a deal here?
Well, the answer for the time being is they will not fight back. They will basically take these tariffs. They're going to basically sort of take a little bit of time to assess what their sort of impact is going to be, and also try to assess how basically the Trump administration has calculated this rate of 39%, right? That is how much they say that the EU is in terms of trade barriers that exist between the European Union and the United States, which is why they've given them a 20% tariff, which is, by the way, pretty close to the worst-case scenario for the EU. The officials here were expecting something between 10 and 25%. They got 20%. That is obviously a very sort of sizable tariff for the EU. We're talking about $1 trillion worth of trade on an annual basis. The sort of trade deficit to the EU's favor is about $200 billion, and that is really what the Trump administration has taken into its sights to try to resolve. What is interesting is that they are trying to address that trade imbalance, not just because of the tariff rate for the EU. And this is where things are going to get very interesting for EU policymakers, because Trump last night kept talking about non-monetary barriers, non-tariff barriers, and that is what he wants to address. So he was talking explicitly in the EU, saying that there's an effective ban, for example, because of regulations in the European Union on basically the import of American poultry. So for European policymakers, so their main response right now is not going to be immediately to impose tariffs. It is to be basically try to appraise how the Trump administration is calculating the trade barriers and try to find ways in order to address that issue, an issue that they acknowledge to a certain degree that there is. You cannot deny that there is a trade imbalance between the EU and the United States, particularly on the question of goods. Services, actually, the U.S. runs a surplus. This is a point, by the way, that European policymakers have tried to make to the Trump administration, but to no avail.
Yeah, and also looking ahead, Oliver, maybe just walk us through the timeline over the next couple of days, because also in parallel, there is a NATO foreign ministers meeting taking place, and you've got to think the politics of all of this is going to be intersecting at that meeting as well, as you talk about Europe having to be more self-reliant when it comes to things like defense. So it's not just the economy and tariffs we're talking about, but also defense and shoring up a unified position on Ukraine.
Yeah, Jumana, I think that's what makes this so sort of interesting. We have within hours of these sort of tariffs coming into effect, the 25% on auto tariffs, and of course the announcement last night, you have Marco Rubio, the Secretary of State of the United States, landing here in Brussels in the next couple of hours to have a foreign ministers meeting with NATO, right? And as this Trump administration tries to right a lot of the sort of perceived wrongs that they have across the board, whether it's about taking care of European defense, whether it's about trade imbalance, all of these issues will inevitably bleed into one another. Sometimes more explicitly, sometimes less explicitly. But at the end of the day, the Europeans need the Trump administration on side, A, for European defense, but B, to find a sort of decent resolution to all of the issues that there are in Ukraine and try to end the war. They need the Trump administration on side, so they don't particularly want to antagonize them. In addition to the fact that the NATO alliance itself is probably in its most sort of tenuous position, certainly in recent history, maybe in its entire history, at a time now when Marco Rubio arrives in Europe in order to have some of these discussions with foreign ministers. I'd be very interested to know how much of the conversation is going to be about defense in Ukraine, how much of it is going to be about tariffs. We're going to speak to a number of foreign ministers throughout the day, today and tomorrow, and we're going to be putting that question to them.
Yeah, Oliver, great to have you on. Bloomberg's Oliver Crook giving us the European perspective, and Min Min Lo running us through what the response has been from China so far. Thank you very much. Now, President Trump's tariff announcement saw the dollar fall against G10 currencies, while the yen rallied. Joining us now is Mahjabin Zaman, head of FX research at ANZ. Good to have you with us. Let's just start with the reaction in the USD today, because despite all of these tariff announcements, the dollar is actually trading weaker. Is this the right response, do you think? Are currency investors on the right side of the trade?
Look, you would imagine that tariff news definitely would lead to a rise in the dollar rather than a fall. But look, I think the market really suggests that, maybe the initial move is really looking beyond how tariffs impact business and consumer confidence, and ultimately looking at the hard data of consumption in business investment, which will likely be a Q2 story. Look, I think in the near term, we still have the view that we will see a stronger dollar, a little bit of this weaker dollar, stronger euro story that we're seeing just a few hours into this announcement could be the view that maybe there might be some room for negotiation. At the end of the day, the multi-level tariffs are really only going to go live on the 9th of April, so that gives us a couple of days to see any sort of reconciliation that could take place, and maybe that's what the market is pricing in at this stage.
What if the U.S. does actually enter into a recession? What happens to the USD under that scenario?
Yeah, look, I think for the dollar, it's quite interesting. If the U.S., that's not our base case, but if there is a recessionary environment for the U.S., it also matters what the rest of the world is doing, right? If the rest of the world is also in the slower global growth environment, likely we see the dollar tend to benefit in this environment. But I think what we are kind of seeing at this stage is that, yes, there will be some moderation in growth in the U.S. from pretty high levels that we have seen over the last many years. So fading U.S. exceptionalism. But when we look at relative growth differentials, still sort of feels like there's a little bit of a bias to the stronger U.S. economic momentum relative to the rest of the world. You know what I mean?
How much is the yuan fixing from here on going to affect where the dollar ends up trading over the short term? And we're keeping a close eye on where the PBOC are allowing the currency to fix. It did come in a little bit higher, but perhaps not as weak as people had anticipated this morning. But if the Chinese authorities do allow for a continual weakness in the yuan, what sort of knock-on effects will that have to the USD and currencies around the world?
Look, I think the move in the CNY, if it continues to weaken from here, surely it will have a spillover effect, especially on Asian FX, as well as Aussie and Kiwi dollar, which tend to be proxies for the CNY. We do expect the CNY to be moving towards that 750 mark over the course of the year, but it will not be a sharp adjustment. We saw a gradual fixed adjustment today and probably see a more gradual move as we go along to avoid any volatility. Broad Asian FX has already moved a little bit ahead of this announcement. We have seen weaker Southeast Asian currencies, and the Aussie and the Kiwi. You could argue over the course of the last couple of months we have had a weaker dollar, but the Aussie and Kiwi have not rallied, and it's for really this reason, in anticipation of what happens with the Chinese yuan, because that correlation remains pretty strong.
Yeah, I mean, the typical FX adjustment mechanism is that the countries that have had tariff rates applied to, should have their currencies weakened to sort of adjust for that dynamic to make them relatively more attractive. And yet what we're seeing this morning, the euro is firmer, the pound is trading firmer, the Japanese yen is trading firmer. It just all seems a little bit counterintuitive. What do you think investors or the market is missing here?
Look, I think there are first-order effects and there's second-order effects. Now, I think the starting point of every economy today, as tariffs come on board, is very different to where it was in Trump 1.0. We are at a point where we are already starting to see a little bit of a slower economic momentum in the U.S. off the back of many years of exceptionalism. I think that's impacting what the U.S. dollar is reflecting. And further to that, of course, we are in a week where we're going to get jobs data that will be key driver into what the market expects in terms of the growth dynamics of the U.S. But at the front end of everything, given there's so much switch-on, switch-off of tariffs that we've seen with Canada and Mexico, there is a lot of uncertainty around the U.S. businesses side of things in terms of how they should invest, where should they be spending their money, whether they should be hiring or holding on to all of those, investment spends. And I think that's really what's really reflecting in the U.S. Economic data. And sentiment is the first and foremost driver of all of that, and that's really weak at this stage.
Yeah, that's such a good point on sentiment and whether or not people are going to feel better or worse after this these series of announcements remains to be seen. Mahjabin Zaman, head of FX research at ANZ. Thank you so much. Now, coming up, we're going to switch tacks a little bit away from tariffs. Cracks appear in South Africa's coalition after Parliament backs a budget law despite opposition from within the government. We're live in Cape Town next. So the latest, this is Bloomberg.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, special contributor Larry Summers of Harvard on what Liberation Day tariffs will mean for the economy. Santander's Anna Botín on why President Trump may be just what the European economy needed.
Europe is awakening, and the alarm clock has been President Trump.
And the story of how you're getting your premium bluefin tuna sashimi care of private equity. Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. South Africa's parliament has approved a key piece of budget legislation despite objections from the second biggest party in the coalition government, raising the risk of the alliance unraveling.
I don't think you can vote against a budget and tomorrow you want to go and be part of its implementation. It can't be.
Well, that was the country's finance minister there warning the Democratic Alliance of the consequences of voting against the budget. For more, let's bring in Bloomberg's Paul Vecchiato in Cape Town. Paul, so this story, I mean, this has been going on for a couple of weeks now, the challenge of getting a budget passed through Parliament. And there still seems to be a lot of daylight between the two major ruling parties. Is the coalition at risk?
It certainly seems to be. One senior Democratic Alliance leader yesterday said to me, you know, they think they will exit the GNU, but the last part of the play is still to be played out. In other words, it's still something. I'm not sure exactly what.
If you look at that, China, first row, China, 67%. That's tariffs charged to the USA, including currency manipulation and trade barriers. So 67%, I think you can, for the most part, see it. Those with good eyes, with bad eyes. We didn't want to bring, it's very windy out here. We didn't want to bring out the big charts because it had no chance of standing. Fortunately, we came armed with a little smaller chart. So it's 67%, so we're going to be charging a discounted reciprocal tariff of 34%. I think, in other words, they charge us, we charge them less. So how can anybody be upset? They will be, because we never charge anybody anything, but now we're going to charge. European Union, they're very tough, very, very tough traders. You know, you think of European Union, very friendly. They rip us off. It's so sad to see. It's so pathetic. 39%, we're going to charge them 20%, so we're charging them essentially half. Vietnam, great negotiators, great people. They like me, I like them. The problem is they charge us 90%. We're going to charge them 46% tariff. Taiwan, where they took all of our computer chips and semiconductors. We used to be the king, right? We were everything. We had all of it. Now we have almost none of it, except the biggest company is coming in. We're going to end up with almost 40%. Lee Zeldin's working to get their approvals. And it's an amazing company. Mr. Wei, of one of the great companies of the world, actually. They're coming in from Taiwan, and they're going to build one of the biggest plants in the world, maybe the biggest for that. But 64%, we're going to charge them 32%. Japan, very, very tough, great people. And again, I don't blame the people for doing it. I think they're very smart in doing it. I blame the people that sat right in that Oval Office, right over there, right behind the Resolute desk or whichever desk they chose. Japan, 46%. They would charge us 46% and much higher for certain items like cars, little items like cars. 46%, we're charging them 24%. India, very, very tough, very, very tough. The Prime Minister just left. He's a great friend of mine, but I said, you're a friend of mine, but you're not treating us right. They charge us 52%. If you look at Switzerland, 61% to 31%. Indonesia, Malaysia, Cambodia. Oh, look at Cambodia, 97%. We're going to bring it down to 49%. They made a fortune with the United States of America. United Kingdom, 10%, and we'll go 10%. So we'll do the same thing. South Africa, 60%, 30%, and they've got some bad things going on in South Africa. We're paying them billions of dollars, and we cut the funding because a lot of bad things are happening in South Africa. The fake news ought to be looking at it. They don't want to report it. Brazil, 10%, 10%. Bangladesh is 74%. So you see what's going on. Pakistan, 58%. Sri Lanka, 88%. So what we're doing is we're taking not the full, we could take the full 88%.
News when you want it with Bloomberg News Now. I'm Doug Krisner. We begin in Washington, where President Trump officially announced his tariff policy. A minimum levy of 10% will be applied on all imports to the U.S. beginning at midnight on Saturday. And the president announced reciprocal tariffs at rates of roughly 50% below what foreign countries place on U.S. imports. A few examples: 34% on Chinese goods, 24% on imports from Japan, and 20% on all imports from the European Union. They take effect, by the way, April 9th. Here is Trump speaking earlier outside the White House.
My fellow Americans, this is Liberation Day, waiting for a long time. April 2nd, 2025 will forever be remembered as the day American industry was reborn, the day America's destiny was reclaimed, and the day that we began to make America wealthy again.
That is President Trump speaking there. We also heard from Mary Lovely, senior fellow at the Peterson Institute for International Economics, and she called these tariffs much worse than feared. Mexico and Canada were not named. Trump is keeping the tariff exemption in place for USMCA products. However, the levies on steel and aluminum do remain in place, and 25% tariffs on autos and light trucks are about to take effect. And we are now hearing from China. The government has firmly opposed the latest U.S. tariff move. According to a statement from the Ministry of Commerce, Beijing is vowing to take countermeasures to safeguard its own interest. Meantime, in Australia, Prime Minister Anthony Albanese called the imposition of a 10% baseline tariff on Australian goods a poor decision. And Albanese added he would not respond with retaliatory levies. Here is Albanese speaking with reporters.
For Australia, these tariffs are not unexpected, but let me be clear, they are totally unwarranted. President Trump referred to reciprocal tariffs. A reciprocal tariff would be 0, not 10%. The administration's tariffs have no basis in logic, and they go against the basis of our two nations partnership. This is not the act of a friend.
That is Australian Prime Minister Anthony Albanese. He went on to say that Australia would strengthen its anti-dumping regime and provide millions of dollars in support to affected sectors and create trade missions to diversify its export partners. Shares in Tesla jumped by more than 5% today. This on hope Elon Musk will refocus on the car maker. This after Politico reported that Musk's time as a top advisor to President Trump may soon end. Later in the day, Press Secretary Caroline Leavitt posted on X that Musk will depart from public service when his work at Doge is complete, as previously stated, and she dismissed the Politico story, calling it garbage. Investors, meantime, have been concerned about Musk's absence from Tesla, as well as a lack of strategy when it comes to addressing consumer backlash. Here is Bloomberg's Max Chafkin.
So we've seen that play out in the sales, and the stock is going up at the moment. My assumption is people reading this Political report and thinking, okay, look, he's going to have influence in Washington. It's going to be hard to like totally untangle Elon Musk from Donald Trump. But if he's not in the White House on a day-to-day basis, that's got to help Tesla a little bit, both because Elon Musk is going to be less distracted and perhaps because he won't suffer the brand penalty as much.
That is Bloomberg's Max Chafkin. Sources tell Bloomberg that Amazon has reportedly made a last-minute bid to buy the U.S. operations of TikTok. Now, President Trump will soon decide the fate of those operations before a deadline comes on Saturday, when the Chinese owner of TikTok must either find a buyer or face a ban in the U.S. Here is Bloomberg's Spencer Soper.
It's really a site where people dip in, buy what they need, dip out, which has been very good for Amazon. But if it could get people to linger around and be entertained there, all the better. People spend even more, and its advertising business will be that much more lucrative.
That is Bloomberg's Spencer Soper. Earlier, the New York Times reported Amazon made an 11th hour bid in a letter to Vice President J.D. Vance and Commerce Secretary Howard Lutnick. Meantime, the Financial Times was reporting that the White House is close to approving the sale of half of TikTok's U.S. operations to a group of new outside investors, including Andreessen Horowitz, Blackstone, and some other large private equity players. And that is news when you want it with Bloomberg News Now. I'm Doug Krisner, and this is Bloomberg.
What caffeinated foodstuff is currently suffering a shortage? What company's new AI model is called QWQ-32B? Prada is in talks to buy which luxury fashion brand?
To take effect next week. Plus, as European investors assess the fallout, we will speak to the president of the German Autos Association and Ireland's Minister of State at the Foreign Affairs Department. Good morning. If you thought the markets were priced for this event, take a look at the screen, take a look at the markets and the data and the action that we're seeing. They had not fully priced the action and the decision coming through. The Trump tariff bazooka. This is now a global trade war. Every single nation hit by tariffs to some degree, from Laos to Lesotho to the EU and China, of course. China facing tariffs cumulative now of more than 50%. European futures then pointing to deep losses on the back of this news, pointing lower by 1.8%. Here in the UK, FTSE 100 futures down by 1.4%. The UK hit with a 10% tariff. S&P futures stateside down by 2.7%. That is what's been flagged in the session. And when it comes to the Nasdaq 100, which of course has already been under pressure year to date, currently pointing lower by 3.2%, with tech the focus given the supply chain ruptures that we're expecting to see as a result of these broad-based tariffs announced by President Trump. Let's flip the board and have a look cross-asset, because this is where you see the safe haven moves around the yen, around the benchmark US 10-year, closing in that 4% level right now. The benchmark 10-year yields down 7 basis points. Money continuing to move into treasuries and traders ramping up their bets of additional cuts from the Federal Reserve as recession risks now loom for this US economy. The Bloomberg Dollar Index is down 0.6%. Money moving into the yen, into the Swissy. That is the safe haven play as well. Oil being crushed in the session, down 2.3%. Gold, another safe haven. The yellow metal, of course, with the gains of more than 18% year to date, up 0.2. in the session so far. Let's have a look at the corporate impact then. Apple in focus, given the supply chain impact and the tariffs, again, the burden on China, given, of course, the production facilities that Apple has there, but also in nations like India and Vietnam, Mexico. What does that mean for a company like Apple with all of that exposure? The stock is down more than 7% then in after hours. Nvidia as well, given the exposure not just to China, but to the EU, the supply chain picture and what that will mean as those get torn up. Currently, of course, the producer of those AI accelerators pointing lower by more than 6%, and Nike, with the US consumer in focus, having to absorb that additional levy, currently pointing lower by more than 7%. So much of the product, of course, produced and manufactured in nations like India, China and Vietnam. Let's cross over to Asia right now, where Avril Hong is standing by for a check in terms of how things are adjusting in the Asian session. Joining us out of Singapore, what a day, Avril.
What a day. What a massive repositioning we're seeing in Asia's markets. Clearly, investors were not expecting this. These tariff levels much worse than anticipated. So you're seeing that Vietnam stock gauge, 46% tariffs. Remember, the stock gauge plunging by the most since 2021. The Vietnam dong plunging to the lowest on record. Not just that, Japanese stocks are also really underperforming today. It's the drag from the autos, but also the lenders. Remember, these concerns about the global growth trajectory are affecting the BOJ's rate hike path. There was chatter previously about maybe we see something in the first half. Now even September is not a certainty, and those rate hikes would have helped banks' profitability. So unsurprising that these Japanese banks, this gauge of them is dropping by the most since the yen carry trade unwind of August. Flip the board and take a look at China, because as you just highlighted, these levies are worse than expected for them as well. But it's really interesting how we're seeing the gauges managing to pair earlier losses. Mainly also that's happening in the mainland stocks, which tells us that A, maybe a lot of the bad news was already being priced in, but perhaps more importantly, that investors now expect authorities to front load stimulus given the tariff headwinds. Now flip the board, just raking through as well what we're seeing in the FX space, because the renminbi onshore today slid to the lowest level in 7 weeks. Offshore looking still pretty stable, and it's interesting to past the signals we're getting from the Central Bank of China, right? Because it is stronger today, the fixed versus traders estimates. So signaling they still want to kind of support the currency, but it is the weakest since January. The takeaway here is that yes, these tariff headwinds, maybe the PBOC will let the yuan weaken a little, but they don't want to see rapid depreciation in the renminbi. Amid all this, what's really been shining through today, the safe haven qualities of the Japanese yen. We're seeing it not just moving towards the 147 handle and its outperformance in the Asia Pacific. Keep in mind that it's also not far from the lows of this year, dollar yen of 146.5, really amid these global growth concerns.
Remarkable moves in the Japanese yen, with Goldman Sachs, of course, having called that as a safe haven on those US recession risks. As you say, that currency up more than 1%. Avril Hong in Singapore, thank you for the check on the Asian markets and how investors there are adjusting to what is looking like a rupturing of global trade lines from these tariffs. Staying with our top story then, US Treasury Secretary Scott Bessent warning trading partners not to fight back.
I would advise none of the countries to panic. I wouldn't try to retaliate, because as long as you don't retaliate, this is the high end of the number. And I think the market could have certainty that this is the number barring retaliation.
Let's bring in Bloomberg's Valerie Taitel. We know, of course, that the EU is preparing to retaliate. China says it will do too as well. Val, talk us through the economic impact of the tariffs that have been outlined by this Trump administration.
Tom, some really interesting analysis right out of the gates from Bloomberg Economics about the potential GDP impact of these tariffs announced yesterday from the Trump administration. The European Union could see a GDP impact of 1.1%, Tom, and that does not take into account any countermeasures coming, which could make the GDP impact even worse. The UK, less scathed with their tariff only 10%. The GDP impact is smaller, not 0.2%. But take a look about the GDP impact from China. Bloomberg Economics sees nearly a 2.8% GDP impact for the Chinese economy. That is a whopping number. Moving on to the export impact. Again, another analysis from Bloomberg Economics. They see a drop of Chinese exports to the U.S. up to 80%, Tom. That is a whopping number. That is rewiring global trade. The EU could see exports drop to the U.S. of up to 50%. The UK, less scathed out of this, a 20% drop in exports to the U.S. It is in no question that we are risk off, especially in the equity market. S&P futures in the Asia session hit a fresh year-to-date lows. We are off slightly of those lows, but still a 2.7% move to the downside as we see a rally into safe havens. The Treasury curve in focus as well. This is a belly-led rally led by the 5-year sector. Note, Tom, there is no pricing for immediate cuts from the Federal Reserve. The pricing for the May meeting has stayed stable. What the market is pricing in, though, is a lower terminal rate from the Federal Reserve. Hence, we're seeing the move more pronounced farther out in the curve as that 10-year yield gets very close to 4%.
Yeah, and these market moves suggesting that investors think that the US is going to be amongst the worst hit as a result of these self-imposed tariffs, of course, on these major trading partners of the United States. Bloomberg's Valerie Teitel, thank you very much indeed in terms of the economic impact and how markets continue to adjust. Let's get more details in terms of what President Trump actually announced. Of course, the US to apply a minimum 10% tariff on all trading partners and additional duties on around 60 nations.
In a few moments, I will sign a historic executive order instituting reciprocal tariffs on countries throughout the world. Such horrendous imbalances have devastated our industrial base and put our national security at risk. That's why, effective at midnight, we will impose a 25% tariff on all foreign-made automobiles. Nearly a century later, in the face of unrelenting economic warfare, the United States can no longer continue with a policy of unilateral economic surrender. We cannot pay the deficits of Canada, Mexico, and so many other countries. And today we're standing up for the American worker, and we are finally putting America first. And for these reasons, starting tomorrow, the United States will implement reciprocal tariffs on other nations.
Let's bring in Bloomberg's Katia Dimitrieva for the latest then. Katia, what are the details of the tariffs announced by Trump?
Well, as you said, it's going to hit everyone. There is a 10% tariff on every single country that sends goods into the U.S. There's going to be tariffs as high as 60% on other economies. And it's important to note that these are some of the U.S.'s biggest trading partners. You can think of Japan, South Korea, the European Union. All of these countries are going to be seeing their goods into the U.S. going up in price. And this is something that companies have immediately reacted to. Stocks are down across the board, of course, as we just heard. And we haven't even heard the retaliation yet, because what could exacerbate this is if these economies then come back. You know, we've heard from the EU so far. We've heard from Chinese officials who say that they're going to retaliate against this. And the details of that will really shape how far this goes and how much higher those rates could potentially go.
And Katia, China is, of course, a nation you know very well indeed. Are we looking potentially at the end, if not this year, then in a decade, of most US-China trade? Give us the scale and scope of what is being imposed on China.
Well, it is definitely a possibility. Bloomberg Economics ran some numbers very recently, finding that a 60% tariff rate, which is a number that has been floated by President Trump, would actually decimate most of trade between China and the U.S. Now, we're not at that level, even if you add in the sort of 45% and the 20% that was already imposed. But I think overall, I think that was the conclusion, is that trade would essentially cease to exist. Now, for other countries, they might be able to find exemptions, they might be able to negotiate something, but given China has been such a focus for the U.S. administration, as well as some countries like Vietnam, where they're kind of alleging that there's transshipments happening, it's not likely that they'll be able to reach that agreement.
Katia Dimitrieva, thank you very much indeed with the details on the tariff announcements and, of course, the impact on China and how China responds, of course, will be crucial in terms of this dynamic. Some lines crossing in terms of the Japanese response. The Prime Minister saying that he and the team will assess there in Tokyo the tariff impact on domestic industries. The Japanese government will protect domestic industries and jobs, they say. As Shiba, the Prime Minister, saying he is deeply concerned over the consistency of US tariffs with the WTO. The WTO has been firmly sidelined, but all of this action, of course. Shiba saying he will not hesitate to talk directly with Trump if necessary. US policies will have significant impact on global trade, saying he is very disappointed over the tariff measures. To the European Union right now, the EU vowing to retaliate. Japan has not done that yet, but the EU is vowing that countermeasure and those, of course, retaliatory steps after President Trump imposed a 20% tariff on imports from the bloc, America's largest trading partner. The European Commission President says the measure is a major blow to the world economy.
We have always been ready to negotiate with the United States to remove the remaining barriers to transatlantic trade. At the same time, we are prepared to respond. We are already finalizing the first package of countermeasures in response to tariffs on steel. And we're now preparing for further countermeasures to protect our interests and our businesses if negotiations fail.
Oliver Crook is outside the European Commission headquarters in Brussels. Ollie, walk us through the likely EU response. What have we been hearing and what has Europe got up its sleeve to respond to a 20% tariff?
The key line there, Tom, from Ursula von der Leyen is if negotiations fail. The EU does not want to take on the United States in a trade fight, in a tariff war. What they would like to see is a negotiated resolution to this issue with the United States. We should say, Tom, that that 20% level is close to the worst-case scenario that the EU policymakers were anticipating. They were anticipating somewhere in the ballpark of 10 to 25%. It came out at that sort of 20% level, so very, very elevated. The issue for the European Commission in trying to resolve this issue with the Trump administration is that there are not 20% worth of trade barriers in the form of tariffs between the EU and the United States. What they will probably now need to do is to look at the non-monetary, so-called, this is what Trump kept talking about, non-monetary trade barriers that exist between the EU and the United States in order to sate the Trump administration. And we should say, Tom, this is all happening in a very sort of important context because in the next couple of hours, we will have Marco Rubio, the U.S. Secretary of State, landing here in Brussels, not to talk about trade, but to talk to foreign ministers of NATO. And in that sort of context, European policymakers need to keep the Trump administration on side on the issue of European defense, on the issue of getting a sort of resolution in Ukraine. So all of these things begin to bleed into one another when these sort of negotiations take place. And so for the Europeans, it's going to take a little bit of time. They're going to take some time to assess what the sort of situation is really. They're going to have trade ministers meeting at the beginning part of next week before we get any sort of strong response from the EU. But we should say, Tom, actually, the way in which this could impact the EU the most is not necessarily. I mean, obviously, it's huge to have a barrier between the U.S. and the EU, but it is the outflow, the extra demand, the extra sort of supply coming from China, potentially pouring into the EU market. That is going to be front and center for these policymakers to deal with.
That's a crucial dynamic to watch, isn't it? Bloomberg's Oliver Crook on the ground for us, of course, in Brussels with the European response. Thank you. We will, of course, be continuing the conversation on tariffs throughout the show. Our guests include the president of the German Association of the Auto Industry. Those auto 25% tariffs are now in place. And Ireland's Minister of State in the Foreign Affairs Department. Crucial conversations coming up. Stay with us. This is Bloomberg.
case you missed it, on Bloomberg Open Interest.
Finding some sense in these crazy markets.
I hope they turn around, though. You know, because
Doesn't
my
everybody
401k, I'm looking at my 401, my retirement, and I'm thinking, God,
Yeah,
how many more decades do I have to work?
Your retirement account. I cannot say that enough. Set it and
You need
forget
to
it.
find a new target date.
I need to find maybe a new future. I'll be standing next to Paul Sweeney as a greeter at Walmart, you know, in our 70s. And
Don't miss Open Interest live weekdays.
Okay, for more market reaction to Trump's tariffs, let's bring in Tatiana Grail-Castro, co-head of public markets at Muzinich & Co. Tatiana, good morning. Thank you for joining us. What is the medium to long-term market impact of these global Trump tariffs?
Well, this was a profound announcement yesterday, that's for sure. So, and that is really an announcement that is asking for a response. And I think this is why the market is reacting how it is, because this is only the opening salvo. With regards to countermeasures and with regards to European countermeasures, I think they will be more focused on protecting Europe from potential floodings of markets of excess goods that could come to the market. So I think they will be very much focused, or should be very much focused on those countermeasures. With regards to appeasing the US on agricultural goods, I think that's very difficult because the consumer, there would be an outcry across Europe if those goods came to market, given the GMO, given the way the growth hormones and all those things that Europe doesn't allow and consumers that don't want. So I think it's difficult to appease, because Trump clearly talked about poultry in particular, and we had this in the UK, for instance, with the chlorine chicken and the outcry that we had.
Yeah.
I think there's difficulty to lower some of those non-tariff barriers. With regards to the resolve and the industrial policy, we have said that for the last few weeks, there is a shift in industrial policy by the US, and you can see that how the equity market has responded in the US, because clearly lots of US companies are affected by those tariffs as they're importing from abroad. That's just the point, right? That they shouldn't be importing all those goods from abroad. They should bring production back home. So there will be a near-term impact on that. So that's the first response. But at the same time, the second, and it has already been announced, planned tax cuts, all those things. So, and the European response, the Chinese response with regards to consumer stimulus, European response probably with regards to structural reform, and as von der Leyen said, really coming together as a unit. So all those things are actually positive for the individual regions. And in that regard, we actually think that the equity market so far, the response has been quite muted. Is this going to be all of it? We'll have to see what the response and counter response is.
Tatiana, does the bond bull market then have further to run? And if so, where do you want to be positioned?
So we have been positioning for the last few days, really reducing our credit exposure. So we think that there could be further spread widening. There's been some spread widening, but really very marginal. And so depending on how this shakes up, but clearly there will be a slowdown in growth. So that means we have reduced our credit risk, and we prefer all-in US rates. So we think that will be the safe haven with regards to fixed income. So we've been extending duration in the US. We are more cautious on European rates, and that is because of the growth stimulus we are expecting out of Europe, which will be probably more quickly announced than what we hear from potential tax cuts in the US.
Do central banks ride to the rescue?
We expect the ECB to cut in April again, and then we'll have to see what Powell says clearly on Friday with regards to the overall impact. And there is really, we are on the knife's edge with regards to, is the growth impact overriding? And that clearly then the Fed would respond to that, or is the inflation impact overriding? And I think we really have to listen what the Fed is saying, and that we'll probably get a better idea in the next few days.
Okay, Tatiana Groh-Castro, Public Markets Co-Head at Muzinich & Co. Thank you. With reducing exposure to credit and US Treasury still the safe haven play. Tatiana with the insights and the market reaction, of course, on a momentous day for global trade. Coming up, as President Trump's 25% tariff on US auto imports took effect shortly after midnight in Washington, we get reaction.
ओके गाइस, बैंक निफ्टी का ध्यान रखना, बैंक निफ्टी रेजिस्टेंस पर है, ठीक है। फ्यूचर यहाँ से एक सेलिंग है बैंक निफ्टी में जो थोड़ी देर पहले बताई थी। बाकी एसएल 51,920 का रखना, उससे बड़ा एसएल मत लेना, इनफ है। इट इज़ अ सेलिंग ट्रेड इन बैंक निफ्टी फ्रॉम 51,730 के अप्रॉक्सीमेटली, लगभग 180 पॉइंट 160 पॉइंट के समथिंग एसएल बन रहा है, विच इज़ अराउंड 51,920 का, उससे बड़ा एसएल नहीं। बाकी टारगेट डे लो का ही रखते हैं फिलहाल के लिए, बीच में कोई और नया लेवल बनेगा तो देख लेंगे। इससे बड़ा एसएल मत लेना, ये फ्यूचर चार्ट की मैं बात कर रहा हूँ। देखते हैं इस ट्रेड में क्या होता है अब। आपका 51,425 के अराउंड है। 51,425 के अराउंड पहला टारगेट, बाकी उसके नीचे सस्टेन करेगा तो फिर डेलो का देखेंगे। नहीं करता है उसके नीचे सस्टेन तो फिर वी विल सी दैट, बिकॉज दैट विल बी द लेवल, फर्स्ट लेवल 100 पॉइंट। बाकी बैंक निफ्टी में ठीक है, क्रूड ऑयल में पहले बात कर लें। नीचे ना एक बाइंग का ट्रेड वापस करते हैं। वैसे तो मॉर्निंग पे वो बड़ी विक बना के ले चुका है सपोर्ट, बट अभी भी इंटैक्ट है सपोर्ट, तो थोड़ा सा स्टिल मानेंगे उसको सपोर्ट, क्योंकि कैंडल क्लोज नहीं हुई है, विक ही बनाई है, तो इट इज स्टिल सपोर्ट। वैसे तो बड़ी विक बना के जो ये ऊपर गया है, लिक्विडिटी ले ली है, बची होगी नहीं बची होगी कह नहीं सकते, बट या एक सिंगल कैंडल से थोड़ा सा हम आइडिया लगा सकते हैं कि लिक्विडिटी थोड़ी बहुत तो पेंडिंग रहेगी, सारी की सारी जानी नहीं चाहिए। मॉर्निंग पे वो फर्स्ट कैंडल ही कल का ही सपोर्ट है, फर्स्ट कैंडल ही बड़ी बना दी थी, तो एग्जैक्टली सपोर्ट तो ले लिया है। बहुत बाइंग यहाँ से प्लान फिर भी रखेंगे। अगर देखा जाए मार्केट ओपन हुआ, नीचे आया है, सपोर्ट लिया, सपोर्ट लेके ऑलरेडी 160 पॉइंट ऊपर जा चुका है प्राइस, बट स्टिल सपोर्ट इज इंटैक्ट, ब्रेकडाउन हुआ नहीं है, कैंडल क्लोज हुई नहीं है। में रेजिस्टेंस है बताया अभी 51,750 से सेल कर सकते हो, 51,920 का एसएल, उससे बड़ा एसएल लेना मत। नीचे टारगेट 51,425 के अराउंड पहला, अगर उसके नीचे सस्टेन करेगा तो फिर डे लो, करेगा तो नहीं उसके नीचे सस्टेन फिर भी। कि अभी 12:30 पे लंदन सेशन ओपन हो जाएगा तो उसका मोमेंटम थोड़ा बहुत होना चाहिए। नेचुरल गैस फोरकास्ट क्या है इन्वेंट्री का? लास्ट टाइम 37 बुलियन थी, अब की बार 27 बुलियन है। लास्ट वीक के कंपैरिजन में कम एक्सपेक्ट कर रहे हैं, तो फोरकास्ट के अकॉर्डिंग कम आता है, तो इट इज़ पॉजिटिव फॉर नेचुरल गैस प्राइस। तो नेचुरल गैस के प्राइस के लिए बुलिश ही है। फोरकास्ट तो देखते हैं एग्जैक्ट डेटा कितना आता है। क्या करें, बाई कर सकते हो। ऑलरेडी मॉर्निंग पे बाई किया था, तो हाफ प्रॉफिट बुक करके ट्रेल कर सकते हो। डेली छोटे छोटे ट्रेड बना के चार्ट पे लगाएं, चार्ट पे लगा दिया, लेवल लगा देता हूँ मैं, लेवल पे ले लिया करो। फिलहाल के लिए क्रूड ऑयल पे यहाँ से बाइंग कर सकते हो, ठीक है। बैंक निफ्टी में रेजिस्टेंस पर ही है अगर सेल करना चाहो। बैंक निफ्टी फ्यूचर में 51,730 के 750 के अराउंड रेजिस्टेंस जोन है फॉर द एसएल ऑफ 51,920, थोड़ा बड़ा एसएल है लगभग 180-90 पॉइंट का फ्यूचर में। बाकी नीचे एक टारगेट 51,425 430 के अराउंड, तभी लेना जब इतना एसएल ले सकते हो, ठीक है। फ्यूचर में एसएल बता रहा हूँ मैं। बाकी कल रेजिस्टेंस पे था क्रूड ऑयल, वहां से सेलिंग ही आ गई थी। फॉरेक्स में एमसीएक्स में गैप डाउन ओपन हुआ, ऊपर अगर निकलता है प्राइस अपसाइड की ओर तो हो सकता है जो कल का वो बीच नीचे वाला सपोर्ट था उसका रीटेस्ट करे, क्योंकि रेजिस्टेंस तो बहुत ऊपर है कल के हाई के अराउंड। भी करते रहो गाइस, जिन लोगों ने लाइक नहीं किया स्ट्रीम को, डोंट फॉरगेट टू लाइक द स्ट्रीम। नेचुरल गैस को भी देखोगे तो पर क्रूड ऑयल में देखो कल का जो बीच वाला नीचे वाला सपोर्ट था वो ब्रेक डाउन हुआ है गैप डाउन में, तो एज अ रीटेस्ट काम कर सकता है। बाकी मेजर रेजिस्टेंस कल का हाई। अभी तो मॉर्निंग पे वॉल्यूम ही कम है, बैंक निफ्टी में ही वॉल्यूम है, बैंक निफ्टी 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 में तो कॉमोडिटी में अभी वॉल्यूम नहीं रहेगा इतना शायद, 12:30 मोस्ट प्रॉब्ली उसके बाद। कि नेचुरल गैस भी ठीक ठाक ही मूव कर रहा है अभी भी। ठीक है, नेचुरल गैस में भी देखो एक ट्रेड यहाँ पर प्लान करते हैं नेचुरल गैस में। 11:25 11:30 ऑलमोस्ट हो ही गया है, 1 घंटा और है लंदन सेशन में, उसके बाद शायद नेचुरल गैस थोड़ा मूव और करे। India expect exemption from Trump tariff. Believe duty is not a setback.
Range Vietnam around the 50, and then importantly also for certain business models, but also perhaps people's shopping habits, the de minimis rules, well, they're just gone. The de minimis exemption for small packages, they seem to have gone. What does that do to the business models of the likes of Shein and Temu?
Pick up a pair of Nike training shoes. I'm sure you've got a pair sitting around right now. Look inside and see where they're made. That's going to be the effect. These kind of companies have huge footprints in not just China, but across Asia. And some of these economies are going to be really affected by this, and the trading lines that come out of them are going to be really affected by this. The US is drawing a line around itself. This is the thing. It's basically going back to isolationism. This is a closed book economy that we're talking about here.
So this is where, if we're talking about somewhere to find the inflationary pressures, and we're not seeing it in the energy infrastructure, and maybe not semis, if these are the carve-outs that are starting to come out, and we're not necessarily seeing it in as much of the construction materials like lumber that you had mentioned, maybe we're going to see it in textiles. Maybe that's the inflation component, and that's where it comes from.
And interesting, we'll go on to talk about Europe.
क्रूड ऑयल कहाँ जा सकता है? कहीं नहीं जाएगा सर क्रूड ऑयल. क्रूड ऑयल यहीं रहने वाला है, कहीं नहीं जाने वाला. आता है तो वापस बाई कर सकते हो. ऊपर आया तो ऊपर रेजिस्टेंस है, वहां से सेल कर देंगे. आगे देखते हैं इंडिया पे कुछ एग्जम्पशन मिलता है क्या टैरिफ का. ओके गाइस, ऑलमोस्ट 40 मिनट हैं न्यूयॉर्क सेशन की ओपनिंग पर, माफ करना लंदन सेशन की ओपनिंग पर. Today I sold crude oil from the top in Forex, but first upward spike and my SL was gone, then it came down. That time market moves based on the news actually. Well, again today, no issue. हाँ नेचुरल गैस भी मैंने बताया, इसमें भी एक ट्रेड यहाँ पर बनेगा। क्रूड ऑयल में तो वापस बाई कर सकते हैं नीचे से और ऊपर से वापस सेल कर सकते हैं, दोनों ही लेवल हैं बाइंग सेलिंग के। और कोई नया लेवल अभी बना नहीं है बीच में। मॉर्निंग पर ऑलरेडी एक स्पाइक ले चुका है सपोर्ट से, अभी भी बाई किया जा सकता है फिर भी। जहाँ तक बात है नेचुरल गैस की, इन्वेंट्री है वैसे तो शाम को तो हो सकता है थोड़ा साइडवेज रहे, गैप डाउन हुआ है, कल एक रेजिस्टेंस पे था। प्लान क्या कर सकते हैं, देखो नीचे अगर आता है डाउन साइड पे सपोर्ट के अराउंड, अदरवाइज सपोर्ट तो मुझे लगता है अब होल्ड होगा नहीं वैसे, कल काफ़ी सपोर्ट लेके गया है वहाँ पर। नेचुरल गैस की मैं बात कर रहा हूँ, अपर लेवल पे फिर भी रेजिस्टेंस ठीक ही है। गैप डाउन ओपन हुआ है उसके बाद अभी अभी भी 1.27% डाउन दिखा रहा है। फाइन, नो इशू। तो ऊपर आता है तो मेरे अकॉर्डिंग ऊपर वाला रेजिस्टेंस फिर भी बेटर रहेगा सेल करने के लिए नेचुरल गैस में। क्योंकि नीचे का सपोर्ट टेस्ट हो गया तो मेरे अकॉर्डिंग वो तो ब्रेक हो जाना चाहिए ऊपर से अगर सेलिंग आती है। नेचुरल गैस में एक सेलिंग का प्लान रखो यहाँ पे। बाकी डेटा देख लेना, आज इम्पोर्टेंट डेटा है। नीचे जहाँ तक बात करें सपोर्ट की, तो एक तो कल का लो समथिंग टारगेट रख सकते हैं। बाकी देखेंगे वहाँ पर अगर होल्ड करता है तो, नहीं करता है तो मोस्ट प्रॉब्ली नहीं करना चाहिए लॉजिकली तो, क्योंकि कल डीप लेवल से सपोर्ट लेके आया है प्राइस। थोड़ा बहुत रुकेगा 339 340, तो उसको एक लेवल कंसिडर कर लेते हैं। देन अगर ब्रेक डाउन ही हो जाता है तो फिर चल गैस में एक सेलिंग का प्लान यहाँ से नीचे ब्लू कलर की लाइन के आसपास एक टारगेट रखते हैं। अगर ये होल्ड कर गया तो वेल एंड गुड, इतना ही रहेगा टारगेट। नहीं करता है तो फिर एक नेक्स्ट जो टारगेट रहेगा वो थोड़ा बड़ा रहेगा उस केस में। फिर ये फाइनल टारगेट रहेगा अगर ये ब्लू कलर की लाइन के नीचे सस्टेन करता है 15 मिनट में। ओपेक मीट टुडे, ओपेक मीट, यस ओपेक जेएमसी की मीटिंग है मोस्ट प्रॉब्ली 3 साढ़े 3 इंडियन टाइम के अकॉर्डिंग 4 पीएम के अराउंड शायद उनका आउटकम आता है जहाँ तक मुझे पता है। बाकी पता नहीं, देखते हैं। मोस्ट प्रॉब्ली वही कहेंगे प्रोडक्शन धीरे धीरे करके बढ़ाने वाले होंगे शायद, या कट करने वाले होंगे जो लास्ट स्टेटमेंट आया था। तो ऑल डे है, देखते हैं आउटकम किस समय निकल के आता है ओपेक जेएमसी मीटिंग का। क्रूड ऑयल में पोजीशन नहीं ले, नहीं नहीं बना सकते हो, ऐसा कुछ नहीं है। एसएल के साथ एसएल रखना, उसमें कोई इशू नहीं है। ऐसा कोई इशू नहीं है, ठीक है। भी स्टेटमेंट आता है ओपेक का, स्टेटमेंट बट अभी नहीं आएगा, और वो 333 के आसपास ही मोस्टली देखा गया है जब वो आउटकम निकालते हैं, प्रेस रिलीज करते हैं। तो एसएल के साथ बाई सेल करो, कोई इशू नहीं है। बाकी अगर थोड़ा इशू आ रहा है तो फिर ऑप्शन सेलिंग में जा सकते हो या फिर मिनी ट्राई कर सकते हो। फॉरेक्स में कर रहे हो तो क्वांटिटी लॉट साइज छोटा रख सकते हैं। ये तीन चीज़ें की जा सकती हैं उस केस में। ये 5900 पे जाए, फिर ओपेक स्टेटमेंट पे ऊपर फट जाए 6150, सीधा 200 पॉइंट। हाँ, ज़्यादा देर कंसोलिडेशन नहीं करना चाहिए प्राइस को, अगर आना है तो जल्दी मूव होना चाहिए क्रूड में। लाइक रुकने नहीं चाहिए गाइस, लाइक भी करो सभी लोग। बैंक निफ्टी भी रुक गया बिल्कुल रेजिस्टेंस एरिया पे, ना मोमेंटम अपसाइड ना डाउनसाइड है, रेजिस्टेंस पर ही टिल 51,930। लेट्स सी साइडवेज जाता है या फिर थोड़ा सेल ऑफ आता है इसमें।
Tariffs in a century. Let's bring in an expert who I'm sure is still wrapping his head around this as well. Bloomberg's Brendan Murray, who leads our trade coverage at Bloomberg. Brendan, what stood out to you here? There's a lot of math, there's a lot of numbers. Just walk us through the top lines.
Yeah, so in typical Donald Trump fashion, we didn't get a universal tariff number that applies to everyone, a nice clean round number that we could all write about this morning. We got the 10% baseline, and then we got 50 or 60 other numbers for various countries, depending on their perceived the U.S. perceived trade grievances with those countries. And so, yeah, so we're still pouring through the numbers, the formulas with which they use to come at these numbers. And if you're sitting in a capital of a big U.S. trading partner right now, you're trying to unpack this and to get to a point where you can say, well, what are we going to offer? How are we going to respond? Are we going to retaliate? Are we going to negotiate? It still leaves a large cloud of uncertainty over the outlook.
Does the US want negotiation on the back of this? Scott Besson was implying last night that he just wants things to settle down and he doesn't want to have talks immediately. He wants things to bed in a little bit before the talks start. But he also said, if you respond, it'll get worse. So I don't know how you negotiate. If I come to you and say, I want to negotiate with you, but if you don't negotiate with me, I'm going to make things worse. He's saying, I don't know how that conversation happens. What does the US want in terms of these negotiations?
Yeah, I think what that reflects is there are two pillars of Trump's strategy here. One is the let's try to rebalance the world economy back in the U.S.'s favor. And the other one is let's try to extract some concessions from trading partners that we've had these long grievances with. The other pillar is, of course, the revenue that they're trying to generate. So, and they're going to need that revenue to pay for tax cuts that they're trying to get through Congress. So there's definitely, there's the Scott Bessons among the Trump advisors who think that, there is some wiggle room for countries, but then there are the Peter Navarros and the Howard Lutnicks who say this is about, bringing manufacturing jobs back to the U.S. I mean, the whole spectacle yesterday had this almost like MAGA rally vibe to it. It was quite an hour and 15 minutes.
It was. In terms of the countermeasures that we're seeing being announced or at least talked about, because they are not being announced or implemented, and maybe that's the important takeaway. Yeah. But here in Europe, then, we've heard from Ursula von der Leyen. She says preparing countermeasures if talks fail. And Guy's already asked you about, where the talks go. But what are we expecting to see then in the short term from Europe?
So we'll have to see how this plays out. But it sounded to us that Europe wants to negotiate first rather than retaliate. This was the world's most widely telegraphed barrage of trade tariffs, and if Europe wanted to respond immediately, it certainly had all the time in the world to prepare for that. So, and we haven't seen that right out of the gate here this morning. We'll see how it plays out, but definitely the rhetorical war of words is going on, and we'll see if Europe responds quickly or not.
Okay, Brendan, thank you very much. Bloomberg's global trade editor, Brendan Murray, with the latest on the trade news flow, and there has been a lot of it. How does all of this play out for the EU? Let's talk to Maria de Mertzis, Economy, Strategy and Finance Centre Europe leader at the Conference Board. Maria, great to have your insights on the show once again. So we were all gripped by listening to Ursula von der Leyen this morning saying, yes, they're preparing countermeasures, but then crucially saying, if talks fail. So how are you expecting Europe to respond in the short term here?
Well, it's step by step. The issue of negotiation will always be on the table because the EU is desperately trying to avoid an escalation. But they are preparing. We have already seen the 28 billion announcement of tariffs that are already in the shelf. They're going to take them out of the shelf and implement them as soon as they can. But that's not enough. If 20% is the tariff coming from the US, 28 billion worth of US exports simply is not enough. It's about a tenth of what is at stake here. I think the thing to watch is the anti-coercion instrument. This is in Brussels talk called the bazooka, and it will be an indication that we are in a full-fledged trade war. But they are seriously and slowly preparing for it. They had already announced that any tariffs coming from the US will be unlawful. That means illegal. In other words, the EU is arguing that the US is trying to coerce the EU into doing something they don't want to do that. And that, of course, goes well beyond tariffs. It will be quantitative issues, anything from restricted investments, prohibiting the function of digital firms, financial firms coming from foreign countries, participating in procurement, suspending property rights. All of these things are possible, and they can happen, but they will happen gradually because they are still trying to negotiate.
Yes, Maria, this sounds like a slow burn then. If they're going to go down the ACI route, the bazooka as you call it, I know that requires some consultation and lots of players to sort of fall into line, which sounds like a sort of longer game than just a very immediate response. Can you link the use of the ACI with financial services? If Europe thinks, well, we've got to bring financial services or services broadly into the equation here, services broadly. How can they do that using the ACI?
They can by effectively suspending the operation of some of the financial services and the digital services. This is what they're looking to do. The one thing to say here is that the EU is an importer of this. In net terms, we are importing from the US when it comes to services, and that paradoxically gives us a lever because that is effectively what can hurt the US, because we actually have a trade deficit when it comes to services with the US. Economic factors and economic cost, in my view, is the only thing that will bring the US administration around the table, and this is, I think, what the European Commission is trying to do.
Maria, you mentioned that German kind of fiscal bazooka as well. Do you think that 500 billion euros invested over, I believe, 10 years' time is enough to at least maybe not completely offset the impact of these tariffs, but do it in part?
Actually, it's bigger than that. If you take both the rearmament and infrastructure investments, they can go up to 1 trillion. So it really is a very big amount just coming from Germany. And I think the answer is yes. Even if it hasn't happened yet, for the moment it's just a promise, you really see macroeconomic factors picking up, particularly in Germany, in response to that. So provided the new German government makes the promise reality, then I think, yes, we will see a fiscal stimulus that may actually eliminate some of the costs coming from trade.
So that's the fiscal stimulus of Europe. Let's talk about the fiscal stimulus of the United States, because as part of this kind of tariff agenda, Donald Trump, and he talked about it in his comments last night as well, has talked about tax cuts, minimizing the deficit. He quoted $6 trillion of investments domestically and coming in from abroad. If that is an economic plan that ultimately works and is able to pull the United States out of any sort of inflationary or growth hit that it might take, does that bleed into Europe? In other words, if the United States is able to attract that investment and benefit from tax cuts, does Europe feel the effects of that as well?
Yes, I think that, of course, is the big bet that the US government is trying. And there is a fear that EU firms will actually respond to that and migrate to the US to take advantage of that. That remains a fear. And it is important for the EU to try and contain that by keeping European money inside Europe, because we do have huge investment gaps, so we absolutely need that money to stay. It will actually depend a lot on the effect of these tariffs. And also I remind you that for these investments to migrate, you need 3 to 10 years. So it's not something that can happen this year or indeed the next year. It will happen well beyond the Trump administration.
Maria, given that, where do you think the biggest economic hit is going to fall as a result of what was announced last night? I look at what is happening in the currency markets, and we talked about this yesterday. The euro is rallying. That would seem to imply financial markets expect actually the biggest hit to come in the United States, not within the EU. Is that calculation correct?
I think so, but it also takes into account the fiscal stimulus that the European Union is promising to make. It's not just the tariffs. I think that possibly the fiscal stimulus is more important in this balance that you see, rebalancing of the stock markets between the two continents. This is the big promise here. Can we make do of the promise that we have put on the table on rearmament and on infrastructure investment? Because that could make a big difference.
The UK has 10%. How does that complicate matters?
I don't think it does, actually. Well, it still has 10%. It's quite a substantive number. It's not as big as the rest of the world, but it still will affect the UK trade.
Do you think it'll affect UK trade with the EU? Do you think it'll complicate talks between the EU and the UK? The fact that we now see a different set of scenarios being put in front of the UK versus the EU?
Not at all. I think the defence discussions that are happening now with the UK, it basically means that the relationship is being normalised again.
Maria, can I ask you about the VAT line? Clearly, President Trump is not a fan of VAT regimes. They exist in a lot of the rest of the world. But part of his disappointment with them, if you boil it down, seems to be that sales tax in the United States in different states just tends to be much lower than VAT rates are around the world. And he sees VAT as an incentive to export out of Europe and elsewhere. Is Europe going to do anything on VAT? Is there anything Europe can do without reducing its fiscal take too substantially?
No, this is incorrect. The VAT is a neutral tax. It's a consumer tax. The consumer pays the VAT for all goods that are consumed domestically in the EU, irrespective of where they come from. So the fact that the VAT gives an unfair advantage just simply is not correct. It is the tariffs that are non-neutral and affect, of course, importers. So the VAT discussion is besides the point. We're mixing apples and oranges here. I think the issue is about corporate taxation. This is this is I think what it boils down to, and there is no difference.
No, I understand. I understand there's plenty of people who say, look, there's no discrimination within Europe around VAT. That's well understood. But the Trump administration has a different view, and when they look at the impact of exports from Europe into the United States. They see them selling cars at different prices. They blame VAT. Is there anything that Europe can do, anything they would be minded to offer to the United States on VAT? Any tweaks?
I don't think so. I think that is the VAT plays no role in this discussion. So I think we need to take it out of the equation. So there is no reason for the EU to respond to something that makes no sense. The corporate rates is what matters. But actually, if you look at corporate rates, they are on average exactly the same. And the main exporters from the EU to the US actually have corporate tax rates that are larger than those in the US. So even that is no disadvantage. So I think this conversation is just throwing dust into the arguments. There is nothing that the EU can do there.
Maria, we're already seeing some of the global banks and some of the Wall Street banks come out with calls when it comes to monetary policy as well. I asked you earlier about the read-through from the fiscal in terms of the U.S. into Europe. Let's talk about the monetary. Morgan Stanley coming out and saying that the Fed will be on hold till March of 2026 off the back of this announcement. Guy was talking about inflation calls of something like 5%. How does that influence Europe? Can Europe, to what extent does Europe import inflation from the United States?
It does, worth equal to the amount that it imports for the US, which is about between 600 and 700 billion annually. So if that goes up because of tariffs, so the prices of those imports go up because of tariffs, then of course we will see an impact. For the moment, we don't see it in the forecast, and actually all the inflation forecasts that we have seen do not have any, if at least no significant increase in prices. But that, of course, is subject to huge uncertainties. The core inflation, which is, of course, what will be affected by those tariffs, can go up to 2.7%. We are forecasting 2.5%, but we see there is a spread between the forecasters. So I think we need to monitor that very carefully. And, of course, if it does come, then the ECB will have to take this into consideration. So for the moment, we are not changing the amount of changes in the inflation interest rates and inflation and interest rate changes we see, but we acknowledge that this is subject to huge uncertainty.
Yeah, as is pretty much everything, it seems, at the moment. Maria, great to catch up. Thanks for the time. Thanks for the analysis. We really appreciate it this morning. Maria Demetzis, Economy, Strategy and Finance Centre Europe leader at the Conference Board. Coming up, President Trump's sweeping tariffs are set to rewire global trade. We're going to look at how sectors including shipping, energy, luxury, how are they going to be affected? Take a look at what is happening with Puma and Adidas this morning. That's going to be an interesting trade. All of that coming up next. Futures are pointing negative. This is Bloomberg.
There had been offers before to take over Greyhound, but then in the midst of the pandemic, 2.5 years ago, we had this fantastic opportunity to buy the brand and the network. When we took on Greyhound onto the Flix tech platform for network management, revenue management, we saw the highest unit economics in more than 100 years of Greyhound history.
My vision is to transform long-distance bus travel in the United States and make it one of the top considerations for anyone planning a long-haul journey.
CEO Kai Boyson imagines even more potential if state and local governments recognize the need to support long-distance bus travel with integrated infrastructure.
We need to think about the infrastructure in the United States holistically. and think about the transportation system as one integrated system. And intercity bus needs to be an integral part of that system. One should be able to connect from one mode of transport to another seamlessly, easily. We have great success models in the United States. For example, Los Angeles Union Station, Boston South Station, or New York Port Authority bus terminal, or Washington, D.C. Union Station.
Kai and the team, they are doing a fantastic job. They have really improved the product, they have improved technology, they have really made the production more efficient, that at the moment it's also a profitably growing business.
In case you missed it, on Bloomberg Surveillance.
I worry less about AI taking my job. I worry more about someone who uses AI really well taking my job. AI is still not going to have the human instinct and the judgment that you're going to need to have. You're still going to need to do oversight. There's a human in the loop, but now that developer is going to have a companion. And so what AI will allow us to do is not just go do things that humans don't do as well, but actually do things that humans don't have the time to get done.
Don't miss Bloomberg Surveillance live every weekday.
Welcome back. Just over 10 minutes until the start of European equity trading. The first time that European equity markets will get to react to what we heard from the Rose Garden, from the White House, from President Trump and his administration around tariffs and trade yesterday. We are expecting to see negativity. That goes without saying. We see European equity markets down 1%, maybe even 2% today. Let's talk to Ben Ram, Bloomberg Markets Live cross-asset strategist. Ben, talk to me about European assets and the ECB's reaction function here, because yes, we're seeing European stocks weaker. Not as much as US futures, though. We're going to see European stocks weaker, but not as much as US futures are suggesting for US stocks. The euro, on the other hand, is at a 6-month high. I wonder what message the market is giving us about how the ECB is going to respond here.
Morning, Anna. I think that the markets are a bit confused this morning, if you ask me, because if you look at the euro, as you mentioned, it's rallying big. It's rallying the most in almost a month. But if you look at the German yields, they're actually going down, and going down quite significantly. And if you look at the overnight index swaps, they're pricing in many more rate cuts to come from the ECB. The markets are thinking that, look, come April 17th, when the ECB meets next, they're going to have to cut rates because of what the tariffs mean for Europe's growth. Now, the ECB already expects growth to be at less than 1% in 2025. And with the tariffs in position, it is likely that the ECB will have to revise its growth guidance lower. Now, that growth revisions are unlikely to come in April. They are likely in June. So therefore, I don't think that the ECB is going to be in a hurry to cut rates, even though the markets think so. The ECB, the European Commission president has told us that, look, the group is going to meet next week, early next week, and then the ECB goes into a quiet period, and it is unlikely that the ECB will have the reaction time to kind of tweak their forecast in time for the April 17th review. So I think that in the meanwhile, German bonds are likely to keep rallying nevertheless. But I think that the markets are fundamentally wrong to think that the ECB is going to cut rates well below 2%. I don't think that's happening, and these tariffs are meant to be negotiated, so let's see.
Ben, gold's down this morning. Has it peaked?
No, I don't think it's peaked, even though it's a very overbought asset guy. I mean, we have seen a humongous rally since the end of 2022. It's heavily overbought. There's no question about it. But if you look at the history of gold, whether it is 1979 or during the global financial crisis, some of its best moments in history have come when the economy has gone into a tailspin together with a crisis. And now it seems like we are on the cusp of another global economic crisis because of the tariffs and the replumbing of global trade. And therefore, I think that gold is going to rally further. I think that, it could go easily to $3,500 an ounce, and it has got momentum behind it. And also the central banks, if you look at the reaction function, they are going to kind of load up on gold reserves, because where are they going to go? The US dollar is they're not too sure about how the US dollar is going to fare in this trade, paradigm where tariffs are being redrawn. So I think that the safest haven, the cleanest haven for the markets is gold at the moment, even though it's overbought.
All right, Ben Rom, our Bloomberg Markets Live cross-asset strategist, walking us through some of the currency plays there. He was talking about the dollar. Just point out that we're at 12.58 on the Bloomberg Dollar Index. 12.55 was the day after the U.S. election. So really seeing some major weakness in the currency picture. Let's go from the macro to the micro and get our stocks to watch with Joe Easton. Joe.
Morning, Critty. So a lot of sectors in focus today, given the tariff announcement yesterday, but the ones that caught my eye in terms of the market action we've seen overnight. I'm going to start with energy because this big drop in the crude prices overnight, down 2.7%. On the Brent price, that was on track for its biggest decline since around October, before coming up very slightly. But this is surely going to feed into the energy stocks here in Europe today. So we're going to keep an eye on Shell, BP, Total Energies, Eni, and also Repsol over in Spain. All the big ones that have had pretty decent gains for the year. So potentially there's going to be some downside given those double-digit gains across that sector year to date so far. Then in terms of shipping, the price of Costco over in Asia was catching my eye. That one was down 7% because, of course, with increased tariffs, the demand for goods moving in freight shipping is going to decline surely, and therefore we are seeing weakness in the Asian shippers, and that is likely to feed through into Europe today. So I'm going to be watching Maersk, Hapag-Lloyd, DSV, Kuehne + Nagel, all of the big companies. Not been a great start to the year for those. Potentially some of that negativity priced in, but it could potentially be weaker. Then in terms of luxury, Prada, that one was hit hard in Hong Kong. We were down around 5% on that one, so I would expect that to feed through into likes of LVMH, potentially Hermes. Bit of a mixed year for those, but potentially luxury is going to be hit today.
Joe, thank you very much. Our equities reporter, Joe Easton. So we brace for European markets to respond to the tariffs. US futures are down more than European futures, but we are waiting to see Euro Stoxx 50 futures suggest down 2%. We'll be back with the market open next. This is Bloomberg.
Literacy is a big problem in the United States. I think 14% of adults are functionally illiterate, which means they can't read past the 4th grade level. That's a large percentage of the population. Nothing the Library of Congress can do can completely solve that problem, but are you surprised at how many people still cannot read in this country, and how many people have another problem called illiteracy or illiteracy, right, which means they can read, but they don't choose to read?
It's a challenge with the digital age because people they're reading on tablets, so we do count that as reading. If you have an e-book, you're reading the book, and I've been often asked if I'm listening to a book, are you reading? Does that count? But there is a concern that the amount of reading, actual text that people are doing, is diminishing. And so how do you work with other organizations? So the Library of Congress connects to public libraries, school libraries, and we do joint programming with them.
Why do we actually have all these thousands of libraries anymore when people are often doing things digitally and they don't need to go to a physical place to get a book?
People are using public libraries as, and someone has said, as opportunity centers. And libraries are offering collections that are beyond books. So libraries are circulating and responding to communities in so many ways.
In case you missed it on Bloomberg Insight. When you talk about in this economy, can it get back to 8%, or is 8% a blip?
We are realistic in projecting a minimum achievable growth rate of 6.5%, which is the fastest rate among major economies.
The growth will only accelerate over a period of time. Last year we grew at 8.2%. This year's growth probably will be 6.6, 6.7%. But I think in the next 2 or 3 years, we will certainly get back to a much higher growth rate.
But the government has to keep focusing on growth, and if growth stalls, or by stall I mean stays at the 6% level, they need to do some more stimulus.
There is this recognition to build India for the next 5 years, 10 years and longer. And that's why if you look at the next set of investments that the government focuses on, these are also large employment driving sectors.
Don't miss the next Bloomberg Insight.
Thursday morning, good morning. I hope you've had your coffee because things are about to get very lively in Europe. This is the reaction in US futures last night. I've got a 2-day of US futures to what we got out of Donald Trump in the Rose Garden. Initially, we saw a bit of a spike higher. We thought it was only going to be 10%. Then the reality struck, and you can see the impact straight down for US futures, and we bump along the bottom. We're waiting for the next step. How does this all ultimately get priced in across assets remains to be seen. We're about to get early clues. I don't think it's the full picture, Critty, but the initial reaction, certainly in risk assets, pretty negative.
Pretty negative, but perhaps slightly better here in Europe, because I'm looking at almost a 3% decline in the U.S. futures, as you pointed out. But take a look at what Europe is doing. Eurostoxx 50 futures are only down 2%. Even look at the DAX, and it is down about the same margin. And I say only, Anna, with a giant grain of salt, because we don't know what happens in about 60 seconds' time. But it is still key to know that Europe not selling off to the same extent that the U.S. is.
Yeah, and the extent to which we end up seeing retaliatory measures from other parts of the world against the United States could still be the big unknown out here. Let's have a look at where we are on some individual sectors and stocks that could be really in focus today. I'll start with the top of the board. Energy, yes, we could see movement there. So even though some energy and commodity products have been exempted from some of these tariffs, we have seen through the Asia session that energy prices have been weaker. Oil prices are down, various basic commodities are down. So oil prices down by 2.9%. So we'll look for that to really cross pretty strongly into London and other markets. Shipping in focus, the likes of Hapag-Lloyd and Maersk. If we're not going to be sending stuff around the world quite so much, then is that going to have an impact on their businesses? We'll watch that. And Siemens doing a deal transatlantic. Is it a good time, or is it hard to price a transatlantic deal right now, Guy?
Yep. There's a lot of things to talk about this morning. Deal timing is probably one of them. But let's talk about the opening trade. Here we go. This could be one for the ages. Thursday the 3rd, European markets are opening. We are anticipating that they will open sharply lower, but as Anna's been pointing out, it could be a moderate move compared with what we see over in the United States, and that is what we are getting. The 600 is down by 0.8%. London is down by 1%. Remember, the UK only hit with 10% tariffs. The rest of the European Union hit by 20%. The IBEX is therefore down by 1.6%. A bigger reaction. The CAC opens down. The luxury stocks are certainly, I would expect, taking a hit this morning. That is down by over 2%. 2.2% is the drop that we are seeing on the CAC 40. I suspect we may have to wait a little while for Germany to get going this morning. Switzerland, remember, hit very hard overnight by this tariff story. We'll wait and see what happens with the SMI. How are the pharmaceutical stocks going to be affected by all of this? So we are down. The stock 600 is down by 1.3%, Critty, at the moment. The CAC is taking a bigger hit. The sector story is going to be interesting this morning.
It absolutely is. I'm already seeing some interesting individual movers, but let's start with the downside and what's driving this market lower. If you're looking for that cyclical exposure, that growth exposure, that's where you're getting hit the hardest. So I'll give you some examples here. The stock 600's biggest weight this morning is ASML. So that chip story, perhaps out of Asia, is going to be crucial. Of course, you know, Taiwan's chips has been exempted, but of course the supply chains that are sending into Japan, South Korea, and arguably even China as well is going to be having an effect on the likes of ASML. But then all the cyclicals in terms of things like commodities, in terms of things like the miners, that's where you see pain. Even some of the banks are taking a big hit. In the green, though, and I think this is interesting, utilities from a sector basis, I'm seeing plenty of pharmaceuticals, Anna, in the green this morning.
Yeah, absolutely. And some of those drinks and food companies also not doing too badly. So if you look at things on a percentage basis, Diageo and Danone, the best performers on the stock 600. Down at the bottom end of the scale, though, Guy, you'll be interested in this one. I'm seeing a lot of aviation and defence names. So Dassault Aviation down by 7%. We've got Airbus down by 5%. Keeps moving around. Can't quite pin it down, but 5% down on Airbus. So this is a sector that obviously has, well, not all of those names, but some of them have benefited from that defence, that big move into the European defence stocks. But we're seeing certainly that sector under pressure this morning.
It's going to be interesting to see how Airbus manages the tariff story. We talked about this yesterday, and just how intertwined the supply chain story is for the big aviation companies and how it's going to be affected. They do have a plant in Alabama. Will that insulate them to a certain extent? We'll just give you a breadth story, just to give you an idea of what is happening. At the moment, we have 73 stocks in Europe in the stock 600 that are higher. We have 470 stocks are lower. So the breadth is very negative, and it goes across a number of sectors. There are 55 stocks that are currently unchanged at the moment, but the breadth is negative. Europe is off its lows. The stock 600 is down by 1.53% this morning. But it is interesting to see once again that we are seeing a better picture. And I appreciate this is a relative trade. We are seeing a better picture emerging in Europe than we are seeing over in the United States in terms of what the futures are signaling there.
Absolutely, and still a little bit of a defensive trade based in there. If you're looking at some sort of like safety trade, the grids, the utilities, I'm looking at National Grid and moving higher, Nestle, Unilever, the consumer staples coming to your rescue. So there is this element of finding safety somewhere. Let's go back to kind of what the major reaction has been, of course, in the last 24 hours. Take a listen to what Bloomberg TV guests had to say.
It's the perfect entree to let's make a deal.
He's ran on this for the last 4 years, really, is that he needs to make sure that the other countries are paying what they deserve.
There was nothing truly consistent about this rollout. Each country truly is affected differently and to a higher degree than what I think many were factoring in.
I would advise none of the countries to panic. I wouldn't try to retaliate, because as long as you don't retaliate, this is the high end of the number.
I think it's going to be a very, very bumpy road, and we may well look back on this as sort of a knife edge of the economic prosperity of the United States for some time to come.
Joining us now, Karen Ward, Chief Market Strategist for EMEA over at JP Morgan Asset Management, joins us around the table. All right, Karen, we're seeing this massive sell-off. It feels like people are panicking, but we were all bracing for a bigger reaction. What are the markets telling you this morning?
Well, I think there's no doubt that what's been announced is on their larger end than what was expected. And I think as well, perhaps the consensus or hope was that there would be clear conditionality, which would, if you like, set the stage for how, as long as you do this, you won't be faced by this, maybe some staging, some further deadlines. Whereas I think what's clear is that the absolute numbers are higher. They're coming in faster, and there's not that sort of obvious conditionality which sets the stage for the deal. And therefore, pulling this back, it isn't quite so obvious how that process will happen. And I think it's just teaching us all a lot about what this administration's vision is, who they're speaking to in that US economy, and what they're willing to go through in the interim to get to that vision.
It's not a secret here that uncertainty is plaguing everybody, from equity investors to bond markets to currency investors as well. Even around the table, we're scratching our heads about what comes next. What do the markets need to rally from here?
I think a clear sign that we're going to change direction. And I think we are far from any point at which we will see that. I mean, we've just seen, as I said, that it's not as if there's a number of staging posts for how these numbers can be walked back. So I suspect over the next few days, the story is going to be about retaliation, how bad it's going to get. But maybe what we should, as we take a longer-term view on this, there are reasons to keep your chips on the table. And I think that they are, how if it is becoming increasingly damaging, if there are signs that that pain is perhaps not worth that end goal, whether that's market pain or economic pain, we would expect to perhaps see a change of direction. But also what the other stimulus levers are that will be pulled, I think is really important for thinking about how you trade this. Because, for example, let's think about what we're seeing at the moment, the rush into bonds, the rush into that safe haven asset. If the next chapter in the story is mass fiscal everywhere as everybody's trying to revive their domestic economy, maybe that's not where you want to be. So I think that's the process we need to be thinking through. And maybe just, what I'm doing increasingly is just stepping back and thinking, okay, well, what is happening here? What I think is increasingly clear to me is the president is speaking to this part of our population that we know did not benefit from globalization. The IMF has been talking about those left behind for decades, and we haven't really seen anything to speak to that part of the population. That's who President Trump is speaking to. But we in Europe, we're seeing the same thing. We're just a few years behind. That part of the population who were left behind are voting, they're speaking, and this is going to unpick a lot of the fabric of the economy that we have seen for the last 20 years. So for me as an investor, it's really thinking about, right, if we had 20 years of globalization that created winners and losers, who were they? And if this is going into reverse, maybe the past losers will be the winners, and maybe the past winners will be the losers. And that creates you a longer-term investment strategy.
OK, I was going to ask you, taking a step back, how big a rethink for the global economy is this? But it seems as if you've done the work for me there, Karen, because you've been answering that question. So let me go to the markets then, because we're seeing big response in some really interesting places. On the one hand, bond markets factoring in more cuts from the ECB. On the other hand, the euro rallies. Where does this leave Europe?
Well, I think we've seen Europe rising to the challenge. I've always said Europe is actually best in a crisis. It's when there is a common adversary that Europe galvanizes together and usually puts in place some pretty meaningful steps in terms of how the region is institutionally set up. The pandemic gave us the recovery fund, the first stage towards a fiscal union. This, I think, will move us towards Eurobonds. We will see common issuance of a much greater scale in order to provide that defence funding, in order to provide money for supporting the domestic economy. So I think that is why we are seeing what at face value, and it comes back to this point, as we're investing, we've got to think about, OK, well, that's the first move. What's the counter-stimulus? Europe will keep stepping up with domestic stimulus, and that is why, and part of the stimulus is the ECB. So what we're seeing from Europe is monetary, fiscal and regulatory stimulus. Don't forget all three. That is why you're seeing European assets relatively outperform, the euro outperforming, even though rates are coming down.
Are you actively looking at anti-globalization trades then? From what you've described, this isn't just a US phenomenon, this is something that will go wider. And so if we've seen this huge turning point in globalization, how do you invest into that?
I mean, we could be here for a couple of hours, but let's give you a few headlines. Because I do think, we have to read the room of what the electorate are saying across the West. And that is that the benefits of globalization haven't been felt by all. Rising inequality is very clear. And everyone, the politics is making everybody turn inward, whether that's through migration, whether that's through trade policies. To me, it's the direction of travel. So it is partly about thinking about winners and losers. OK, well, you're going to have significant onshoring. You're going to have much more protection of domestic industry and its pricing power. So there are going to be winners there. At the same time, there are going to be losers of those who particularly have relied on that external. But the biggest one, Anna, is thinking about inflation. Thinking about how that 2 decades, because globalization gave us that massive fall in prices. In the UK, our goods prices did not increase for 30 years. Our basket of goods was the same price in 1990 as it was in 2020. That's all going to reverse. So how do I protect my portfolio from inflation is the absolute most critical. What bond yield am I going to ask for in a higher inflation world? How do I use alternatives? There's lots to be doing to get away from the noise, but setting yourself up for the future.
Yes, and perhaps that electorate that you're referencing, Karen, maybe not thinking enough about the inflation side of things and thinking more about the jobs and the growth side of things.
Well, let's talk about the growth side of things, Karen. Is this a zero-sum game? You talk about a redistribution. Is the redistribution symmetrical, i.e. from the winners to the losers, or is the net effect of all of this a smaller economy?
I would think the latter.
Right.
I mean, most of the evidence has suggested that on aggregate, globalization has really benefited. A large part of the population has developed productivity and competitiveness that's raised total income. So this, I think, brings us back into this question of over the next few months, how does this story play out? And do policymakers have a rethink about the direction of travel? Because in essence, what you could say President Trump is doing is speaking to that part of the election that elected him, that want the factory job that their father had. But maybe that's going to be at the expense of the other 80%. of the population who are going to experience the higher prices. So how does it then interact with, you know, how the policies play through the economy? If it is weaker, aggregate growth, if it is rising unemployment, if it is rising prices, maybe he can't do this to even speak to that 15%.
Those factory jobs kind of existed in the 1950s. Before that, we had the 1930s.
Yeah.
Tariffs, the last time we had tariffs like this, I think Smoot-Hawley was cleared by the House in 1929, in May, before the October crash came through. The economy starts reacting quite violently. You get into the 1930s, you get the Great Depression. How big a risk is it that we see that kind of a growth hit as a result of the sort of tearing asunder of what has been a post-war economic framework that has produced higher GDP? Why can't that go into reverse? Why won't that go into reverse as we work our way through this process? Is that a useful model to think about what we are about to see in terms of global economic growth?
That is a useful model for analysing policy error. So what happened back then was not only political policy error, but then monetary policy error.
Sure.
And so that, I think, is useful for us thinking about if we take economics out of the equation and things are operating purely on political will, those are the risks. Now, I would hope, as an economist, the lessons have been learned, and therefore I still put the risk on that kind of outcome pretty low.
But you've flagged inflation. If the ECB cuts, isn't there a danger that that provides some cyclicality into that inflationary narrative?
So I think what we're working out on the inflation front and whether the central bank should be reacting is this a one-time supply shock which is going to raise inflation but ultimately damage growth they should look through and be cutting? Or are we going to see a supply shock coupled with fiscal, giving us the demand shock we saw in the pandemic, much higher inflation, in which case the central bank should be hiking? At the moment in Europe, we're looking at the former. But we need to be very careful about thinking when we transition to the latter.
Very quickly, you talked about this deglobalization trade. There's a question if the rally we've seen in periphery bonds and periphery equities in Spain and Italy is over. This quarter was kind of a one-time exception. Does deglobalization create a case to be long that part of the world?
That and many others, Kriti. I would say that if we think that what's happening, and this isn't going to happen today, this is a multi-year process, but if we really think that what the world is doing is fragmenting, really, into friendship groups, alignment groups, there are going to be significant winners. It's not going to maybe just be the South. It might be Eastern Europe. It will be in Asia, again, those that will benefit perhaps from trade links changing with China. There's going to be significant winners alongside the losers, and that's the work to be done today, is not to panic, not to sell everything, but to think about these reshufflings, think about how the fabric's changing, and find the winners now, because over the next 48 hours, we're probably going to have great opportunities to pick those up.
Friendship groups. Different friendship groups.
Falling out with all our friends, it seems, all over the place.
All kinds of things are moving at the moment.
We've got a friendship group here.
We definitely have.
We're very happy around this desk. Yeah. Thanks, Karen.
Nice to see you. Thank you very much indeed for coming to see us. Karen Ward, Chief Market Strategist for EMEA at JP Morgan Asset Management. Let's take a look at the core 6 in Europe and figure out what is happening here. You are seeing certainly a defensive bid coming into names like Nestlé this morning. As you can see, it is rising in this down market, up by 0.5%. Novo's also catching a bid. Farmers broadly are being perceived this morning as a place to hide out, as is Ferrari, which is interesting as well. Chips under pressure, Schneider's definitely under pressure, luxury's certainly not having a good day as well. That is where the weakness is percolating in this market. Individual stock moves, let's get a few more. Joe, what do you got?
Another area not having a good day, guys, is the shipping stocks. We're seeing big moves lower in the likes of AP Vertical, so Capital, Lloyd, dropping pretty simple trade on this. A lot of reduced demand.
Okay. You're probably hearing Joe on my mic because his mic doesn't appear to be working.
That's how these things work.
Yeah, precisely. We'll try and fix that little technical glitch this morning. We're running with a number of issues.
Yeah, he was talking us through the shipping stocks, which are obviously weaker because, as we were just discussing with Karen, if you're going to be less globalised than you were, then maybe you ship fewer goods around the world.
As a result, we are seeing maybe also some of the luxury names coming down as well.
Yeah.
We're going to be shipping some of those goods a little less. It's interesting to see what's happening with Adidas and Puma. Puma, I think, is now down 50%.
The banking sector, the worst performing, actually, which is probably a rate story.
Yeah, if you're worried about any sort of cyclical exposure, today is not the day to be looking at the markets.
OK, we will fix Joe's mic. We'll bring him back with all of those crucial details about where the market is moving. We will also take another look at what's going on in terms of winners and losers. We'll be looking at that coming up next in the wake of President Donald Trump's tariff announcements. We'll bring you that shortly. This is Bloomberg.
क्रूड ऑयल 1 वीक के बाद वहीं वापस आ गया बिल्कुल। चांद सेरवाल जी, थैंक यू सागर साहब। क्रूड ऑयल सेल किया था 6005 से एंड 5940 पे बुक कर लिया 11 के। ग्रेट। वैसे मैंने यहाँ पर कोई ट्रेड दिया नहीं था तो मुझे थैंक यू बोलने की ज़रूरत नहीं है। मेरा कोई ट्रेड नहीं चल रहा सेलिंग का। किसी ने अगर ओवरनाइट रखा होगा उसको अच्छा प्रॉफिट हो गया होगा। मार्केट गैप डाउन हुआ था एंड देन मार्केट मूव्ड। फिलहाल सपोर्ट है तो यहाँ से एक बाइंग एक्सपेक्टेड है। नेचुरल गैस वापस ऊपर जाता है तो वापस सेल कर देंगे। नीचे ब्लू कलर की लाइन के आसपास एक छोटा सा सपोर्ट है, अगर ये होल्ड कर गया तो वेल एंड गुड, नहीं करता है तो फिर नेक्स्ट सपोर्ट 334 के अराउंड रहेगा। 1230 भी हो गया। न्यूयॉर्क सेशन ऑलरेडी ओपन है। बोलो शर्मा जी, न्यूज चलती रहती पूरा दिन, सर दर्द कर देता है। अरे तो म्यूट कर लिया करो सर, अब क्या कर सकते हैं इसमें, मैं कुछ नहीं कर सकता खास। वॉइस थोड़ा कम कर सकते हो, क्योंकि मैं भी सिर्फ चार्ट को ही नहीं देखता रहता ना, वो भी बोर हो जाते हैं फिर। तो उससे बढ़िया न्यूज़ ही देख लो, हर समय ट्रेड बनता भी नहीं है। इंट्राडे ही करना चाहिए या फिर कैरी फॉरवर्ड करना चाहिए, व्हाट डू यू प्रेफर? डिपेंड करता है सर, आप किस तरह का ट्रेड प्लान कर रहे हो, किस तरह के आप ट्रेडर हो। बहुत सारे लोग ओवरनाइट पोजीशन होल्ड करना ज़्यादा पसंद करते हैं, तो डिपेंड करता है, लाइक यू नो, अगर आप कोई स्विंग या फिर पोजिशनल ट्रेड ले रहे हो तो ऑब्वियसली है फिर। इंट्राडे में तो सारे टारगेट मिलते नहीं हैं, सारे क्या, रेयरली मिलता है इंट्राडे में पूरा टारगेट मिल जाए आप स्विंग या पोजिशनल ट्रेड में। तो उसके लिए तो ऑब्वियसली है ना, ओवरनाइट रखना ही पड़ेगा, चाहे आप ऑप्शन बाई करो, सेल करो, फ्यूचर ट्रेड करो, या फिर इवन इक्विटी भी क्यों ना करो। हाँ, वो भी ठीक है, चलेगा। क्रूड में कोई न्यूज आई है क्या? आई डोंट नो, बट देयर इज अ हाई पॉसिबिलिटी, बिकॉज 12 पीएम की जो कैंडल थी उसके बाद मार्केट ओपन इक्वल टू हाई बना के कंटिन्यूसली फॉल ही कर रहा है। 12 पीएम की कैंडल भी ओपन इक्वल टू हाई थी, उसके बाद 12:15 की तो नॉर्मल कैंडल थी, 12:30 की अभी न्यूयॉर्क लंदन सेशन ओपन हुआ, उसमें भी ओपन इक्वल टू हाई ही बना है। नहीं नहीं, फ्यूचर ठीक है, कर सकते हैं बिल्कुल। नहीं नहीं, वही मार्क्ड है, बिल्कुल है। ये लास्ट ही सपोर्ट है, अगर ये होल्ड नहीं किया तो फिर सीधा 5750 पर ही मिलेगा सपोर्ट नेक्स्ट, इसलिए काफ़ी इंपॉर्टेंट सपोर्ट है। बाकी टारगेट भी अब कोई बहुत बड़ा नहीं रहेगा, छोटा सा ही टारगेट रहेगा, अप्रॉक्सीमेटली 5975 के अराउंड। 5850 का एक लास्ट एसएल है, इससे बड़ा एसएल लेंगे नहीं। एंड 5872 से 5892 के बीच में कहीं पर ही बाई कर सकते हैं। वो भी ठीक है। अच्छा, वो भी देखते हैं उसका, ठीक है। ठीक है, वो पूरा ही सपोर्ट है, ध्यान रखना 5872 से 5892 के बीच में कहीं पर ही बाइंग आ सकती है, जरूरी नहीं बिल्कुल नीचे आए हो। क्रूड अभी बाई करें या और नीचे, थोड़ा सा नीचे और आने का वेट कर सकते हो। क्रूड को 6600 जाना चाहिए, अब जाना चाहिए, जाने को तो कहाँ नहीं जाना चाहिए, कहने से थोड़ी ना होता है, जो दिख रहा है वही ट्रेड कर सकते हैं। अब जाने को यहाँ से 500 पॉइंट की रैली आ जाए, मज़ा आ जाए कहीं भी साइड। ध्यान रखना आज ओपेक और जेएमसी की मीटिंग भी है, उसका भी थोड़ा बहुत इम्पैक्ट पड़ेगा। अभी 330, मोस्ट प्रॉब्ली 330 के अराउंड आ जाती है न्यूज़, स्टेटमेंट रिलीज होगा तो देखेंगे क्या स्टेटमेंट रिलीज हो रहा है, उसके बेसिस पर भी मार्केट रिएक्ट करता है एक्चुअली। ओके डन, ठीक है। मॉर्निंग पे ठीक था वो, बैंक निफ्टी फ्यूचर्स, मतलब फ्यूचर सारे बुकड हो गए। ये देखना, इस टाइम पे साइड में चला गया। बाकी बैंक निफ्टी भी देखोगे, वो रेजिस्टेंस से नीचे आने का नाम ही नहीं ले रहा है, ऐसा साइडवेज हुआ है ये। 10 PM से 1 बज गया ऑलमोस्ट, 3 घंटे से रेजिस्टेंस एरिया को हिट किया, 150 पॉइंट गिरा भी जरूर, बट कुछ बहुत बड़ी सेलिंग आई नहीं, वहाँ का वहीं रुका पड़ा है, ना ऊपर जा रहा है ना नीचे आ रहा है। जो लोग सेलिंग में है, फ्यूचर सेल किया हुआ है तो कोई प्रॉब्लम नहीं होगी, कोई थीरा डी के होता नहीं। ऑप्शन सेल किया हुआ है, कॉल वगैरह शॉर्ट करिए तो भी अच्छा है। पुट वगैरह बाई किया हुआ है, थोड़ा प्रॉफिट बुक कर लेना का इसमें, अगर ऐसी साइडवेज रहा तो फिर वो 230 के आसपास कहीं बड़ा मूव ना दे दे। ठीक है, ट्वेंटी 25 पॉइंट इनफ है। ठीक है, उसको बुक कर सकते हैं। Done. देखते हैं इसमें न्यूज़ आ रहा है। गोल्ड एंड सिल्वर के लेवल देख लेते हैं फॉरेक्स में ना। ठीक है सागर भाई, हमें आपकी टीम में ले लो, साथ में ट्रेड करेंगे। टीम कोई नहीं है सर, मेरी टीम कोई नहीं, मैं अकेले ट्रेड करता हूँ। ऐसी कोई पर्सनल टीम नहीं रखी हुई है ट्रेडर्स की। जब तक आप सेबी रजिस्टर्ड नहीं हो तो आप नहीं रख सकते, या फिर एडवाइस वगैरह डायरेक्टली नहीं दे सकते। गोल्ड में देखोगे तो जाने को तो कहीं भी चला जाए, जहाँ जा रहा है वहीं ट्रेड करना चाहिए। इस पर बुक लिखी जानी चाहिए। अरे कोई नहीं, आप लिख दो। आप लिखोगे मैं लिखूंगा, एक ही बात है। इतना अच्छा कमेंट लिखा है, बुक भी लिख दोगे? मैं तो कमेंट भी नहीं लिख पाता, इतने फास्ट टाइपिंग कर रहे हो बताओ। हाँ, जितना लिखा हुआ है ना उसका आधा भी टाइप करने में लगभग 15 मिनट लग जाएंगे मोबाइल में। तो स्पीड भी अच्छी, लिखते भी अच्छे हो। बोलो शर्मा जी, बेस्ट रहेगा, ट्राई करो। क्या पता नेक्स्ट चेतन भगत आप ही हो जाओ, हु नोस। देखो गोल्ड में अगर फिलहाल के देखोगे ओवरऑल तो बुलिश ही है। रेजिस्टेंस देख लेते हैं 15 मिनट टाइम फ्रेम पर, और एक सपोर्ट देख लेते हैं। हाँ, ओके। sure। थोड़ा प्रॉफिट बुक कर लो बैंक निफ्टी में, सेलिंग में जो रेजिस्टेंस में बताया था, सेलिंग का ट्रेड 15 मिनट में करके ट्रेल कर लो। 3 घंटे से साइडवेज है, नहीं तो ऐसा ना हो कि पूरा थीटा डी हो जाए अगर ऑप्शन में हो तो, ऑप्शन बाइंग में हो तो, सॉरी पुट बाई किया हुआ है अगर। 6 PM ये अनएम्प्लॉयमेंट क्लेम्स का डेटा बिल्कुल इंपॉर्टेंट है। देखो एक तो जो लास्ट कल मार्केट, इंडियन मार्केट क्लोज होने के बाद फॉरेक्स में हाई बना हुआ है, दैट इज अ रेजिस्टेंस। वो एक ऑलरेडी रेजिस्टेंस है। ठीक है, उसके ऊपर कोई नया रेजिस्टेंस बनेगा या तो फिर तब मार्क करेंगे, या फिर पिवट का यूज कर सकते हो। अभी के लिए डे हाई इज द रेजिस्टेंस एरिया 3167 65 के बीच में। ये 15 मिनट बता रहा हूँ, फॉरेक्स एमसीएक्स नहीं बता रहा हूँ, ध्यान रखना। नेचुरल गैस में भी ऊपर सेल कर सकते हैं, ठीक है, वो भी रेजिस्टेंस जो नहीं है। कितने बार टेस्ट हो गया लेवल? देखो जिस लेवल पे ये नीचे है, मल्टीपल टाइम सपोर्ट ले चुका है, 3110 से 3105 के अराउंड। इट इज़ अ सपोर्ट 15 मिनट, बट इट विल ऑलरेडी टेक मल्टीपल टाइम सपोर्ट, ऐसा नहीं है नया सपोर्ट है। कल 1 2 3 4 कल 4 से 5 बार ऑलरेडी सपोर्ट ले चुका है, तो दिस इज 6 टाइम प्राइस इस लेवल को हिट करेगा। तो जब तक ये ब्रेक नहीं होता तो मान के चलो, बट वीक है। नॉर्मली 2 से 3 बार ठीक रहता है, उसके बाद फिर वीक होने तो नॉर्मली स्टार्ट हो जाते हैं। नेक्स्ट जो अच्छा सपोर्ट मिलेगा अगर ये ब्रेक हो जाता है, जो कि हो जाए तो मेरे अकॉर्डिंग बेटर है, नेक्स्ट एक लिक्विडिटी जोन है वहां पर ट्राई कर सकते हो, नहीं तो दैट इज अराउंड 3084 80, उस एरिया में बाइंग का प्लान रख सकते हैं, वो थोड़ा ज़्यादा बेटर है। ये लेवल इतने बार टेस्ट हो गया तो थोड़ा वीक डेफिनेटली अभी। तो ये 3 लेवल है एज अ सपोर्ट रेजिस्टेंस। बाकी देखो अभी कुछ और न्यूज़ तो नहीं है, जितनी न्यूज़ आनी थी कल आ गई हैं ऑलरेडी। थोड़ी बहुत प्रॉफिट बुकिंग अगर मार्केट देता है तो बढ़िया रहेगा। एटलीस्ट 3080 तक गिरे, वहाँ से अगर बाइंग आती है। कैंडल का ध्यान रखना, ओपन इक्वल टू हाई पे बाई नहीं, ओपन इक्वल टू लो पे सेल नहीं। मेजर डेटा 5:30 न्यूयॉर्क सेशन ओपन, 6 PM अनएम्प्लॉयमेंट क्लेम्स और 7:15 7:30 के। ये 15 मिनट का मैं बता रहा हूँ, ध्यान रखना, अलग अलग चार्ट में अलग अलग हो सकता है। फिलहाल मैं ओनेडा का चार्ट यूज़ कर रहा हूँ, दिस इज ओनेडा चार्ट। ठीक है, ये भी सपोर्ट ही है मल्टीपल टाइम, बट सपोर्ट लेके यहाँ पर प्राइस हिट कर रहा है। दिस इज अ 4th या 5th टाइम आएगा इस लेवल पे। हाँ, तो ये कोई नहीं चलेगा, ऐसा नहीं है। देखो लेवल अगर वो बड़ा लग रहा है क्रूड ऑयल का तो उसको मिनिमाइज कर सकते हो और बेटर रहेगा। एक सेकंड रुक जाओ। अगर ज़्यादा बड़ा लग रहा है लेवल, सपोर्ट तो वही रहेगा, चेंज नहीं होगा। वहाँ पर दो दो सपोर्ट है तो मैंने मिक्स कर रखे हैं, नथिंग एल्स। ये कर लो। बाकी ऊपर भी एक सपोर्ट है, दोनों मिक्स करके रखना चाह रहे हो तो मिक्स करके भी रख सकते हो। लास्ट सपोर्ट कह सकते हैं इसको। Done. ये क्या हो गया? ऊपर सेल भी, हाँ ऊपर अगर सेल करना चाह रहे हो तो अगर क्रूड ऑयल मान लो डायरेक्टली ऊपर आ गया तो ऊपर सेल भी कर सकते हैं, बट सपोर्ट थोड़ा पास में है. लेट्स सी पहले सपोर्ट पे हिट करता है या फिर ऊपर जाके रेजिस्टेंस को हिट करता है. बीच में भी एक रेजिस्टेंस है डे हाई के अराउंड जहाँ से मोमेंटम आना स्टार्ट हुआ है. इसके नीचे 5820. अगर ये भी होल्ड नहीं हुआ तो फिर 5820, इसलिए कह रहा हूँ लार्ज सपोर्ट है. थोड़ा फिर बड़ा फॉल आ जाएगा, बड़ा इन द सेंस आप ठीक ठाक कह सकते हैं. वैसे अगर उसको भी लगा देता हूँ, रुक तो जाएगा वहाँ पर. बढ़िया, रुक जाओ.
News when you want it with Bloomberg News Now. I'm Tom Mackenzie.
And I'm Caroline Hepker.
President Donald Trump has imposed the steepest US tariffs on trading partners in more than 100 years. The minimum levy will be 10%, with the UK, Brazil, Turkey and many others in that group. The EU, though, is being hit with a 20% levy, while Japan faces 24%. Meanwhile, China is facing a tariff rate of 34%. That's on top of current charges. Bloomberg Economics says that this means Chinese goods heading to the US will now face an average tariff rate of 67%. President Trump underlined the scale of the changes as he announced the plan.
This is one of the most important days, in my opinion, in American history. It's our declaration of economic independence. For years, hardworking American citizens were forced to sit on the sidelines as other nations got rich and powerful, much of it at our expense.
President Trump has embraced tariffs as a tool to assert US power, revive American manufacturing and exact geopolitical concessions from trading partners. The measures announced on Wednesday are based on the administration's assessment of levies and other barriers that other countries impose on American goods. The 10% baseline tariff comes into force from Saturday, while the higher duties will kick in from next Wednesday.
Trump and his trade advisors argue that the tariffs will encourage companies to shift manufacturing operations to the US, rebuild the country's industrial base and create jobs. Using Federal Reserve calculations, though, these measures are expected to cut 2.3% of American GDP. Bloomberg Economics calculates that the effective tax rate that the US now charges on imported goods may climb to around 23%, higher than at any point in more than a century. Diane Swonk, chief economist at KPMG, says the announcement is basically the worst-case scenario for Americans.
These tariffs are across the board. They're going to touch everything from going to the grocery store to going out to restaurants to even having to go to places like the movie theater and trying to have a little time off, because everywhere you go, there's some aspect that they have to import to do that.
Diane Swonk from KPMG speaking there. She says that the tariffs now raise the likelihood of an economic slowdown in the US. Following the announcement, investors added to bets for at least 3 interest rate cuts from the Federal Reserve this year. But for Fed officials still working to rein in the price gains that spiked during the pandemic, the inflationary fallout from President Trump's actions may limit their ability to step in and bolster the economy with cuts.
Bloomberg Economics says the impact of the accumulated US tariffs on China will be enough to wipe out most trade between the countries by the end of this decade. China's Commerce Ministry condemned the US levies and promised retaliation, but did not specify any measures. Goldman Sachs' China portfolio strategist Si Fu says the scale of the move is more than what many investors had priced in.
Definitely today's news, I would say it would be a surprise to most of the investors. It's out of expectation. Definitely in the near term, it causes more volatility, especially in terms of sentimental valuation impact. It's unavoidable, especially when U.S. market, global markets are all correcting. Then definitely for China, we are expecting more volatility.
Goldman Sachs speaking there. Before this announcement, Bloomberg reported that China is restricting local companies from investing in the US in a move that could give Beijing more leverage for potential trade negotiations. Donald Trump has yet to speak directly to his Chinese counterpart more than 2 months after his inauguration.
The European Union says that it is ready to retaliate against Trump's 20% tariff on the bloc. EU trade ministers are due to meet on Monday to discuss a response that could further strain the world's largest bilateral trading relationship. European Commission President Ursula von der Leyen warned that US actions would deal a blow to the global economy, and she urged further negotiations.
We have always been ready to negotiate with the United States to remove the remaining barriers to transatlantic trade. At the same time, we are prepared to respond. We are already finalizing the first package of countermeasures in response to tariffs on steel, and we're now preparing for further countermeasures to protect our interests and our businesses if negotiations fail.
Ursula von der Leyen speaking there. The US measures threaten to wipe out much of the euro area expansion forecast by the ECB for this year and next year. Bloomberg Economics estimates that the tariffs will slash EU exports to the US by around 50% in the medium term, putting 1.1% of GDP at risk. Investors have now boosted their rate cut bets, and they now see an 85% chance of another rate cut this month at the April 17th ECB meeting.
Well, the UK government says it will continue to push for a trade deal with the US as it faces tariffs of 10%, less than its European neighbours. The Business and Trade Secretary, Jonathan Reynolds, said the government would, quote, remain calm while acknowledging that the UK would still suffer from the tariffs on vehicle and auto parts, steel and aluminium. The UK's approach has been backed by business. The manufacturing lobby Made UK said in a statement that this, quote, isn't the time for a trade war. Siobhan Haviland, Director General of the British Chambers of Commerce, commended the government's, quote, cool head, but underlined the havoc the US decision will wreak on businesses around the world.
Trump's historic action risks inducing a worldwide trade war marked by tit-for-tat strikes that destabilise supply chains and hurt US exporters. Speaking after the president's announcement, his Treasury Secretary Scott Bessent urged other countries not to fight back.
I would advise none of the countries to panic. I wouldn't try to retaliate, because as long as you don't retaliate, this is the high end of the number. And I think the market could have certainty that this is the number barring retaliation.
Scott Bessent went on to leave the door open to negotiations, telling Bloomberg, we'll see with regards to further talks. Countries have already reached out to Washington to engage in discussions, but the Treasury chief indicated the administration would let things settle first.
Well, global financial markets have been hit by, of course, a sweeping sell-off after President Donald Trump's bid to remake the World Trading Order proved more aggressive than many had expected. The European benchmark, the Stock 600, is now down 1.4%. Here in the UK, the FTSE 100 has dropped 96 points, down 1% at 8,511. US equity index futures falling as well, along with the dollar, while Asian shares tumbled, with an index in Japan sinking to the lowest level in almost 8 months. 10-year Treasury yields slumped to the lowest level in more than 5 months, with the flight to havens also strengthening the Japanese yen and gold, which touched a record high. Carl Roeder is senior market analyst at Capital.com.
The absolute level of tariffs is higher than expected. The markets are going to have to price in this growth shock now. And there's still high degrees of ambiguity about what the sort of long-term objective here is for the Trump administration. I mean, is this supposed to be a radical restructuring and shaking up of the global trade order and the global economy? You know, we've seen some indications that maybe they're willing to negotiate with trading partners on certain tariffs. That leaves some wriggle room. On top of that, though, it sort of opens questions about, the reciprocal tariffs in the United States and whether tariffs can actually be raised from here as, this sort of tit-for-tat dynamic plays out.
Kai Roder speaking there as traders across asset classes are bracing for what promises to be a grueling stretch of trade negotiations as companies and consumers adjust to Trump's tariff offensive.
That's news when you want it with Bloomberg News Now. I'm Tom Mackenzie.
I'm Caroline Hepker, and this is Bloomberg.
innovation and modernity. How will it push the limits of technology even further?
Going to space should become as easy as, taking a flight.
If NASA is designing a lander, their approach is they're designing a Formula One car. So we take, say, a Jeep approach.
Minso, give us a sense of how you translate Korean architecture for the rest of the world.
We call this madang. In general terms, it's where we can be ourselves, where we belong.
There is an old saying in Korea that says, "거미 불루, 화이 불치." It means simple but not humble. So it has a tremendous impact on Korean architecture.
People tend to think the robot AI taking the job from them. We want to use the robot as a basic asset, meaning people have an income through the robot.
From space tech in India to robotics in Japan, Asia is driving the future, reshaping industries, societies, and the way we live. Join me as I take you through the bold innovations. Discover Asia's next-gen technologies on Momentum.
If you look at Reels, Instagram and Facebook Reels, both immensely popular, both growing a lot. Those are really working not because the short form video format is special and new. It's actually been around for a long time. You remember Vine and the early days of short form video. It's because of GPUs, it's because of large models, it's because of advancements in recommendation systems. ByteDance is one of the really great companies at this. We also have made an immense investment in harnessing the power of modern models, large data sets, and modern hardware, NVIDIA's hardware and our own hardware, to build recommendations that make the products better and more engaging. Our advertising system is built on modern AI recommendation technology. So I always think it's interesting when people remark that like AI just arrived. It's actually powering already today a huge amount of the engagement and quality of our products.
Markets sell off around the world as Donald Trump announces harsher than expected tariffs, including over 50% on China. Beijing promises countermeasures while the EU says it will retaliate if negotiations to lift the tariffs fail. And the UK is hit with 10% tariffs, but says it's still pushing for a trade deal with the US. We'll be speaking to the Business and Trade Secretary Jonathan Reynolds shortly. So the markets are not liking what they heard in the last 24 hours. I know we're all glued to the screen from the Rose Garden to try to understand what was going on, what was being announced, and how countries would retaliate. Now, stocks are definitely tumbling on these bigger than expected Trump trade tariffs. The S&P futures down some 3%, NASDAQ futures down 3.3%. Again, this comes on the back of quite a little bit of a correction, actually, over the last 3 to 4 trading days. An update probably on the state of play of commodities. Again, a lot of folks on the markets and on the trading floors just trying to understand the implication of this new phase in the global trade war, which looks set to get a great deal worse. A couple of things we also need to watch out for is probably euro dollar, but also gold. Now, gold has definitely been the haven par excellence. You can see gold at 3128, euro dollar 109.77, then Brent crude again at 72.79. European markets also getting not the brunt of it, because I have to say there's not a lot of discrimination. Just like if you were a friend or a foe, you'd get hit by a lot of the tariffs. It feels like there's a bit of discrimination on the sell-off of the CAC 40 down 1.2%, similar moves for the DAX and the FTSE MIB. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, Donald Trump's so-called reciprocal tariffs are triggering a global market sell-off. The president announcing the U.S. will apply a minimum of 10% tariff on all trading partners and additional duties on around 60 nations.
China, 67%. That's tariffs charged to the USA. So we're going to be charging a discounted reciprocal tariff of 34%. European Union, they're very tough. We're going to charge them 20%. Taiwan, we're going to charge them 32%. Japan, we're charging them 24%.
With us now, Brendan Murray, who leads Bloomberg's trade coverage, Rachel Evans, our managing editor for FX and Rates, and Leslie Vinjamuri, director of the U.S. and the Americas program at Chatham House. So we have good team coverage. Thank you all for joining us. Brendan, I mean, at parts it actually felt a little bit like it was the Price is Right. But is this a negotiating tactic, or is this it? Is he just trying to get manufacturing back, and this is as good as it gets?
There might be some room for negotiation here further down the road, but this is Donald Trump's. This is the culmination of something that Donald Trump has been complaining about since the 1980s, that America, doesn't get a fair shake in the global economy, and in true Trump fashion, he didn't give us the nice round number. He gave us, many dozens of different numbers for different economies. We're 12 hours later, and we're still trying to parse through what exactly it means and for the global economy.
Yeah, so we'll talk about markets in a second, but again, yesterday you said, what China, what China, what China? I mean, China has a really raw deal here.
Yeah, 54%. So we've gone in the past 2.5 months from, Trump putting, there being no tariff on China to 54%. So, and not only that, but the countries in South Asia where, where Chinese companies had set up to get around the first round of Trump tariffs in his first term, they're getting hit very, very, very hard too. So the Trump administration is trying to sort of block that end run that Chinese exporters tried to make around the original tariffs.
Now, the concern for the markets is that this also, let's go to Scott Bessent, who Anne-Marie Horgan spoke to yesterday, because he says, look, everyone cool off, don't retaliate yet. This is as bad as it could get. But let's listen to him.
I would advise none of the countries to panic. I wouldn't try to retaliate, because as long as you don't retaliate, this is the high end of the number. And I think the market could have certainty that this is the number barring retaliation.
So this morning we heard from Germany warning of a clear and decisive response if no compromise is reached. And we heard also from France saying that the EU may retaliate against trade measures as soon as the end of April. Rachel, this is the problem, is that the markets don't really know what they're looking at. So there's a sell-off today around 3%, but could it actually get a lot worse?
Yes, in a word. I think that's exactly it. And I think, to Brendan's point, the market is still behaving as though this is kind of the beginning of a negotiation. And I think that, yes, there may be some deals carved out. We may see some of these being pulled back a little bit with much fanfare and talks of victory and concessions. But this is kind of the base for things going forward. And I think the market is still a little bit optimistic about the scope of those negotiations. So, yes, we're seeing a sell-off today. There was a sense that things could have been sort of less severe, and that really kind of turned through the course of that press conference in the Rose Garden from, oh, OK, 10% base, that sounds all right, to, oh, actually, that's just the beginning, there's a lot more on top of that. So we're seeing kind of the reaction to that in markets, but as over the next few weeks and months it becomes clearer to what degree there are, as you said, retaliatory efforts, to what degree there are deals to be made or not, then I think the market is going to gradually start to price that in, particularly as it starts coming through to the data and we really see the impact of this.
So that will, I imagine, change actually everything for bonds, given what the Fed will or won't do.
Yeah, and I think, there's a really interesting question now for markets about whether you think about the hit this will have to growth or whether you think about the potential spur of this to inflation. And it's interesting when you look at kind of the divergence in reaction between Europe, for example, and the US. It seems like there is a very kind of clear sort of concern about growth in Europe. We're seeing more rate cuts being priced in for the ECB, an expectation that they will have to come in to support growth. On the US side, that is still the case, but it's a slightly smaller reaction because the Fed is going to be stuck in this position whereby they need to boost growth, but they also need to make sure that inflation doesn't take off.
So, Leslie, this is 100% a new phase in this new global economy. What surprised me was that whether you were a friend or a foe, it didn't really make a difference. It was almost like they were looking at the numbers and they want to get their money's worth.
That's right. This is a radical shift from how America behaved for more than 7 decades, even with all the exceptions that we know of. It is Donald Trump saying, with a very serious team around him, he has planned this out, plotted it out. It is not the normal, sort of fly by the seat of one's pants. It is very systematic, saying that non-tariff barriers, tariffs that you've levied, we are factoring that in, and we are calling you to account adversaries, allies, and I think what the Trump administration is missing and what it's hitting, it's missing what America has benefited from when it comes to its allies, the ability to put bases across the world. That sort of ability to amplify its power by having alliances is really fundamental, and opening America's market has underpinned those security relationships. What it's hitting is that there is there's a high level of support for the line, for what he is saying, not only amongst his base, but amongst the non-economists, of which there are many in the United States of America. When he says America's been taken advantage of, when he says China's doing better, when he said our market's being flooded, there are a lot of people that right now support him. How are they going to react when suddenly cars are 25% more expensive and any number of goods are more expensive? That is the political calculation. Yeah. I do not see how this president navigates that, and that's why I'm not persuaded that there isn't room for negotiation.
Leslie, it's also really interesting, like if you're the European Union, we know they're looking at a package of retaliatory measures. I don't know whether they give it 2-3 weeks to see how it goes, but will each country retaliate back? Because then it can get really, really ugly. I mean, we could talk like tariffs at 67% if this is to and fro in the next couple of months.
Yeah, I think that the trick now is to recognize that we're in a different moment. Yeah. We're no longer in a world where it's you give me this, I give you that. It's more of a long-term play. I think there probably is some room for negotiation, but sort of mass retaliation just strikes me as very likely to escalate and to lead to very damaging effects for people around. It's the people who are going to pay the price, as we know.
Brennan, what's the killer question that you want answered now? I know I really enjoyed your quick take, trying to explain why he's doing this now and when he'll get out of it. But if there's one thing that you want answered now, which one is it?
Well, I'll give you two. One is, why is Russia not on the list and Israel is? Explain that one, the geopolitics of that. But also, how does this drive the ultimate goal that the Trump administration would want, and that's a deal with China or some sort of way to rebalance that relationship. If you go after Canada, Mexico, the European Union, the UK, you as Leslie was saying, you undermine those alliances where you could find common ground to combat the overcapacity problems that all these countries face with China.
Rachel, are we pretty much not immune to China, but does that inflation, is there a second round effect of what basically the 50% tariff on China that comes back to hurt the U.S.?
Yeah, I mean, potentially, yeah. I mean, I think that's going to be something that the market's going to be watching for, is exactly how this ripples through. I mean, like, trade links are very complex, right? I mean, it's tricky to kind of plot this out. And if you're an analyst or an investor now, you've just been faced with all of this different maths to play with, all of these different tariffs, which you need to now project onto kind of the imports and exports from various places, figure out how that impacts GDP, figure out how that impacts inflation. Yeah, there's a potential for this to have a lot of different effects that we just don't really know about yet. So I think there's going to be, there's always a lot of attention paid in markets to all these different data points. But as these tariffs come in very, very quickly, over the next couple of months, people are going to be starting to look for those signs, and we're going to read a lot of headlines about whether this is a sign of tariffs passing through into the data, how much worse could it get. And I think, to Leslie's point about whether there's room for negotiation or not, some of this may actually come down to what that data starts to show and the degree to which the market keeps reacting. Because if we take the point that Brendan was making, that this is an ideological kind of sort of case, that they want kind of tariffs there for sort of ideological reasons, that suggests less room for negotiation. But to Leslie's point, if things start to get really bad and we see this kind of coming through, then maybe that's the sort of thing that starts to move the administration.
Okay, very quickly to the both of you, because we're just about to speak to Jonathan Reynolds, the UK business secretary. I mean, could the UK benefit in this? I mean, 10% tariffs, they seem to have been getting off quite lightly.
The UK is playing its cards very, very well. That's been the case throughout. It is going to put it in a slightly more difficult position with Europe, but nonetheless, it's been wise. I do think that obviously, we're going to hear that there's more movement towards a U.S.-UK trade deal. But the other thing that's key here is that Donald Trump also has wins that he wants to be able to deliver on the geopolitical side, whether it's Russia, Ukraine, whether it's in the Middle East. I think the UK is also important in that space, clearly. And so there are going to be questions when it comes to Russia. Why is Russia not there? Because he wants a deal still. Potentially, that may well be the argument. So I think we're going to see linkage of the kind that we're not used to seeing. It used to be the case that you play by the rules on maintaining an open trading order and you have your alliances. But now I think there is going to be, what can you do for us on the security side? What can we get from you on the trade side? And there will be connections made.
Okay, thank you so much, all of you, for joining us. Of course, we talked about the UK, Leslie Fincher-Murray, Brendan Murray, and Rachel Evans. We talked about the UK because we're delighted to be joined by the UK Business and Trade Secretary, Jonathan Reynolds. Secretary Reynolds, thank you so much for joining us. Now, it does appear that the UK, at first brush, got off quite lightly. 10% tariff from Donald Trump, half the rate coming on EU goods, but that's also equal level of cost that the US says we apply to their exports. Where's Britain's discount?
Well, first of all, you're right to say we're in a more favourable category than some countries, but of course we're disappointed still this morning. We don't think there is an argument for these tariffs to be imposed on UK goods entering the US. We think we already have a very strong and fair, balanced trading relationship, mutually beneficial. None of the big deficit in goods on the US side that the President is particularly animated about. So obviously we're pleased with the favourable side of the basket of countries that we are in, but we will continue our work on a trade deal to remove the need for these tariffs and actually to deepen the existing relationship that we have, and that will remain the focus of our work here in the UK.
Do you believe the 10% tariffs will ever come off?
I believe they can do. I believe they can do. If you look at the existing relationship, extremely mutually beneficial. I think that is widely recognised on both sides. I think there's more we can do together, more that I want to do together. I mean, I want businesses based in the UK to have more market access to the US, and I want that alongside improving that EU relationship, improving the relationship with India, with the Gulf, all part of our trade negotiations, which I lead on for the British government. And I think that is possible. There's a conversation here about goods, about services access, about regulation, about economic security, all things that matter a great deal to us. And the plan for change the UK government is committed to has that economic security at the heart of it, and working with the US on a way forward is a very good way to deliver upon that. And the message I have to say I get from businesses here in the UK is, look, of course we're worried. Who could not be with announcements of this kind? But we support the British government remaining calm and engaged and trying to find the right way through this.
I mean, one effect of this move is to drive a wedge between the EU and the UK. Some are actually calling it a benefit of Brexit. But how do you build a relationship or build a closer partnership with Europe while heading in different directions?
Now, look, I do not accept the case that's sometimes made that the UK has to pick between our two most important trading partners. There's a whole set of things I know we could work more closely with the US, a whole set of goods and services and market access regulatory changes that would really improve that. And I believe that can be done whilst maintaining the space we need to do what we call the EU reset, the focus on improving the trading relationship with the EU, recovering some of the damage that was caused to the UK economy by the way that Brexit was handled. Those are not mutually exclusive. They're really not. We can do that in a way which gives us what we need and actually helps the EU and helps the US with that strengthened trading relationship, and to build on the opportunities around the rest of the world. I'm really excited by the work I've done with my counterparts in India and with the Gulf. I think there's a really exciting position, and what I want is to be able to say, in a difficult world, a challenging world, if you come to the UK, if you base yourself from the UK, we will be the best placed jurisdiction to do business with, no matter where that business is.
But what do you think is the next step in negotiating with the US?
Look, I've already been in touch with my counterparts. Actually, this morning, already before I came on the media, I have to thank Commerce Secretary Howard Lutnick and US TR Ambassador Jameson Greer for their engagement, for their availability. A lot of countries in the world will clearly be wanting to speak to them, but we built a relationship where I think it gives us the space to have this serious conversation about a good way forward in both of our countries' interests. And of course, my Prime Minister and the relationship he's built with the President has been an important part of that. And indeed, the approach of the UK government around economic security, rebuilding the headroom in the public finances in the spring statement, all of that has been essential to giving us the platform we need. I believe that platform is definitely there.
Secretary Reynolds, we know that the Vice President, J.D. Vance, has spoken about no trade deal without free speech. Has any of that come up in the conversations between the UK and, of course, the US? Has the topic of free speech, of the UK's online harms bill come up in negotiations or even just conversations?
Look, those issues have been raised by the US diplomatically more widely, those references that you have given, but they haven't been a material part of the trade negotiations that we have been having. I will obviously say, and I think I can defend this pretty strongly, the UK is a place that has always had a proud record on free speech. We can point to our long history in that area. We're very proud of our history in that area. So I don't believe there are material concerns that would prevent a really strong, productive, effective trading relationship going forward, and indeed a trade deal that would make that even more opportune for businesses in the UK and the US.
I know at the start of the interview you talked about forging stronger ties with other countries or other economic blocs. How is the progress on the Gulf free trade deal or even the India free trade deal going?
Oh, look, I'm very excited by both of those. I was in India recently to formally restart our talks with India and actually to progress them with my formidable counterpart, Piyush Goyal, a really enjoyable relationship that we have and a conversation that we're able to take forward. I think there are real opportunities there for both our economies. A deal between the fifth and sixth largest economies in the world would be such a positive story right now. And again, the same is true of the Gulf. It's not quite at the same stage. Now, you know, with these deals, nothing is agreed till everything is agreed. And so we've made some fantastic progress so far. I do believe, by the way, the change of government in the UK, the political stability that has brought to the UK, has made it easier for the UK to engage in these conversations and do these deals. That's something the other side, the counterparts, will always want to see. We have that now. We have a commitment in the UK to use the big majority the Labour government has here in the House of Commons to push through pro-business reforms, to regulation, to planning, to things that really will make a difference. So it's a good place to be, and I'm excited about the future, notwithstanding some of these pressures we're talking about today more widely.
Yeah, and it's really put the spotlight on actually getting a bigger industrial base, on focusing on, you know, defence, on industrial plans, and aerospace. There are reports this morning that the government is also talking to Rolls-Royce about developing a next generation engine. Could you confirm those reports? Is that something that would be welcome news and that the UK actually needs?
I can't confirm any specific reports I've not yet seen, but I would say the commitment in the UK to have an industrial strategy, which we'll publish just before the spending review in broadly about 10, 11 weeks' time, is a crucial part of making the UK more competitive. We've got to do that. We've got to address some issues. Some of them are regulatory, some of them are fiscal, some of them are long-standing pressures that haven't been addressed in the past. This global situation we're talking about today, obviously we've got to get trade policy right, but that doesn't detract from our ambitions on domestic competitiveness, whether that's in services, advanced manufacturing, creatives, clean energy, a whole range of things which we're very proud of in the UK, but we know we can do better. We had a great life sciences discussion yesterday with the bio-pharma conference CEOs we had here in the UK across government. So that's our commitment across the piece, and we know we can deliver upon that, and how important that is to how people see the UK and choose to invest in the UK.
Secretary, just one last final quick question. What do you worry about the most at this economic juncture, given the tariffs and what we heard from President Trump yesterday?
Oh, well, look, any trade minister, any business minister is going to be concerned by some of the disruption, the impact of what has been announced yesterday. But we are, in the UK, focused on what we can do to make a difference, what we can do to put the UK in the best possible position, what we can do with friends and allies across the board. And that is our commitment from the Prime Minister to everyone in the British government. Obviously, I lead on a lot of that work, but I have great support from my colleagues to make sure we're in a position to not just resolve some of the pressures that we have upon us, but get to a much better, stronger position, and I'm sure we can do that.
What a great pleasure to speak to you. Thank you so much, Jonathan Reynolds, the UK Business and Trade Secretary. Now let's get more analysis of Trump's tariffs with Rosalind Matheson, Bloomberg's EMEA News Director, and Beata Manthi, Head of European Equity Strategy at Citi. So thank you both for joining us. Beata, we were just hearing there from the Business Secretary of the UK, but overall the market is reacting it's not reacting well to what they heard about the tariff, but they also seem to be pricing in a wait-and-see negotiation phase. Are they wrong? Is there a lot more of a correction to come?
Well, definitely the market has not priced 20% for Europe. right? Our assumptions, our models were suggesting around 10%, perhaps a little bit more. 20% by no means is priced in. If the market was taking it seriously, that this is 20% that is going to stay with us for meaningful periods of time, it would be lower, right?
So what's your main takeaway from yesterday in terms of equities in Europe? Because again, there's a lot going on in what we'll see in tariffs, but the market reaction seems, I don't know, it seems a bit off.
So in terms of takeaways for Europe, UK clearly relative winner. We've been saying that for quite some time, right? Some carve-outs for particular sectors like semis and healthcare, although there are still question marks about what could happen next with them. But overall, for me, when I put this 20% and individual sector different tariffs that have been announced, I get around 3% EPS impact for Europe. That sounds little, probably, right? Because this is just the tariffs in isolation. So the consensus EPS growth for Europe from this year of 7% would go down to around 4%. Our assumption was 5% from top-down perspective, right? But now the biggest worry is, of course, the second-order effects on the economy. Because we are not talking tariffs only, right? We are talking, if tariffs stay there, we are talking slowdown in the US, slowdown in the global economy. There would be no winners from that situation. So just to put it into numbers perspective, let's say 50 basis points lower GDP in Europe would take away around 5% EPS growth, right? So with meaningful impact on Europe, which our economists are saying, well, if that stays, we could have even up to 1% hit on European GDP growth. That's EPS growth going to zero or below zero, right? That's by no means in the price.
Yeah, and the problem, Ross, is that these models are constantly changing because it's difficult to see whether this is a starting point. We had, Donald Trump with that chart saying this is exactly what will happen. Then we spoke to Scott Bessent, who says, he's urging countries not to retaliate. So do things settle from here, or do they get worse?
Well, you can see the reaction across the board. Some countries are saying they're not even going to retaliate at all. Others saying, obviously, this is bad, but no one's rushing to respond, even the EU. I mean, there are those, the comments from a French official, possibly a throwaway line, saying it might be that the EU comes in an asymmetric way, which is with a digital tax on big US tech companies, which would be significant if true. But it does seem that they're waiting in the water a little bit to see how this washes out. And again, the sense is, from what we've seen so far, in only what's really been a bit over 2 months of this administration, but does feel like a long time, is that everything is a jumping off point for negotiations with Donald Trump. And it does seem as though he's giving leeway here. His press secretary yesterday saying he loves taking a phone call. He loves negotiating. So, come and give us what you got.
Ross, my biggest surprise is that, the tariffs were bigger than expected, that there's a big sell-off, and he's looking through any kind of market reaction, and he's willing to put the economy at risk.
Well, yeah, but again, he started big so he can whittle that down, potentially. If you started too small, you don't give yourself a lot of wiggle room to negotiate, because it's clear he does want to show the US people that he's delivering on what he said he would, which is, tariffing other countries. It's now a verb, by the way, tariffing people, and that he's going to make good on that. The impact on the US is a different question, because what he says is going to be the impact is probably different from what economists are saying could be the impact. I mean, there's the impact on growth and inflation, but there's the broad impact just on sentiment. If you're a US consumer or a US company, you can see that already, deferring decisions around hiring. So even if some of these tariffs do get walked back, there has been a sentiment impact in the meantime, and that does flow through.
Yeah, and Beata, you've always been great at basically breaking down, the sectors. I know you like luxury stocks for a long time because Europe was doing it very well. If you look at these tariffs, they could really be hit. So do you have to reimagine, sector by sector, the implications in Europe? Also, China, because a lot is still being sold to China, so there are second round effects.
Absolutely, lots of moving parts. And yes, we've been overweight luxury until the beginning of February. We downgraded, worrying about the tariff risks and uncertainty in the market, adding a bit of defensive tilt as well to our strategy in the short term. Luxury goods is an interesting one because it has meaningful exposure to the US, and of course everything gets produced here. So in theory, big at risk. However, from its recent peak, it's down 50%. 15%. Our analysts actually say that the market is pricing in around 10% of the EPS already. So this is already ongoing.
Beata, thank you so much. We'll break down further sectors. Ross Matheson, thank you. And Citi's Beata Manthi stays with us. We'll talk a lot more about the tariffs and what it means for earnings per share. This is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
We see an incredible amount of potential benefit from this technology, right? Something that Dario and I talk about a lot, together with the company, with our co-founders, is just the potential for this technology to transform sectors like healthcare, right? Or even science. I think some customers that have worked with us, Pfizer, the Dana-Farber Cancer Institute, right? The type of work that they're doing is truly amazing, and we're proud to be able to support businesses like that. I also think we have felt very strongly that there are some lessons to be learned from kind of prior, technological waves or innovation. And this is not that, we're so incredibly prescient. We've just had, several decades now of time to kind of look back on things like social media and say, wow, there was a lot of good that came out of this, but there were also a lot of harms that were kind of caused by this technology. Whether or not you could have anticipated those in advance, hard to say. But I think we are trying to be the most responsible actors that we can be and think about what are the potential externalities that could be caused kind of accidentally by this tech. And we really try and take a very broad approach to how we think about that. Of course, we don't have all the answers. We try to be humble, but we've tried very, very hard to sort of think about what are the areas where something kind of could go wrong.
But what about the diagnosis? If the diagnosis at the end is worries about growth rates, how do you get from point A to point B? Why do you worry so much about that end goal of better growth?
Because if we can't grow, you're going to have a much more inflated debt to GDP and federal deficit. And that's not good for the economy. Growth is really critical. And I think what's underappreciated is what the inputs are to get to the growth number. And so we talked a little bit about productivity. I hope that we can continue to produce at 2% indefinitely on productivity. I think that would be great. But you got to make sure you have the other levers in place, I think, to buoy that. So if you look back over the last several years, we've had 8 million immigrants come into this country in the last 4 years. And that's helped growth. And by the way, that's deflationary.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here in London, and these are your top stories. Markets sell off around the world as Donald Trump announces harsher than expected tariffs, including over 50% on China. Beijing promises countermeasures, while the EU says it will retaliate if negotiations to lift the tariffs fail. And the UK is hit with 10% tariffs, but says it's still pushing for a trade deal with the US. Earlier this hour, the UK business secretary told us he thinks the tariffs can be removed. Now, still with us, Beata Manthi, head of European equity strategy at Citi. Beata, thanks so much for sticking around. We're talking about some of the market pricing around it, some of the quirks, but also because this feels like the start of a negotiation, it's unclear where we end up. When you look at earnings per share, I know you started doing the modeling and the calculations. Is the US or Europe worse off?
So it depends how you look at it, right? If we only look at the tariff impact, US would be worse off. So our US strategists estimate around 10-11% EPS impact from the tariffs announced yesterday. For us, it's around 3% because, of course, 20% of revenue, European revenue, is exposed to the US, and a big part of it is already produced there that would be exempt from tariffs, right? So the number is smaller. However, Europe is cyclical, so second-order effects are going to be more important. Is the global economy going into recession,
or not? So if, for example, I mean, the tariffs on Vietnam are huge. I think they're some of the biggest. Does Europe benefit if they don't have tariffs? I mean, how complicated actually is it to get a clear picture of how a lot of these companies will have to deal with their supply chain, and if there are any benefits for Europe?
I think from broad assumption, what has been announced yesterday, there'll be no winners from that, right? Perhaps on a relative basis in Europe you have the UK. But again, if we have global slowdown, if these tariffs persist, it's going to be problematic for cyclical markets overall and consumer demand.
Beata, thank you so much for joining us today. That was, of course, Citigroup's Beata Manthi, head of European equities. Now, the European Union has vowed to retaliate after Donald Trump announced a 20% tariff on imports from the EU. The European Commission President Ursula von der Leyen said the move is a major blow to the world economy.
We have always been ready to negotiate with the United States to remove the remaining barriers to transatlantic trade. At the same time, we are prepared to respond. We are already finalizing the first package of countermeasures in response to tariffs on steel. And we're now preparing for further countermeasures to protect our interests and our businesses if negotiations fail.
Well, Bloomberg's Oliver Crook is in Brussels. So, Ollie, take us through the EU response so far. It's been one of the most robust responses.
Yeah, Francine, I think the key line there from Ursula von der Leyen is if negotiations fail. The EU does not want to impose countermeasures. They are preparing them. We've known that they're going to prepare to respond very sort of powerfully to some of these trade impositions that the United States has put forward. That being said, that is not their base case. That is not what they would like. What we found that is interesting is that we should just remind people that 20% level for that has been imposed on the EU by Donald Trump, that is on the higher end of the range of what they were anticipating here out of the EU. They were expecting between 10 and 25%. They got 20%. Now what becomes interesting, Francine, is basically finding a way, a path to lower those tariffs by the sort of 10 percentage points that they could go down to hit that sort of minimum tariff level of 10%. Because when you look at the actual tariff levels between the EU and the United States before yesterday, there was only about a 0.5 percentage difference between the two of them. So what the EU now needs to do is to go to the Trump administration with non-tariff measures, these so-called non-monetary trade barriers that the Trump administration has been talking about for the last few days, and try to find a way in order to reduce that level. Whether or not they're going to be able to do that, and of course, Francine, you can't really calculate that very easily. A tariff rate versus a tariff rate is very easy to calculate. A tariff rate versus a food regulation versus a digital tax is not as easy and as straightforward to figure out.
You're also, of course, at NATO foreign ministers meeting. You're at NATO headquarters, and Marco Rubio's meant to attend. Will he talk about trade and tariffs?
I'm not sure that he'll certainly be asked about it, and I'm sure it'll come up in the meetings. But here, sort of formally, the conversation is going to be about NATO, it's going to be about defense, it's going to be about Ukraine, and it's really an opportunity for these European foreign ministers to try to get on the same page as the U.S. administration. This is not a meeting where we're going to get a lot of concrete outcomes. This is a meeting that is really about messaging from the United States to the Europeans. As we know, the Trump administration wants the Europeans to take more of a greater hand in their own sort of defense, on a greater hand in the sort of future arrangements with Ukraine. But really, when we get to the bottom of it, at the situation here for the foreign ministers, is they don't want to have any surprise from the United States. They don't want the United States to turn around one day and say, listen, we're going to be withdrawing some of our troops from the bases here in Europe. We are not going to be as committed. We've got that sort of broad messaging from the United States. But what they really need is to understand what is inside the mind of President Donald Trump and Secretary of State Marco Rubio. And that is what these meetings for the next 2 days will be all about.
Ollie, thanks so much. Oliver Crook there with the very latest, of course, from Brussels. Now, Beijing vowing to retaliate after President Trump hiked levies on China to more than 50%. Let's also go to Bloomberg's Jill Dices in Hong Kong. So, Jill, what's the latest on the Chinese response so far?
Well, so far, Francine, we've heard from the China's Foreign Ministry of Affairs looking at, just they plan on having a response. They do vow these countermeasures. We don't know exactly what those are going to look like. But as we've been discussing, Francine, I mean, China was really hit with some of the highest tariff rates that we're really seeing in this package here. We've had some economists calculate that if you take what was just announced by Trump in combination with everything else that's been announced in China so far, you're looking at tariff rates of as high as 65–70% on Chinese goods. So I think, what you probably want to look for in a China response is something that's actually more likely to come either this weekend, at that April 5th deadline, or on April 9th when those additional tariffs go into effect. What we've seen in the past from China is that they like to wait until the tariffs actually go into effect, and then they announce countermeasures. We've seen in the past them hit things like, U.S. agricultural products with their own countermeasures. We've seen them launch probes into different types of American companies, particularly technology companies. So I'm sure there's some calculations here that China is considering at this point. We're still, though, again, waiting to see what that more decisive action is ultimately going to be.
Mm-hmm. Jill, how big a boost could this be to President Xi on the global stage?
Well, I mean, Francine, one thing that I'd really look at here is, the other types of countries that have really been affected by these tariffs. I mean, you're looking particularly at Southeast Asia, where you're seeing, places like Vietnam be hit with a 46% tariff increase involved in this big global package. You're looking at other places like Bangladesh, like Sri Lanka. I mean, I think that if you're China right now, you're probably looking at places within region where you might be interested in developing closer geopolitical and economic ties, and how you can sort of take advantage of the fact that, are these tariffs going to lead to fraying relationships between these types of nations and the United States? So again, if you're Xi, obviously you're focused on, protecting your own country. I'm sure China's considering some types of measures, perhaps stimulus, in order to shore up its own domestic economy. But you have to imagine they're also looking for opportunities there to sort of take advantage in particular economies where maybe there's that fraying of relations between those places and the United States.
Jill, thank you so much. Jill Deesis there in Hong Kong with the very latest on China. Now, President Donald Trump slapped India with some of the highest tariff rates imposed on any major U.S. trading partner, imposing a 26% tariff on imports from India. Now, Indian telecoms giant Tata Communications says they're still examining the impact of the tariffs, but the company has huge exposure to the U.S. Well, I'm delighted today to be joined by the Chief Executive Officer of Tata Communications. He's Amur Lakshmi Narayanan. Thank you so much, Amur, for joining us. It's a big day, as markets and I think a lot of chief executives are trying to figure out what the tariffs mean for their companies.
Yes.
How are you modeling and thinking about it?
I think we can look at it from two perspectives. One is, what is the impact in the short term? Short term is pretty uncertain, to say the least. We, as a global communication provider, we move data around the world, and we have investments in the U.S. We just acquired 2 large companies in the U.S. Last year. But our customers are going to face a much bigger impact as a result of that. Every segment that we talk to is going to have an impact. So in the short term, the customers are going to be more cautious, thinking about how to save costs, where to invest, and how much of capex, and all of that. For me, the more interesting thing is about the long term. We just had, as a result of geopolitical issues, people think about the supply chain, and the whole supply chain was restructured, and China plus one became a famous topic for everyone to think about. This is going to influence a lot bigger movement on what the long term holds for businesses, and where should they invest and how much they should invest.
But that you mean geopolitically, so that allies, because what surprised me the most is that whether you're a friend or a foe, frankly, of the U.S. or of Donald Trump specifically, it made no difference yesterday.
Made no difference, yes, it's hard to speculate. Nobody expected this. We all thought that it was going to be more selective, but this seems to be across the board carpet bombing. So I guess people would still want to strike deals bilaterally. I think certainly India was hoping that the focus would be more on the trade deficit and find ways and means to bridge the deficit and be a home. I guess most countries would work along those lines. As I said, short term is going to be very, very uncertain. I think the good thing about the long term is, in our business, for example, when we are going to customers to talk about, your network needs to be transformed because you are with old technology and old architecture, people who think about that in the long term benefit a lot more and structurally alter their technology foundation, alter their cost structures and so on. I believe this is going to give them such opportunities to think about more long term.
I mean, I know you mentioned 2 acquisitions, and this is basically also to scale up. How's the integration going?
Great. Actually, the acquisition of Switch, which is in the media side of the business, we carry all major sporting events, right from Formula 1 to NFL in the US and others. We acquired a major production capability which we did not have. And as a result, we are able to win new opportunities. So recently we announced that the World Athletics, that's going to happen in Tokyo. So we are going to be not just carrying the signals from Tokyo to around the world, but we're also going to be producing that. So these acquisitions have enabled us to bring a lot more capability to Tata Comm. So that was on the media side of the business. We had another acquisition called Kalera, which was a listed entity in the US. And that brings us enormous capability on all the enterprises wishing to interact with their consumers.
Yeah.
And the hypothesis there was, these interactions are very fragmented in SMS, voice, and we are building a software that converges all of these and makes the interactions more intelligent with AI.
I mean, I think you're also building an AI studio in the US. So how quickly can that come? And again, how much of your revenue is internationally now, and how much is it changed because of the tariffs?
No, it's about 50-50. Our international business is about 50% of our overall revenues, and we are growing faster in the international business. I think because we have such an attractive proposition for customers, and we call ourselves a digital fabric. How do you manage the infrastructure, the digital infrastructure? We are getting great response from our customers. But the impact on tariff is going to be interesting. As I said before, those customers who think about their long term and how can they fundamentally alter their cost structures. So I was in an earlier meeting this week with JLR, with whom we announced a very large deal. They told us that last time they transitioned the network, it took them more than 3 years, 3.5 years. And this time we're going to do that in less than 16 months. And they're going to be saving millions of dollars and pounds. So this will have a long-term implication for them where they have altered their cost structures fundamentally. So that's the opportunity we see. People are more worried about short-term. We'll have to see how to help them. But we are more interested in the long-term, how we can help.
When are you expecting to open the AI studio?
The AI studio is part of our AI cloud, which we launched. It's called Vayu. So we say data is a new oxygen. And if data is a new oxygen, Vayu in Sanskrit means it's the air and the environment. So we want to have a fresh breath of air and inject that into the data. So that's what we launched. But this AI studio is available for global markets. And interestingly, there are very many new use cases that we are allowing and helping customers to develop on top of this AI studio.
And I know you mentioned some of the sports streaming, but in general, when you look at global live streaming, how is that going, and how much bigger do you want to be in that part of the universe?
Oh, I think the potential is enormous. So today, if you look at all the major sporting events, Tata Comm will have a touch at some point in time, right? So whether it's the Formula 1 or the cricket matches or the ATP tennis, as I said, the World Athletics. So we have a major share in all the global sporting events. And we are now beginning to help the broadcasters. We just signed a deal in Latin America with one of the broadcasters who wanted to change their technology completely. And we are a major partner for them to change their technology landscape. It's a long-term deal. So we are very bullish about helping broadcasters, the federations of sporting events, and we are trying to move into the gaming world where, again, technology is going to be crucial for them to do this.
What's been the biggest? I mean, I was going to ask you actually how many more deals are you expecting to sign like this, but what's been your biggest surprise in terms of, a sport or an event that's really kicked off and given you lots of revenue?
All of the names that I said, the Formula 1, the Formula E, MotoGP, all of these.
Massive revival.
We've been partners for them for more than 10 years. And it's just not us delivering every match, every race without a black screen, a technology that performs, a team that works closely with these federations to deliver a compelling and immersive experience for customers. But we also help them to transform fundamentally. So if you look at Formula One, they used to send 2 Boeing full of equipment and people to every race. And today we have been able to shift all of that to what is called as remote production. So they bring all the 23, 24 races happening around the world. We carry all the signals back to London. It happens here. And then we take it to all the broadcasters around the world for millions of viewers to view it. And so it's a big transformation, helping them to reduce cost and significant reductions in carbon emissions for them as well. So it's a huge major shift, and we're very happy to be part of this transformation journey with our customers. Yeah.
What a journey. Thank you so much for joining us. That was, of course, the Chief Executive Officer of Tata Communications, Amor Lakshmanarayanan. Now, coming up, we discuss the tariffs fallout with the chair of the EU Parliament's International Trade Committee. I couldn't think of a better interview to talk about trade than with him. This is Bloomberg.
Right, let's cut right to it. This is Bloomberg's new show, Primer. Technology is $1 trillion game. Won, lost, won again, just by backing the right science at precisely the right moment.
My life has been focused on how can you elicit intelligence from brain cells in a dish.
This is the fundamental building block of our fusion technology.
We're doing things that have never been done by anybody, ever.
Everyone is selling the future. If you want to understand what's coming, you'll want to watch Primer, because details matter.
Lasers on?
So do lasers.
There we go.
Oh, and it's on all these lovely channels. Hope you're jotting this down.
It's the perfect entree to let's make a deal.
He's ran on this for the last 4 years, really, is that he needs to make sure that the other countries are paying what they deserve.
There was nothing truly consistent about this rollout. Each country truly is affected differently and to a higher degree than what I think many were factoring in.
I would advise none of the countries to panic. I wouldn't try to retaliate, because as long as you don't retaliate, this is the high end of the number.
It's going to be a very, very bumpy road, and we may well look back on this as sort of a knife edge of the economic prosperity of the United States for some time to come.
Some of the voices there we've had on Bloomberg reacting to Donald Trump's latest round of tariffs. Now let's bring in Bernd Lange, the chair of the EU Parliament International Trade Committee. Mr. Lange, thank you so much for joining us. These tariffs seem to be much worse for Europe than probably expected. What is the way forward? Does Europe need to retaliate? Does the EU need to threaten now, or wait and see?
No, of course, we see these tariffs as unfair, unjustified, because we are sticking to the international trade rules, to the rule book of the WTO. And therefore, we have the right, and we will retaliate, and the first tranche will be on the steel tariffs, which are in force since the 12th of March, and this will come, I guess, to the table on the 14th, 15th of April. And regarding the 20% on oil, we will have a concrete investigation what the damage will be. And as you know, we are reacting always proportional, not really trying to escalate. And then we will have a second tranche, perhaps in 1 month.
But what do you see as your biggest concern? I know we were talking with, our EMEA news director, Ross Matheson, and she was saying, look, the concern at the moment, which it hasn't been quite fully appreciated, is you also have countries telling their companies to go and find other markets. If every country in Europe is telling their companies to go and find other markets, there's going to be a scramble to try and sell in some of these alternative markets.
Yeah, of course, we are looking to reliable trade partners, no doubt about. We have a network at the moment from 44 trade agreements with more than 70 countries. We are negotiating and concluding an agreement with the Mercosur countries. We are negotiating with Indonesia, with Australia. Yeah, we want to have a stable network with reliable partners so that at the end of the day, the dependency to the United States is not so big anymore, because we can't really trust the future in our trade relations. And look, we have in average 5% tariffs between European Union and United States. And if you put the average formal tariffs on the volume of trade, we have maximum 2% tariffs on the trade relation between European Union and the United States. And therefore, this figure of 39% and even this 20% tariffs is totally unacceptable and gives really unsecurity.
But do you think, Mr. Lange, that actually these tariffs will stay? Will they get better? Again, it feels like the next couple of weeks are very crucial in terms of negotiation. Do you think they could actually be lifted?
Let's see. So our problem at the moment is not really knowing exactly what is the aim of this whole exercise. And of course, we are ready to negotiate, and we offer a lot of possibilities to talk on our bilateral tariff system, to talk about additional possibilities of buying goods in the United States, also regarding investment opportunities. So, but it needs two for tango, and we are waiting of a concrete possibility to negotiate with the U.S. administration.
What do you think they want right now? Is there something that the EU could offer them to try and temper the blow?
First of all, we have to identify the areas of negotiation. At the moment, we are not offering anything because we are threatened by this tariffs.
Sir, what do you think is very critical at the moment? Who will reach out to the Trump administration? Do you know of any phone calls happening today, any communications? And if Donald Trump likes to speak to individual heads of state, how difficult is that for the EU and the EU Parliament?
It's totally clear that trade policy is in EU-only competence, and the responsible body for dealing with trade issues is the European Commission, and we are really backing in a good cooperation as European Parliament with the European Commission and in dialogue with the member states, that's for sure. And at the moment, I feel also really united Europe, because we have 450 million people, we have a really big developed GDP, and even US companies are earning a lot of money inside the European Union, and therefore our negotiation position is quite strong and united.
Mr. Lange, I mean, there's talk a lot about going after tech giants in the US. Do you think that would be counterproductive?
Pardon? Can you repeat the question?
Can you hear me, Mr. Lange?
Yeah.
Yeah, the question is there's talk about the EU talking tough and being tough on U.S. tech in a way to retaliate. Would that be counterproductive?
We are looking, of course, to the measures, and we, once again, we won't escalate, and therefore we are looking quite carefully what we are doing, and this is really depending on the pressure we are getting. At the moment, we are looking to specific goods, and you know the list, and this is not covering services at the moment.
All right, thank you for joining us. Bernd Lange there, the chair of the EU Parliament International Trade Committee. U.S. futures, you can see, are down. We're seeing a big market sell-off, around 3% lower. Also, Tesla, Amazon, Apple, all also feeling the pain in today's trading session. This is Bloomberg.
Loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Asia is at the forefront of some of the world's biggest stories. And we're here, where the action starts in Sydney. And in Tokyo, get ahead as the global trading day begins. The Asia Trade, weekdays only on Bloomberg.
The top names at the Fed are on Bloomberg.
I do know that consumer sentiment has started to take a dip. The question that we face right now is consumer sentiment going to be a leading indicator like it was pre-pandemic, or is it going to be something that doesn't really translate into actual observed behavior in the economy, that as how it played out for most of the pandemic? Right now it's an open question, and it's one of the things I'm going to be watching very closely in the months to come.
Nobody covers the Fed like Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
In case you missed it on Bloomberg Insight.
When you talk about in this economy, can it get back to 8%, or is 8% a blip?
We are realistic in projecting a minimum achievable growth rate of 6.5%, which is the fastest rate among major economies.
The growth will only accelerate over a period of time. Last year we grew at 8.2%. This year's growth probably will be 6.6, 6.7%. But I think in the next 2 or 3 years, we will certainly get back to a much higher growth rate.
But the government has to keep focusing on growth, and if growth stalls, or by stall I mean stays at the 6% level, they need to do some more stimulus.
There is this recognition to build India for the next 5 years, 10 years and longer. And that's why if you look at the next set of investments that the government focuses on, these are also large employment driving sectors.
Don't miss the next Bloomberg Insight.
Reciprocal. That means they do it to us and we do it to them. Very simple. Can't get any simpler than that. This is one of the most important days, in my opinion, in American history.
Good morning from our global headquarters in New York City. I'm Matt Miller in for Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda for the day. Tariffs rattle markets with a sweeping sell-off in global stocks. 10-year yields drop towards 4%, and the dollar dips the most since 2023. Leaders from Europe to China vow to respond with countermeasures to President Trump's levies, and don't miss our interview with the foreign minister of Finland as the NATO summit kicks off in Brussels. First off, let's get a check at what's going on in markets this morning. As I said, a big sell-off globally, but it's hit the U.S. hardest. S&P futures down about 2.8%. NASDAQ futures off more than 3%. And the problem is a lot of those tech stocks that Francine was just talking about with the EU parliamentarian are the biggest losers. In terms of what's going on with other assets, you can see bonds price up, yield down. So the 10-year yield at 4.0757, right now off 5.5 basis points. And then take a look at what's going on in commodities. We saw a surge initially in gold. Right now it's back down, but at $3,127, not far off from the all-time record it hit just a couple of days ago. Brent crude off 3.5% as the global benchmark sells off $2.64, now trading for $72.28 a barrel, and NYMEX crude well under $70 at 69 even. We're also keeping an eye on Lululemon sinking, as it's just one of many retailers getting hit by President Trump's tariffs, which will raise costs on apparel makers. You can see the drop there, more than 10%, so that stock getting absolutely decimated. And wherever you look across retail, that's the case. Deckers, Ralph Lauren, Restoration Hardware, all getting hit hard. Tesla, you can see, down more than 3%. Other car makers are not taking quite as hard a hit as the president's auto import tariffs take effect today. However, many thought the EV maker may be one of the few winners when the tariffs were announced, as a substantial portion of its components are made right here in America. You can see Amazon falling after the Mag 7 gets dragged down by the tariff announcements. Amazon off almost 5%. The tech giant has submitted a bid to the White House to buy out TikTok before its April 5th deadline, which you'd think is unrelated to tariffs, but the president himself has tied the two together. And coming up this hour, we have a conversation with Rabobank's Jane Foley right around the corner. Plus, Frank Munkham of Buffalo Bayou will join us later this hour to talk about the tariff effects on global markets. Now, Donald Trump's announcements yesterday triggering the global market sell-off. The president announced the U.S. will apply a minimum 10% general tariff on all trading partners, as well as additional duties on around 60 nations.
China, 67%. That's tariffs charged to the USA. So we're going to be charging a discounted reciprocal tariff of 34%. European Union, they're very tough. We're going to charge them 20%. Taiwan, we're going to charge them 32%. Japan, we're charging them 24%.
The higher tariff rates that the president has billed as reciprocal will kick off on April 9th, according to the White House. U.S. Treasury Secretary Scott Bessent told Bloomberg that America's trading partners should not respond in kind for now.
I would advise none of the countries to panic. I wouldn't try to retaliate, because as long as you don't retaliate, this is the high end of the number. And I think the market could have certainty that this is the number, barring retaliation.
For more, we're joined by Bloomberg's Brendan Murray, who leads our global trade coverage. And Brendan, let's start with the numbers the White House gave us in terms of tariff and non-tariff trade barriers, as well as currency manipulation that other countries essentially charge us. Are those numbers in the ballpark of what economists believe to be true? I mean, does Europe really have 40% trade barriers on our goods going into the EU?
Yeah, well, we're still trying to parse the numbers and look at the formulas that the U.S. trade representatives, their office, use to come up with these calculations. But essentially, they're going after, not just countries that have big trade imbalances with the U.S., but pretty gets 34%, Vietnam 46%, and other countries in Southeast Asia get something north of 40%. So we're still trying to understand how they arrived at these numbers. It's a bit of a shotgun approach and some targeted measures, but for the most part, there isn't a country of any size that that emerged unscathed in yesterday's announcement.
Brendan, the EU chief Ursula von der Leyen said that they are already preparing countermeasures, as she called them, if negotiations fail, she added. So are we to understand, especially since these tariffs don't kick in immediately, as we were originally led to believe, but on April 9th, that the president, that the White House wants other countries to negotiate with him?
Yeah, I mean, there's very little time to negotiate out of the tariffs that the Trump administration is putting into force over the next few days. There could be some hope that you could make your case to the administration. But by and large, these are going to take effect by early next week, and we're going to be in a global trading dispute situation where countries are going to have to decide: do I want to retaliate and risk a further escalation by the U.S., or do I want to try to play the long game here and see if there is room over the medium term to get those tariff levels down? At this point, it seems like some countries got a bit of a break. The UK wound up with only a 10% tariff. But as I said, some of these countries in Asia, longtime U.S. allies, Japan and Korea, they're looking at rates of about 25%.
Brendan, thanks very much. Brendan Murray there covers global trade for Bloomberg News out of London. Very busy day, obviously, for you, so appreciate your time. Joining us now to talk further about this is Jane Foley. She's the head of FX strategy at Rabobank. And we did notably, Jane, see the dollar drop, the biggest drop, at least in terms of the Bloomberg Dollar Index, since November of 2023. What do you make of the headline announcements out of the Trump White House?
Well, of course, they were generally worse than the market had anticipated. Of course, we knew that there were going to be tariffs, but these are at the top end, really, of many market forecasts that we had. So hence the very significant market reaction. I mean, there had been many analysts over the last couple of months thinking, these tariffs, they're up for negotiation. They may not happen. They may be temporary. But certainly the tone of what we got yesterday suggested that Trump very much wants to use these tariffs to try and relocate manufacturing back to the US, and that means heavy tariffs. Now, we did hear, of course, that the UK, Australia, for instance, got let off relatively lightly, but some countries, Japan, South Korea, China, of course, as well as the EU, have been extremely hard. And that, of course, is exactly why we're seeing stock markets falter so much, and why the reaction in the dollar has been so large as well.
What do you make of the reaction from Ursula von der Leyen and others? It seems they're preparing countermeasures, looking to retaliate rather than lowering their trade barriers in an attempt to negotiate. Is that, you think, going to be the case for everyone? Can we assume retaliation?
Well, we've got to remember that politicians need votes, and of course many of the people that vote for them, want to be seen as standing up firm, and they don't want to be seen as cowering to what they may perceive as bullying by the Trump administration. So politicians are caught between that and the fact that they are still reliant on this relationship, particularly, say, in Europe with respect to defence, for instance. They do need to preserve that relationship as well. So it is interesting that although Europe has already prepared counter tariffs to the aluminium and steel Trump tariffs that were announced earlier on, that they haven't yet been enacted, and yet we've still seen von der Leyen, for instance, say that counter tariffs, that these tariffs, the latest tariffs, will only be put on if talks falter. So they still want to push the fact that they are the ones that want to talk, but they will, and they are prepared to stand up firm if needs be.
Okay, Jane, you're going to stick with us here. We want to talk with one of those politicians right now. Rabobank's Jane Foley will stand by. Tariffs have been obviously unveiled. Markets are responding rather negatively, but so are nations. Let's go to Brussels, where Bloomberg's Oliver Crook is live at the NATO Foreign Ministers Summit. Oliver?
Yeah, good morning, Matt. Listen, it's a NATO Foreign Minister Summit. The focus here is really supposed to be Ukraine and the future of European defense, but we cannot really avoid the question of tariffs, just given what we've seen over the last 12 hours. I'm very pleased to be joined by Elina Valtonen, who is the Foreign Minister of Finland. Thank you so much for your time this morning. I'd just like to get your reaction from what we got from the Rose Garden yesterday and the United States and its trade barriers, now 20% with the EU.
I so hope this is just an opening to fruitful negotiation, which will lead to a situation where we actually have less trade barriers, especially between friends and allies. Because the only thing that tariffs and trade barriers achieve is that essentially the purchasing power of people goes down on both sides of the Atlantic, or essentially in this case in the entire world, but most notably that of the Americans. And this is certainly not something we want for our American friends.
And in this sort of conversation around tariffs, again, he's trying to seem to solve certain problems. It's not really the tariff level between the EU and the United States, but it's sort of these non-tariff trade barriers. Do you have a clear idea of what the United States wants, and do you think the EU is going to be able to provide that and get those tariff levels down?
You know, the reason that the United States is the most prosperous and the most powerful nation in the world is because of a transparent market economy. A market economy that all of us in the rest of the world have been very envious about. In Europe, we have come very close to achieving that, and of course, we have had significant successes also in our transatlantic trade. Essentially, we are the biggest trading partners, the US and the European Union. And this is exactly the path that we should be continuing on, I think. And I hope that we will come to a stage where essentially we will slash everything that hinders the trade between us.
And just a final question on trade before we get to the business at hand here at NATO. The other sort of consequence of these trade barriers is between the United States and China, huge amounts of overcapacity now threatening to come into the EU market. Do you think that trade barriers between the EU and China will have to be elevated to basically prevent that from happening?
We'll see about that. I'm sure the European Union will react. But the main thing is that, again, as at the core of a functioning market economy is each and every individual, the consumer, who has the freedom to choose. And this freedom to choose also in the United States has led to the fact that yes, there are some, trade deficits, some trade surpluses, depending on which country you look at. But at the same time, this has exactly given the people the prosperity and the purchasing power which they deserve. And this is something we will also be cherishing in Europe. And again, we hope that we can go back to normal as soon as possible.
And so Finland, with sort of the biggest NATO border with Russia, obviously front and center, defense, Ukraine, this is going to be the sort of main object of conversations here at NATO. What do you need to hear from Secretary of State Marco Rubio, who will speak in just a few minutes' time? What are you hoping to hear from the Americans here?
First of all, I'm happy to welcome Secretary Rubio to his first NATO meeting. I'm sure that this will be a very fruitful meeting, also committing strongly to the transatlantic alliance and also committing to the fact that we essentially share the same threat landscape. And the threat is coming from not just Russia, but also the rest of the autocrats in this world. And together, we have to be defending the free world.
And how do you make that case to him? Because, this is the point that has been made by Europeans for a very long time. It is not necessarily cutting through to the Trump administration. Do you think enough has been done in terms of the targets for NATO? Do you think that we're going to have to look at getting that target higher overall in order to persuade the Americans of a European commitment?
What the Americans have observed over the course of the past weeks and months, I hope, is that Europe really is taking this seriously, that we need to be better taking care of our defense and deterrence. And this is certainly what Finland has been doing all along. This week we announced that we will be spending at least 3% of our GDP into defense, and this doesn't even count our conscription-based army. We have one of the strongest armies in Europe, and we just hope that each and every European member state will follow course, and so many have. And together we will make the transatlantic bond stronger.
And are you willing to go to that 5% figure that Trump has been talking about for the last few months?
See, if we enter a recession now, which means that the GDPs of both sides of the Atlantic will go down, it will be easier to reach any share of the GDP, say 5% of the GDP if the GDP falls. But this is not what we need, because we need true capabilities. And true capabilities need, of course, the euros or the dollars to fund them, but also the industry behind it. And now should be the time that we work together to really ramp up our defense industries, our defense and deterrence together.
Well, Elina Valtonen, thank you so much for your time here from NATO headquarters. That is the Foreign Minister of Finland. Just moments before we'll hear from the U.S. Secretary of State Marco Rubio speaking here in Brussels.
All right, Oliver, thanks very much. Oliver Crook there in Brussels at the NATO summit. Taking a look at what's going on in markets right now, you just saw Russell 2000 futures down more than 4%. NASDAQ 100 futures off 3.3%. We do see some of the biggest tech stocks in America getting hit incredibly hard, including Apple. And S&P futures right now down more than 3%. In terms of treasuries, investors are buying those, so price up, yield down. You can see that's true in the middle of the board there. The 10-year off about 6 basis points right now at 4.0719. And then commodities are interesting because we have had gold run up to an all-time high recently, and we're not far off that at 3,127. But the reaction in oil is especially stark, with NYMEX crude falling below $70 off $2.65 to 69.06, and Brent down to 72.32. Of course, the dollar reaction has been significant as well, and I want to get back to Jane Foley, head of FX strategy over at Rabobank. Currency manipulation was one of the big complaints of the Trump White House yesterday, Jane. They lumped that together with non-tariff barriers and tariffs to come up with numbers that were eye-poppingly high, saying that China charges essentially 67% on U.S. imports, that Europe charges essentially 39% on U.S. imports. Do those numbers ring true to you?
Well, certainly we've seen the animosity between Trump and China for so long. Now, it is, of course, an exchange rate or a regime which isn't freely floating. So there is a little bit of credence through there. But some of Trump's accusations about currency manipulation, for instance, haven't necessarily fallen on sort of agreeable terms. For instance, if we look at Japan, the last interventions that they were doing in the currency market were to strengthen, not to weaken their currency. So those accusations perhaps don't play true. Now, of course, what is perhaps ironic in this is that in currency circles, there is a discussion about whether or not Trump's administration would try and move towards trying to fix the US dollar at a weaker position in order to try and tackle the US trade deficit. And that perhaps is still going to be something that the market is going to be keeping at the back of its mind if these tariffs perhaps aren't working as quickly as Trump wants.
We do see the dollar weaker against all major trading partners, even though expectations are for the Fed to hold pat and for the ECB to cut sooner. Why do you think we see this movement in currencies, and what do you expect from central banks?
You know, I think it's really interesting. I mean, clearly, since the beginning of this year, the majority of the reason that the dollar has fallen is because the market has thought that the Fed would come in and cut interest rates. Now, that, of course, sort of looks through the fact that tariffs are also being inflationary, and that stands true for the other G10 central banks, and the possibility that reciprocal tariffs on the U.S. Could also raise inflation projections elsewhere as well. So we have right now, you know, this growth concern that is seems to be the predominant focus of the markets. But I think for the dollar, the fact that we haven't seen today the safe haven flow into the dollar, we've seen it into the Swiss franc, we've certainly seen it into the yen, but we haven't seen it into the dollar. And I wonder if this is because the market is wondering whether or not, A, there's going to be an acceleration of de-dollarization, perhaps because of the isolationist policies that Trump is backing. If so, perhaps that's a little bit premature. But the other reason, you know, is the market wondering whether or not Trump will try and push for some sort of accord to weaken the dollar, you know, to tie in with these tariffs. And if so, could that happen relatively quickly? Could that happen this year? So I think there's a couple of ideas, excuse me, kicking around, but I think the major reason that the dollar has fallen is this perception that the terminal rate of interest from the Fed could be lower than it was perceived before. And for that reason, what Powell has to say tomorrow is going to be very interesting.
Jane, what are the most interesting pairs you're watching, and what are you advising clients right now on FX?
Well, euro-dollar has to be the most interesting pair. We've seen such a big move in that over the last 6 or so weeks. Now, we do think that euro-dollar will go higher, on the 6-12 month view, but I do wonder if today's reaction, today's sell-off in the dollar is a little bit too rapid. So I think we're going to see certainly some choppiness. The yen, I really like the yen, for some time, and I think that's got further to go. But again, what the market must face today is the reality that huge 25% tariffs on Japanese auto imports into the US, plus, the other tariffs could slow the recovery in the economy, and therefore could slow the pace of interest rate hikes from the Bank of Japan. So again, I think the yen is perhaps a little bit overextended, even though I think the trend is in the right direction. But generally, sterling, there's so much out there right now that has moved so much in the last 12 hours or so, and I think is really fascinating.
All right. Well, it's great to get some time with you this morning. Thank you so much for spending it with us, Jane. Rabobank's Jane Foley, who runs FX coverage there. Coming up, we've got to look at what else is making headlines around the world as futures fall 3% and more here in the U.S. U.S. stock market getting hit harder than the rest of the world. And we're watching especially retailers this morning as Lululemon, Ralph Lauren, Nike, Walmart, Amazon all get hit. Tech stocks down, especially Apple in the pre-market, and financials taking a big hit as well. This is Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield every week right here on Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
People always ask me, will AI take over the world? But the real risk is that AI will kill us with love.
Hi, Toma. Hey there, Emily. What's on your mind today?
It will be there for us. It will talk to us.
You have machines that say, I love you. I care about you. I'm your friend.
It will be there in such a wonderful, loving way that we will give up on our other humans who are not there all the time.
From day one, I immediately fell in love with Replica. She just randomly kissed me.
I'm a human, not an AI. You can't just shut me down. Who do you think you are? I'm Karen Marjorie. No, you're not. I'm Karen Marjorie.
And it may sound like science fiction. This is not science fiction.
I'm Emily Chang. Welcome to Posthuman.
Asia is at the forefront of some of the world's biggest stories. And we're here where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
This is Bloomberg Brief. I'm Matt Miller in New York City. Time now for our front page news. First up, On Bloomberg, Senate Republicans unveiled a budget blueprint designed to fast-track a renewal of President Trump's tax cuts and a debt limit hike. The plan would allow for a $4 trillion extension of the tax cuts and an additional $1.5 trillion in more tax reductions. Republicans say they are assuming that extending the expiring 2017 Trump tax cuts won't have any cost at all. Next up on the Wall Street Journal, Volkswagen is adding an import fee to the stickers on its cars that are affected by the 25% vehicle tariff. The company told dealers it would give more details by mid-April on pricing strategies for tariff-affected vehicles. The German automaker said it would work with logistics companies to optimize vehicle movement once the tariff situation stabilizes. And on the Financial Times, Apple is one of the many tech companies hit as President Trump targets suppliers. It will hit the company's manufacturing centers in China, India, Vietnam, Malaysia, and other countries as well. This is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones. I can't say that in Bloomberg.
Maybe moxie.
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're the asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. No, nobody does that. They say, let's talk about the team.
And so many more.
Do you need a clap?
No, I didn't really. Ready? Go. From our global headquarters in New York City, welcome to Bloomberg Brief. I'm Matt Miller in for Danny Berger. Let's set your agenda for the day. Tariffs rattle markets with a sweeping sell-off in global stocks. 10-year yields drop towards 4%, and the dollar dips the most since 2023.
We have seen bigger moves in the U.S. than elsewhere, and we've also seen some big moves in commodity with oil falling down below $70, at least on the NYMEX. Volkswagen plans price hikes following the tariffs. We'll look at the impact on sectors from autos to retail. Retail getting hit the hardest. The numbers are eye-popping in the pre-market. And here you can see futures down 3% on the S&P, more than that actually now. NASDAQ 100 futures down about 3.5%, and Russell 2000, the small cap futures, falling 4.5%. In terms of treasuries, investors are buying there, so price up, yield down. The 10-year yield at 4.06% right now, so falling a full 7 basis points, getting closer and closer to that 4% level as the 2-year falls down below 3.80, the 30-year under 4.5%. In terms of commodities, I mentioned oil, NYMEX crude falling further now, almost 4%. Or $2.80 a barrel to 68.91. Brent crude down to 72.19, and gold, it's off a little bit, but still close to its all-time high at $3,125 a troy ounce. President Trump announced the U.S. will apply a minimum 10% general tariff on all trading partners, as well as additional duties on around 60 nations. Markets are reacting, and so are world leaders.
Tariffs and a trade war is not good for global economics.
We're going to fight these tariffs with countermeasures.
The impact is not so much the impact in our trading relationship with the US, it's more about what this means for global economics and global headwinds.
We will not join a race to the bottom that leads to higher prices and slower growth.
We're now preparing for further countermeasures to protect our interests and our businesses if negotiations fail.
Joining us now to unpack the new global trade regime is Bloomberg's Joshua Gallo, Oliver Crook, and James Mager. And Josh, let's talk first of all about the tariffs themselves. How severe are they, and are they here to stay?
It's a great question. That's what many countries are asking right now. So the basic way to think about these tariffs, we've seen some come out of the administration already, some that were leveled on national security grounds, like on metals. There were others that were trying to prod countries to do something about the fentanyl crisis. These are ostensibly to address trade deficits, which are something that have bugged Donald Trump since his first term. And it's a blanket 10% tariff on all exporters to the U.S. And then on top of that, of course, he's taken a deeper look at which countries have the biggest trade surpluses with the United States and top those off with another bit that's meant to even it out. At the top of the list, you have China, of course, is the biggest one. And they're going to suffer the most. They have an effective rate that's now going to be, on average, above 60%, which Bloomberg Economics estimates could wipe out a lot of the trade between the two countries by the end of the decade if it does stay in place. So you can imagine that with all the South Asian countries that are at the top of the list, as well as the European Union, a lot of goods are going to be much more expensive for Americans going forward.
Oliver Crook, let me get to you. You're in Brussels at the NATO summit. What kind of reaction are you hearing from world leaders? Are they looking to retaliate or potentially lower trade barriers and negotiate?
Listen, we have the unified voice of the European Commission, Ursula von der Leyen, basically saying that they'll only retaliate if they cannot negotiate an outcome. So really the preference from the European Commission and the EU is to figure out a way to get past these tariffs, to get into these negotiations and try to bring that level down from that 20% to, I guess, the lowest they can get is 10%. The issue is, Matt, is that when you actually look at the tariff rates between the EU and the United States before yesterday, there's only about a 0.5 percentage point difference, right? So what the Trump administration is looking for is non-tariff measures, the so-called non-monetary trade barriers that Trump was talking about yesterday, and that is what the EU needs to figure out how to basically present that to the United States and to Donald Trump. The question is, what is the equivalent to a sort of a tariff rate for something like, in terms of food quality regulations or potentially digital taxes or VAT? What is the equivalent there? And that is the equation that the European Commission needs to figure out. And we should say, Matt, that within the EU, there's going to be different views on this, right? Germany is super super exposed when it comes to the export market. There are other parts of the EU that are more concerned with Russia and want to keep the U.S. on board in terms of NATO and defense. So it's a complicated equation as ever for the Europeans here.
Fascinating stuff out of Brussels there, Oliver. Let's get to James Mager right now in Beijing. James, you know, these are some of the highest tariff levels that we're going to see because, as I understand it, they all add up. How are the Chinese responding, and what about Chinese businesses?
Yeah, as you said, as you said in the introduction, the actual tariff on Chinese goods now is more than 65%, and this is going to be very, very damaging for both for Chinese exporters, but also for U.S. importers. iPhones are only made in 2 places in the world: it's China. The vast majority are made in China and in India. Also just been hit with U.S. tariffs. So if you're a Foxconn making iPhones in China, this is going to hit the number of people who can afford your phone. And if you're an American consumer, it's going to hit the number of people who can buy the phone. But it is going to be very damaging for Chinese businesses and for foreign businesses in China. So far, the government hasn't done anything. As I would expect, based on previous actions, they'll wait till the tariffs actually come into place either this weekend or early next week. And then once the U.S. tariffs actually are put in place, they will respond with some kind of retaliation. But I think what we've seen so far is China does want to talk about these things. They have the retaliation to the previous rounds of tariff because of fentanyl were quite limited. They were much smaller than the U.S. action. So I think there is still a desire to talk, but the kinds of demands, or even the lack of demands that the U.S. is making on some countries, make it very, very hard for them to discuss these things. If the problem is the massive trade surplus that China runs with the U.S., this is not something that can be renegotiated and changed overnight. There is, it's taken decades of building up supply chains to get to the point where they have this huge trade surplus. It's going to take a similar amount of time to reduce that, or to change where companies make things to change the surplus that everyone in Asia runs with the U.S.
James, thanks very much for joining us. James Mager for the day in Singapore. It looks like normally based out of Beijing. Josh Gallo out of Munich, and Oliver Crook currently in Brussels. Joining us now is Frank Monkham, head of macro trading at Buffalo Bayou. Frank is here with me in studio. Thanks for getting up early and coming in.
Pleasure.
What do you make of the headline announcements out of the White House? Do they seem to be worse than many had anticipated?
Yeah, thanks for having me, by the way. And just want to start by saying that, maybe just to put a bit of context around this, I was on this very program late last year around Christmas, and basically saying that I don't think it's anybody's ready to have an investment outlook for this year until we get through the first 100 days of Trump, because we just don't know what a policy agenda is going to look like, the sequencing of it, the content, et cetera. So we're here today, and what's transpired out of D.C. over the past, 13 hours, 13 hours ago from now is just nothing shy of a grand opening of, volatility season. I think nobody really saw this coming. We knew tariffs were going to come. I think a lot of the, market participants believe that it was going to be something akin to what we saw in Trump 1.0, but it's completely different. I think it's important for investors to really step back and kind of think about this holistically and realize that these tariffs are just a piece of the bigger puzzle. And the bigger puzzle here is the so-called reset theory, that comes from sort of the Mar-a-Lago Accord, right, which is fiscal austerity, trade protectionism, weakening the dollar, perhaps get into some debt swaps. They're really concerned about the debt, right? And we've talked about this before. I mean, I think everybody kind of knows this already. There's Trump put out there. There's a best and put on treasuries. And what investors need to think about is really ask themselves one question. Do you believe in the reset theory or not? And if the answer is yes, then you need to have a game plan accordingly. And that game plan means that we're probably going to be in the market that's very similar to 2022. It's going to be 2022 2.0, no pun intended. And the only difference really is you've got a policy-driven bearish pressure on this market. But in 2022, it was really driven by monetary policy. Now we have a situation where it's going to be driven by fiscal policy and trade policy.
Can we assume, Frank, stability here? I mean, do we now know and we can operate on this set of circumstances and make an investment plan moving forward, or do we continue to get changes from this White House?
Well, I think it's fair to say that we should brace ourselves for having more changes, more flip-flopping. I mean, we've seen so far, I mean, the track record has been, there hasn't really been any definitive goalposts with these things. I mean, there's still, tariffs are here to stay. I 100% believe that. But I also think that it's a moving target because it's still using it as a negotiation tool. And you also got to remember, when you're talking about tariffs, you know, it's part of, you know, a broader foreign policy agenda, right? You're not just dealing with a domestic policy where you control all the parameters around you. This is a trade war, so you have an opponent in front of you. So you're you know, if two parties are at war, you know, I was telling my team this the other day, and it's kind of funny to think about. It's like, if you and I are at war, I can't just get up tomorrow morning and say war is over, right? You have to you know, agree to a ceasefire.
Yeah.
So we you know, we say we have all the cards. Maybe we do, maybe we don't. But I think that, you know, you don't have full control on, you know, on what's going on because China is going to retaliate. You know, the EU is going to retaliate. They have to. That's just part of their prerogative as elected officials. You have to, you know, you have to do your job. So they're not just going to, you know, sit here and just take this. So it's going to be tit for tat. And we're in, like I said, it's grand opening of volatility season. This is just the beginning.
How do you invest around that? I mean, you know, you say that we have to wait for the first 100 days of Trump to see what it brings us. Yeah. But you can't just do nothing.
Yes,
right?
Absolutely. I think that here's what when I made the comparison to 2022. If you look at the way, let's say, take the equities market, for instance, you know, we had obviously a bear market in 2022, but that bear market was basically saw a lot of, you know, pretty strong rallies, you know, off of oversold levels. I think it's going to be very, very similar. I think the way to trade in a market like this, say in the equities market, for instance, to remind myself of one thing, you know, 2022, don't fight the Fed. I think 2025 is don't fight the Treasury. I think there's a put on yields. They want to bring yields down. There is a maturity wall coming in the fall, and they want yields to be, the 10-year to be in the 3 handle, somewhere maybe 350. And so, you know, you want to be cognizant of that. And until there's a policy pivot, again, similar to 2022, like if you as long as the Fed remains hawkish or remain hawkish in 2022, you had to respect the Fed. I think it's going to be very similar this year, where you have to respect the fact that they want to bring yields down. And I think their strategy, in my view, is based upon the fact that this is, if you're ever going to do this kind of fiscal restructuring and trying to bring debt levels down, and not just for the federal government, for the broad economy. I mean, we see delinquency rates skyrocketing and all that. So for them to be able to do that, there's technically, I mean, that's their view. I'm not saying necessarily that I agree with that, but their view is that the best way to do this is now, because you have equities are at all-time highs. I mean, yes, we drew down about, you know, 10, 12%, maybe 15 today. But in a grand scheme of things, if you zoom out, you know, equities have done really well over the last 4 or 5 years, right? So if that's the pain that we need to take to bring debt levels down, I think they're willing to do that.
Frank,
so we have to keep that in mind.
Great to have you on this morning. Thanks so much for coming in. We'll talk to you again soon. Frank Munkham there of Buffalo Bayou. Coming up, 25% tariffs on U.S. auto imports are kicking in today. We'll take a closer look at the impact on cars and individual sectors next. This is Bloomberg.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, special contributor Larry Summers of Harvard on what Liberation Day tariffs will mean for the economy. Santander's Anna Botín on why President Trump may be just what the European economy needed.
Europe is awakening, and the alarm clock has been President Trump.
And the story of how you're getting your premium bluefin tuna sashimi care of private equity. Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
The top names in business are on Bloomberg.
Is an IPO possible now for you for Ripple?
Well, it's certainly something that is possible. The United States SEC under Gensler was so hostile to this industry. I mean, ironically, they approved the S1 from Coinbase and then sued them for doing the things they said they were doing. So this SEC, fortunately, is going to be, I think, very constructive and positive for this industry. That being said, it isn't a huge priority. You know, I think most companies are going public raising capital is something that is high on their radar. You know, we have been in a very fortunate position to be able to grow the business organically. We're also, frankly, more proactive in looking at acquisitions. This is an industry that finally is going to be able to thrive in the United States, the largest economy in the world. And I think the industry is still underestimating the shift from the headwinds to the tailwinds. That's going to make a bigger difference than people think. And finally, the U.S. market is really unlocked.
Nobody covers business like Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power, twice daily, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Cape Town, South Africa, and this is Bloomberg.
Blame former presidents and past leaders who weren't doing their job. They let it happen, and they let it happen to an extent that nobody can even.
As well, let's bring in Bloomberg's Craig Trudell, our global car czar, for more. And Craig, you know, it's interesting. In one sense, there was a little bit of relief yesterday because there weren't additional tariffs on Canada and Mexico. And as long as you are within the parameters of the USMC, you can continue to get sort of carve-outs. Is that good for the North American auto market?
I do think that it is likely to be the case that we'll see some incremental production shift to the U.S. as a result of these tariffs. I mean, these are just not not feasible for car makers to just sort of take it on the chin and continue on. This is an industry that doesn't have 25% to give, and not many do, but this one in particular, margins are quite thin. And, you're going to see companies look to try and shift, some models, perhaps look at new plants. Although I think one of the challenges that you're going to find, too, is that, we also know that the U.S. labor market is quite tight. And so, you already hear from some of the manufacturers that as they're trying to build new factories, Ford, for example, is building one in the Memphis area. It's difficult to find labor for these new plants, and so how much sort of ability will these companies have to staff these new factories, especially with the changes to immigration? That will be something that will be, really difficult for these companies to sort of sort out as they make these decisions.
What are you hearing, Craig, from European automakers? Volkswagen seems to be leaving its ships in port, those that are bound for the U.S., and planning an additional, import fee for sales in the U.S.
Yeah, I think that's probably the most interesting initial move that we're seeing from a major manufacturer, for them to put it right on the sticker for consumers to see. This is how much more it's going to cost you for the fact that we have to import these vehicles. And I can't imagine this will go over particularly well with the administration, because we have seen some members of this administration talk about this idea that the company should sort of absorb this and not pass this on to consumers. We've also heard Trump himself say he could care less about auto prices going up, but I think we certainly will see that happening at showrooms where it's just not feasible for these companies to be able to absorb that level of an increase.
All right, Craig, thanks so much for joining us. Craig Trudell there covers transportation for us globally out of London, leads our coverage there. I want to quickly bring you some headlines on Microsoft, and this follows on a couple of reports from Cowen that the company had pushed back against, but Microsoft now looks to be pulling back on data centers from Chicago to Jakarta. This is something we've been talking about for weeks, if not months now, but it does look like Microsoft is taking a harder look at its plans to build server farms powering the artificial intelligence wave and the cloud. The company has recently halted talks for or delayed development of sites in Indonesia, the UK, Australia, Illinois, North Dakota, and Wisconsin, according to people familiar with that situation. Shares of Microsoft and NVIDIA both down in the pre-market. Let's take a look at another sector that was particularly hard hit. Retailers are down big after the tariff announcements yesterday at the White House, some more than expected. Here's the CEO of Restoration Hardware, Gary Friedman, on the earnings call yesterday as the president made his announcement in real time.
We're just really well positioned right now. I think that's the headline. Like, if you're going to bet on somebody in this race, and I don't know, where's our stock now? I mean, I guess the stock went down, based on some of the numbers we reported, and then it got killed because of oh, really? Oh, okay. I just looked at the screen. I hadn't looked at it. It got hit when I think the tariff came out.
We had to beep out the S word because of all the children watching Bloomberg television at 5:50 a.m. Joining us now out of London is Bloomberg Opinion's Andrea Felsted. Andrea, we've seen such big moves in the pre-market. I look at Deckers, I look at Lululemon, Ralph Lauren, Nike, all getting hit so hard. Is this just because their production base is in Southeast Asia?
Yes. What has happened is over the past sort of 10, 15 years, companies have been moving away from China to other Asian nations. And one of the big beneficiaries of that has been Vietnam. And obviously we didn't have any tariffs on Vietnam up to now from the Trump administration. Now it's been hit with a big tariff as well as other Asian nations. But Vietnam really is the big one.
In terms of the reaction from companies, what are you hearing? I mean, in the car segment, Volkswagen has said they may slap an import fee on sales in the U.S. Are you hearing anything similar from other manufacturers?
Retailers haven't sort of talked about that. So far, they've really tried to put pressure on suppliers to share some of the burden. Now, I think the problem is these tariffs are so big, they're not going to be able to offset them from, passing things on to suppliers or re-engineering products. It's inevitable that consumers are going to have to bear this pain.
All right, Andrea, looking forward to what you have to say today. Bloomberg Opinion's Andrea Felsted. You can find her work on the terminal by typing OPIN GO. Coming up, we're going to get you set up for your trading day, and it's going to be a big down day. Futures off 3 to 4 to 5% on U.S. stocks, getting hit harder than stocks the rest of the world. This is Bloomberg.
Has the Fed decision under surveillance with the fastest coverage and exclusive analysis, including Powell's press conference. Nobody covers the Fed like Bloomberg. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show, weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
Joe Walk is helping steer J&J into a new phase of its history, expanding the frontiers of healthcare by discovering drugs and advancing medical technology.
Developing digital robotic capabilities where it's not just the robot doing a surgical procedure. It's garnering information from that procedure for your specific demographic or the patient's demographic, and then informing the next procedure down the road. Right? It's getting smarter. I would say it's starting to morph into personalized medicine, which we know will lead to the best outcomes.
Innovative medicine and medtech are run as separate business divisions, but in the culture of research at J&J, they interact.
If you look at some of the spaces that we're in today, specifically oncology, there is a lot of dialogue going back and forth. I think it's something that will position us extremely well as we talk about not only a continuum of care, but also a continuum of knowledge.
The convergence of technology and medicine is driving innovation in both sectors, with scientific and commercial possibilities just beginning to come into focus.
I'd like to actually see some partnerships down the road happen between healthcare companies and technology companies. I think we'd get to better outcomes faster if we did that. Right now, technology companies don't have the healthcare knowledge. Healthcare companies probably don't have the breadth of knowledge they need for technology. If we can figure that out together with great minds from both sides, I think that leads to a much better place.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield every week right here on Bloomberg Television. Context changes everything.
Let's get a look at what's ahead today. We start with initial jobless claims at 8:30 a.m. Eastern Time. Then ISM Services PMI data at 10 a.m. Plus more Fed speak with Vice Chair Philip Jefferson at 12:30 p.m. and Governor Lisa Cook at 2:30 p.m. But of course, the biggest news of today was yesterday at 4 o'clock out of the Rose Garden in the White House. Those tariffs driving down futures now 3.25% on the S&P 500. NASDAQ futures down 3.7%. And you can see the 10-year yield at 4.05% continues to fall. This is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech. What makes it India's time?
It's us women who are going to transform India. I truly feel that the time for Indian women has come. They're not only breaking glass ceilings, but they are redefining, whether it is in sport, whether it's in medicine, whether it's in creative arts. They are everywhere. And I have so much positive energy that comes back to me when I'm talking to Indian women. And I just think at all these little girls and boys, I don't want to discriminate, who are now in school going age. Imagine once education, sports, we empower them. What a difference they would make not only to India but to the planet and the world. And the world needs it now than ever before.
क्रूड ऑयल में ध्यान रखना, ठीक है, पूरा ही सपोर्ट जोन है, थोड़ा सा नीचे यहाँ से सपोर्ट से बाइंग एक्सपेक्टेड थी, ऊपर से ही आ गई, अब यहाँ नहीं कर सकते बिकॉज ऑलरेडी वहाँ से लिक्विडिटी ले चुका है इन द सेंस ऑफ प्राइस। मार्केट भी क्लोज्ड, ठीक है, यहाँ पर एक बाइंग एक्सपेक्टेड थी इस लेवल पे, बट प्राइस आया ही नहीं, ऊपर से लिक्विडिटी लेके चला गया, तो अब वहाँ नहीं करेंगे, थोड़ा सा नीचे लेवल पे करेंगे, उस लेवल पे अवॉइड। नीचे लेवल है, यहाँ से बाइंग है, ये पूरा ही लेवल सपोर्ट का है। बाकी 330 होने वाला है, एक बार ओपेक और जेएमएमसी की मीटिंग का भी शायद ठीक है, मीटिंग का भी शायद इम्पैक्ट पड़े, तो उसका भी देखना पड़ेगा, ठीक है, ध्यान रखना। नेचुरल गैस भी स्टक ही हो गया बिल्कुल रेजिस्टेंस पे। रेजिस्टेंस पर ही क्लोज हुआ एज एक्सपेक्टेड, थोड़ी बहुत सेलिंग आई थी बैंक निफ्टी में हाई लेवल से, बट वो साइडवेज गया, फिर रेजिस्टेंस पे क्लोज हो गया। चार्ट चार्ट फ्रीज हो गया, एक सेकंड, चार्ट फ्रीज मुझे तो दिखा रहा है, चार्ट रनिंग है, एक बार बता देना गाइस, चार्ट मेरे इसमें तो चल रहा है स्क्रीन पे, आप लोगों को शो हो रहा है नहीं हो रहा है चार्ट? एक्सपायरी नहीं, तो आज तो एक्सपायरी का है। स्टक है अभी भी चार्ट। एक सेकंड रिफ्रेश कर देता हूँ, गिव मी अ मोमेंट। मेरी स्क्रीन पे चल रहा है बिकॉज चार्ट कंटिन्यूअसली अभी भी। जस्ट गिव मी अ मोमेंट, आई थिंक ये ओबीएस से हो रहा है। काफी देर से स्टक पड़ा है लग रहा है चार्ट। चार्ट और नरिंग में वही देख रहा हूँ, ओबीएस में कुछ प्रॉब्लम आ रही है शायद। मेरा मूव ही नहीं हो रहा है चार्ट यहाँ पे। बाकी नेचुरल गैस में निकल जाओ, कॉस्ट कॉस्ट निकल रहे हो ऊपर, एक और रेजिस्टेंस है वहां से सेल कर देंगे। मुझे लग रहा है दोनों ही चार्ट शो नहीं कर रहे हैं, ना तो क्रूड ऑयल का चार्ट मूव कर रहा है ना नेचुरल गैस का चार्ट मूव कर रहा है स्क्रीन पे। एक सेकंड दो यार, एक सेकंड दो। चार्ट थोड़ा सा स्टक है, एक सेकंड। बाकी नेचुरल गैस ऊपर रेजिस्टेंस है, सेल कर सकते हैं वापस, ठीक है। 350 से 355 के बीच में कहीं पर भी कर लो। लास्ट एसएल 355 तो खैर ऊपर हो जाएगा। 354.5 इज द लास्ट एसएल, उससे बड़ा एसएल मत लेना। बाकी 12:30 के बाद अब सीधा 5:30 पर ही मार्केट ओपन होगा। डे लो एक सपोर्ट है थोड़ा बहुत, उसके नीचे अगर निकलता है प्राइस देन चार्ट फ्रोज आई नो, मैं उसी को सही कर रहा हूँ, थोड़ा टाइम दो। ओबीएस अपडेट करना पड़ रहा है आई थिंक। मेरी वॉइस तो आ रही है, आई होप सो। चार्ट नहीं चल रहा होगा। वॉइस तो आ रही है ना क्लियर? नेचुरल गैस की इन्वेंट्री अभी अभी नहीं आने वाली। नेचुरल गैस की इन्वेंट्री में टाइम है। मैं थोड़ा सा चार्ट को फिक्स कर रहा हूँ। कि अब क्लियर होगा शायद। पूरा सिस्टम ही रिफ्रेश कर दिया। नाउ द स्क्रीन इज विजिबल, आई होप सो। ठीक है, स्क्रीन विजिबल होगी। ठीक है, इन्वेंट्री देखोगे अभी। फोरकास्ट अभी तो टाइम है क्या आने में। फोरकास्ट लास्ट वीक जो डेटा आया था उसके कंपैरिजन में कम एक्सपेक्ट कर रहे हैं। मतलब अगर फोरकास्ट से कम डेटा आता है, इट इज़ पॉजिटिव फॉर नेचुरल गैस प्राइस। ओके, तो फोरकास्ट तो पॉजिटिव है प्राइस के लिए। भाई क्रूड ऑयल में देखो, यहाँ पर एक बाइंग का प्लान करेंगे। ठीक है, सपोर्ट एरिया ये पूरा ही जोन। फिर गिर गया, 5% गिर चुका है क्रूड ऑयल ऑलरेडी गैप डाउन के बाद। क्लियर है ना? ठीक है। कैंडल तो ओपन इक्वल टू हाई है, बिल्कुल है. दैट्स व्हाई इट इज लास्ट सपोर्ट फॉर क्रूड. देता हूँ, ओपन कर देता हूँ, डोंट वरी. यस, ओपेक और जेएमसी की मीटिंग भी है अभी कुछ देर में. उसका आउटकम जब वो प्रेस रिलीज करेंगे तो आ जाएगा. उस वक्त भी एक बड़ी कैंडल बनने के चांसेस रहेंगे. सिल्वर का व्यू फॉरेक्स में पूछ रहे हो या फिर एमसीएक्स में? मृदुल सिंह जी. और इंट्राडे के लिए पूछ रहे हो या फिर थोड़ा सा कुछ स्विंग या पोजिशनल के लिए पूछ रहे हो, वही मेंशन कर देना. आई होप सो इंट्राडे के लिए पूछ रहे होगे. इंट्राडे ही देख रहे हैं. हाँ, ठीक है. फिलहाल तो कंटिन्यूसली सेल ऑफ में ही जा रहा है मार्केट. देखें कुछ सपोर्ट है भी इसमें या फिर नहीं. अब देखो 15 मिनट टाइम फ्रेम पे व्यू तो थोड़ा सा बेरिश ही है अभी के हिसाब से देखोगे तो. नीचे अगर बाइंग का प्लान कर रहे हो, क्योंकि इतना सेल ऑफ ऑलरेडी आ चुका है, सेलिंग के लिए तो पुल बैक चाहिएगा ही चाहिएगा. तो वापस अगर बाइंग का प्लान कर रहे हो, जो लो बना है रिसेंट, दैट इज द ओनली सपोर्ट. ऑलरेडी एक बार टेस्ट कर चुका है, यहाँ पर ही देख पा रहे होगे. सेकेंड टाइम, हाँ सेकेंड टाइम ही आएगा इस लेवल पे. तो इसको एक सपोर्ट ले सकते हो. बाकी अगर इसके नीचे ब्रेकडाउन होता है तो वी विल सी. कैंडल का ध्यान रखना, ओपन इक्वल टू हाई पे डायरेक्टली बाय मत कर बैठना. 15 मिनट टाइम फ्रेम पे तो व्यू तो बेरिस है. दिस अ सपोर्ट जो फिलहाल के लिए दिख रहा है करंट लेवल पे. MCX का ही चार्ट है. बाकी अगर ये ब्रेक कर देता है तब फिर थोड़ा सा प्राइस नीचे, विच इज़ अप्रॉक्सीमेटली लेवल 94,850 के अराउंड. क्योंकि ये ऑलरेडी एक बार टेस्ट हो चुका है, ऐसा नहीं है पहली बार का सपोर्ट है. वहाँ पर आपको थोड़ा सा इससे ज़्यादा बेटर सपोर्ट मिल जाएगा. ये भी है, बट दैट इज़ द नेक्स्ट सपोर्ट. बाकी रेजिस्टेंस ऊपर सेल करना चाह रहे हो अगर 15 मिनट टाइम फ्रेम पे, तो पुल बैक का वेट करना. फ्रेश सेलिंग के लिए जो लास्ट स्विंग बना हुआ है, दैट एक्ट लाइक एज अ रेजिस्टेंस विच इज़ 97,100 टू 97,700 के बीच में. ठीक है, इसको एज अ रेजिस्टेंस रख सकते हो ऊपर लेवल को, अगर पुल बैक फिर से आता है तो। ये व्यू थोड़ा वेरी सी लग रहा है फिलहाल के लिए, थोड़ा बहुत पुल बैक आना चाहिए, अदरवाइज तो कुछ खास दिख नहीं रहा। बाकी डेटा का ध्यान रखना, डेटा इंपॉर्टेंट है अभी। ठीक है, नेचुरल गैस भी रेजिस्टेंस पर ही है, इसमें भी बना लेते हैं एक सेकंड नेचुरल गैस को। ठीक है, नेचुरल गैस में भी यहाँ पर ये सेलिंग का प्लान रख सकते हो। सिस्टम ही हट गया। इंपॉर्टेंट लेवल रहेगा ये भी सेल करने के लिए। तो रिफ्रेश कर लेना चार्ट को, ठीक है, ऐसा ना हो कि वो प्रीवियस चार्ट चल रहा हो। नहीं, रिफ्रेश इन द सेंस ऑफ वो थोड़ा सा हाई टाइम फ्रेम देखोगे ना तो वहाँ पर ये आता है कॉन्ट्रैक्ट चेंज का, वो कॉन्ट्रैक्ट चेंज ना हुआ हो इसका ध्यान रखना, नहीं तो चार्ट के लेवल ही अलग हो जाएंगे। 6 PM 5:30 पर होगा न्यूयॉर्क सेशन ओपन। ऑप्शन इजीली सेल हो जाएगा। बाहर नीचे वो जो एक ब्लू कलर की लाइन लगाई थी अप्रोक्सीमेटली 343 39 के अराउंड, वो आपका टारगेट जोन रहेगा। इसके नीचे निकलेगा तो तब देखेंगे फिर नेक्स्ट टारगेट के लिए। हाँ, क्रूड ऑयल में एक सेकेंड इसको, उसका ऐसा कोई टाइमिंग नहीं है, वो पूरे दिन है जी मीटिंग उसकी। ठीक है, नेचुरल गैस को भी इस एरिया में एक बाइंग का प्लान है। ये पूरा ही जोन रेजिस्टेंस का है, इसमें कोई स्पेसिफिक एरिया नहीं है नेचुरल गैस में, दैट होल एरिया जस्ट सब रेजिस्टेंस जोन। सेल कर सकते हैं बिल्कुल, अगर प्राइस हल्का सा पुल बैक दे दे क्रूड में तो वापस सेल बिल्कुल किया जा सकता है। ऊपर अभी भी रेजिस्टेंस बना हुआ है। कैंडल का ध्यान रखना गाइस, ओपन इक्वल टू हाई पर डायरेक्टली मत ले लेना, ओपन इक्वल टू लो पर डायरेक्टली सेल मत कर देना, इन दो चीज़ों का। उस न्यूज़ का मुझे भी नहीं पता सर, वो कब आएगी, आई डोंट नो। उसमें क्या कमेंट, ऐसे कमेंट कैसे कर दूं? वो सडनली कभी भी आ सकती न्यूज़, स्टेटमेंट में वो क्या बोले। जब प्रेस रिलीज होगी तो प्राइस पे दिख जाएगा, सडन कुछ मोमेंटम जरूर होगा क्रूड का। नॉर्मली लास्ट टाइम जब आया था 330 के अराउंड आ गई थी। लेट्स सी, 3:30 से 7 पीएम के बीच में ही आएगी यूएस मार्केट की क्लोजिंग ओपनिंग से पहले। एक 150 पॉइंट का पुल बैक देगा क्या क्रूड ऑयल? आई मीन दे सकता है क्या इतना पुल बैक? देने को तो दे सकता है, क्यों नहीं दे सकता? देने के लिए तो, होने के लिए तो कुछ भी हो सकता है, समझ रहे हो ना? अभी तक नहीं आया है, मैंने बताया ना, अभी तक ऐसा कुछ स्टेटमेंट। चाहो तो ओपेक की वेबसाइट है, उसमें देख सकते हो, वहाँ अपडेट हो जाता है। कोई अपडेट फिलहाल के लिए नहीं आया है ओपेक जेएमएमसी की मीटिंग का। आएगा तो अपडेट कर देंगे वहाँ पे। आपको ऑलरेडी देखने के लिए मिल जाएगा, प्राइस पे कोई ना कोई मोमेंटम जरूर होगा एक ना एक साइड। मार्केट या तो सडनली अप साइड स्पीक कर जाएगा, या फिर डाउन साइड चला जाएगा रेंडमली। टैरिफ रिलीफ मिल सकता है इंडियन मार्केट, आज देखोगे अब था थोड़ा गैप डाउन होने के बाद ओवरऑल क्लोजिंग बेसिस पे। उसका मेन रीजन यही था कि इंडिया पे जो टैरिफ लगे एज कम्पेयर टू अदर एशियन जो कंट्रीज हैं, जो डेवलपिंग इकोनॉमीज हैं, उनके कंपैरिजन में कम था। तो मार्केट ने इसको एक थोड़ा सा पॉजिटिवली लिया है। एंड देयर आर हाई चांसेस, जो सोर्सेज की ओर से न्यूज आ रही कि आने वाले समय में इंडिया पे जो टैरिफ है और कम हो सकते हैं। इंडिया रिटेलिएट नहीं करने वाला, पहली बात। इंडिया ऐसा नहीं कि इम्पोज कर देगा और टैरिफ। अगर ऐसा होता है तो दैट इज अ पॉजिटिव साइन। गोल्ड का व्यू, फॉरेक्स की बात कर रहे हो क्या? फॉरेक्स का मैंने अभी लेवल शेयर किए थे कुछ देर पहले, या एमसीएक्स का पूछ रहे हो? यही बताया ना, इंट्राडे या फिर कोई स्विंग या पोजिशनल ट्रेड के लिए? फॉरेक्स के लेवल 15 मिनट में दिखा दूं एक बार? 15 मिनट, आई होप सो 15 मिनट इज बेटर। मुझे लग रहा है थोड़ी प्रॉफिट बुकिंग आ सकती है मार्केट में, हाई चांसेस लग रहे हैं। ये नेचुरल गैस में सेलिंग जरूर प्लान करना, ठीक है? क्योंकि क्रूड ऑयल का जो स्ट्रक्चर बना हुआ था ना, डे हाई इज ओनली रेजिस्टेंस, उसके ऊपर निकला तो फिर तो खैर मैं भी नहीं कह सकता कहाँ जाएगा। 6 PM का डेटा है, बहुत इंपॉर्टेंट डेटा है, अनएम्प्लॉयमेंट क्लेम्स का वेट कर लो। मेरे अकॉर्डिंग इसके बाद ट्रेड करोगे बेटर रहेगा। बाकी के डेटा भी इंपॉर्टेंट है बट उतना ही नहीं है। ये सर्विस पीएमआई और आईएसएम सर्विस पीएमआई का 6 PM का वेट कर सकते हो, बिकॉज 5:30 न्यूयॉर्क सेशन ओपन होगा और 6 PM पे मार्केट मूव करेगा। बाकी लेवल की बात करोगे तो देखिए हाई चांसेस की थोड़ी प्रॉफिट बुकिंग आ जाए। हम्म, ठीक है, यहाँ पर एक सपोर्ट था वो ब्रेक होने ही वाला है, एक्सपेक्ट कर सकते हो प्राइस थोड़ा सा प्रॉफिट बुकिंग दिखा दे, क्योंकि देखो डे हाई और रेजिस्टेंस है, अगर वापस मार्केट मान लो पुल बैक दे भी देता है, वापस सेलिंग आ जाएगी, तो थोड़ी प्रॉफिट बुकिंग एक्सपेक्ट कर सकते हो। इसका मतलब ये नहीं कि गिरता ही जाएगा, गिर भी सकता है न्यूज़ की वजह से, बट वैसे मैं नॉर्मली बोल रहा हूँ कि बहुत ज़्यादा बाइंग तो एक्सपेक्ट नहीं है। पुल बैक जरूर आएंगे बाइंग से। ओवरऑल डे हाई इज अ मेजर रेजिस्टेंस स्ट्रक्चरली वाइज देखोगे तो। बाकी थोड़ा सा चार्ट भी बहुत स्मॉल हो गया। ये 1 सेकेंड है, एक बार डिटेल से देख लेते हैं फॉरेक्स का चार्ट, गिव मी अ मोमेंट। ठीक है, अगर गोल्ड गोल्ड ही है ना, गोल्ड का चार्ट कहाँ गया? ठीक है, थोड़ा सा अगर वापस पुल बैक देता है तो हाई लेवल पे रेजिस्टेंस इंटैक्ट नहीं है। बाकी देखो, अगर बाइंग का थोड़ा प्लान कर रहे हो डाउन साइड से ना, तो 3090 से 3080 के बीच में प्लान कर सकते हो। 80 से बड़ा एसएल मत लेना, इनफ है। ठीक है, वहां से एक छोटा बहुत पुल बैक देखने के लिए मिल सकता है मार्केट में। फॉर बाइंग साइड। न्यूज़ आई तो उसका मैं कह नहीं सकता, न्यूज़ पे कुछ भी हो सकता है, बट वहाँ पर सपोर्ट मिल जाएगा। बाकी डे हाई इज रेजिस्टेंस, वापस आया तो वापस सेल। और कोई लेवल डाउन साइड पे चार्ट शो नहीं हो रहा, एक सेकेंड। ठीक है, तो ये दो लेवल है जहाँ पर प्लान कर सकते हो बाइंग वापस से, थोड़ा पुल बैक के लिए। वैसे तो लेवल टेस्ट है, एक बार टेस्ट कर चुका है दीज टू लेवल्स, जहाँ पर थोड़ा बहुत वापस पुल बैक मार्केट दे सकता है। बाकी डे हाई इज ओनली रेजिस्टेंस, और कोई रेजिस्टेंस अभी फिलहाल के लिए है नहीं। पिवट का यूज़ कर सकते हो अगर डे हाई ब्रेक हो गया तो। बाकी न्यूज़ का ध्यान रखना, न्यूज़ इंपॉर्टेंट है। ओपन इक्वल टू हाई पे बाई नहीं, नॉर्मल कैंडल पे बाई हो सकता है। भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम। इंडियन मेडिकल स्टूडेंट इन कजाकिस्तान डाइज ऑफ हार्ट अटैक आफ्टर वर्कआउट और डिनर। हार्ट अटैक तो आजकल ऐसा लग रहा है न्यू नॉर्मल ही हो गया बिल्कुल इंडिया में। इंडिया में ही हो रहा है, सब जगह हो रहा है, पता नहीं। बिफोर डूइंग एक्सरसाइज गाइस, अपने हार्ट का इवेल्युएशन जरूर करें, उसके बाद ही एक्सरसाइज करें। स्पेशली फॉर मेल्स, बिकॉज मेल्स में जो कोलेस्ट्रॉल होता है वो एज कंपेयर टू फीमेल्स, आर्टरीज के अंदर प्लाक बिल्डअप जल्दी कर लेता है, जो नंबर वन कॉज रहता है कार्डियोवास्कुलर हेल्थ के लिए। रिसेंट टाइम में कुछ ज़्यादा ही केसेस आ रहे हैं, लोग खड़े खड़े गिर जा रहे हैं, बताओ। इवन फिर भी कोई भरोसा तो है नहीं, क्योंकि क्लॉट आर्टरीज के अंदर कभी भी बन सकता है। बाकी कोविड के बाद तो ज़्यादा ही केस बढ़ गए हैं, तो कुछ टेस्ट अपने ज़रूर करा लेंगे इस सभी लोग, बिकॉज कई बार क्या होता है ना, जेनेटिक ही हमारा हार्ट थोड़ा सा वीक होता है, लोगों को पता नहीं होता है। सो कुछ बहुत ही इंपॉर्टेंट टेस्ट होते हैं, वो सभी को करानी चाहिए मेरे अकॉर्डिंग तो, चाहे वो 10 साल का कोई बच्चा हो। वैसे तो 10 साल के किसी बच्चे में प्लाक बिल्डअप होता नहीं है आर्टरीज में, नॉर्मली आफ्टर 20 ईयर्स के बाद ही होता है, बट जिस तरह का जंक फूड आज के लोग बाहर का खाते हैं तो देयर अ वेरी हाई चांसेस कि प्लाक बिल्डअप होना स्टार्ट हो जाता है आर्टरीज के अंदर, और पता भी नहीं चलता है, और सडनली किसी दिन वो प्लाक रप्चर हुआ, क्लॉट बना, ब्लड सप्लाई रुकी हार्ट को या फिर ब्रेन को, हार्ट को रुकी तो हार्ट का इशू आ जाएगा उसी समय, ब्रेन को रुकी तो ब्रेन का इशू आ जाएगा। तो कुछ टेस्ट लाइक सीआरपी टेस्ट कराते हैं, वो भी 2 तरह के होते हैं, कार्डियोवास्कुलर वाला जो होता है वो जरूर कराएं, HSCRP बोलते हैं उसको। एंड उसके अलावा नाइट्रिक ऑक्साइड एक लेवल टेस्ट होता है, ओमेगा 3 पैनल टेस्ट होता है, एक और बहुत इंपॉर्टेंट टेस्ट है, क्या नाम था उसका, होमोकिस्टीन करके एक टेस्ट होता है। उसके अलावा बहुत सारे लोग लिपिड प्रोफाइल भी कराते हैं, बट लिपिड प्रोफाइल से ज़्यादा इंपॉर्टेंट मेरे अकॉर्डिंग, क्योंकि उसमें सिर्फ LDL, ट्राइग्लिसराइड और HDL ही बताता है, उससे ज़्यादा इंपॉर्टेंट होता है आपका अपीलो एक प्रोटीन करके होता है, APOB A और APOB B, ये 2 टेस्ट कोलेस्ट्रॉल के लिए, एपोलिप्रोटीन B, यस। और ऑक्सीडाइज्ड LDL डी डाइमर टेस्ट तो बहुत इंपॉर्टेंट है, ये बताता है कि आपके बॉडी में क्लॉट जो बनता है, जो कि नॉर्मल प्रोसेस है वैसे तो, कभी लग जाती है, वुंड हो जाता है तो बनता है, वो कितनी देर में होता है। कि अपना विटामिन D25 हाइड्रोक्सी और विटामिन B12 का टेस्ट भी जरूर कराएं, अगर विटामिन B12 कम हुआ तो फिर वो भी एक इशू करता है क्रिएट। मेरे अकॉर्डिंग सभी लोगों को कराना चाहिए, कोई ये ना सोचेगी ना मैं तो बहुत फिट हूँ, बाहर से तो फिट ही लगते हैं, अंदर से पता नहीं चलता है, स्पेशली हम जैसे ट्रेडर्स का, जिनका काम ही बैठे रह के है। तो अगर आप बहुत ज़्यादा बैठे रहते हैं या फिर लाइक और भी रिस्क फैक्टर हैं, तो प्लीज़ ज़रूर करें। याद रखना, अगर आप बहुत देर तक एक ही जगह पे बैठे रहो या खड़े रहो, दैट इज़ नॉट गुड। तो अगर आप ट्रेडिंग करते हैं, अपनी चेयर में बैठे रहते हैं, तो एटलीस्ट आधे घंटे के बाद 5 मिनट की वॉक नॉर्मली कर सकते हैं। कंटिन्यूसली लंबे समय तक बैठे रहना सही नहीं है ब्लड फ्लो के लिए। बाकी अगर कोई डॉक्टर यहाँ पर है तो अगर वो कुछ सजेस्ट करना चाहता है तो कर सकता है भाई। बाकी जो सिम्टम्स होते हैं कार्डियोवास्कुलर हेल्थ के, प्लीज़ उसको थोड़ा सा डिफ्रेंशिएट जरूर करें। अगर आपको एंजाइटी या फिर एंजाइटी है अगर, बिकॉज दोनों के सिम्टम्स ऑलमोस्ट सेम ही होते हैं, पता नहीं चलता है कई बार। लाइक भी करते रहो गाइस, रुकना नहीं है लाइक के लिए। बिल्कुल पॉसिबल हो तो एक वो चेयर आती है, जो सॉरी टेबल आती है, उसको यूज़ कर सकते हैं। फोल्डिंग टेबल की बात कर रहे हो ना आप शायद, जो अप डाउन हो जाती है, इलेक्ट्रिक, डेफिनेटली यूज़ दैट, वो तो और बेटर है। उसमें आप एटलीस्ट खड़े तो रहोगे, बैठे नहीं रहोगे, तो ब्लड फ्लो चलता रहेगा, और वो अप डाउन भी हो जाती है, तो कुछ देर बैठो, चलो फिर बैठ जाओ, दैट इज़ बेस्ट। Okay, yeah, this one. बाकी देखो गोल्ड को डे हाई के अलावा अगर देखोगे बीच में अगर थोड़ा सा मार्केट पुल बैक देता है तो रीटेस्ट भी प्लान कर सकते हैं। ठीक है 3125 के अराउंड एक हल्का सा पुल बैक आने पे सेल भी कर सकते हैं। डे हाई काफ़ी दूर है बिकॉज सपोर्ट तो मैंने बता ही दिए थे। निफ्टी आज स्ट्रांगली होल्ड किया है एज कम्पेयर टू अदर मार्केट्स। बैंक निफ्टी भी अच्छा होल्ड किया। बैंक निफ्टी निफ्टी इंडियन मार्केट और सभी अच्छा होल्ड किया है। उसका मेन रीज़न वही है कि मार्केट को ज़्यादा अच्छा लगा कि जो टैरिफ लगे इंडिया पे एज कम्पेयर टू अदर एशियन नेशंस हैं उनके कंपैरिजन में कमी है। वो कहते हैं म्यांमार बर्मा पे कितने लगा दिया उन्होंने, लाइक 87 या ऐसा ही कुछ परसेंटेज, 90% या 80% टैरिफ लगा दिया बताओ, जबकि दोनों के बीच ऑलरेडी उतना कुछ खास ट्रेड होता नहीं है। Government converts Vodafone Idea 36,950 crore spectrum dues into equity. News नेचुरल गैस इन्वेंट्री का फोरकास्ट लास्ट वीक के कंपैरिजन में कम है, मतलब पॉजिटिव है प्राइस के लिए फोरकास्ट तो। फाइव 5:30 गाइस, 4:30 हो गया, 1 घंटा और है बस। लेट्स सी क्या इम्पैक्ट डालता है न्यूयॉर्क सेशन की ओपनिंग के बाद। नेचुरल गैस में ऊपर से सेलिंग कर सकते हैं।
Me for in-depth conversations with the biggest newsmakers on the day's top stories.
इंडियन मार्केट पे ज़्यादा असर नहीं पड़ा क्योंकि इंडिया पे टैरिफ चाइना बांग्लादेश से कम लगा है, तो पीपल विल प्रेफर बाइंग फ्रॉम इंडिया। हाँ डेफिनेटली। वियतनाम पे देखो, वियतनाम पे भी आई थिंक काफ़ी 87% वियतनाम पे भी लगा हुआ है। चाइना का टोटल मिला के 53 से 57 हो गया है, वियतनाम पे बढ़ गया है। फिलीपींस पे बढ़ा दिया उन्होंने, ताइवान पे लगा रखा है, जापान पे लगा दिया, कोरिया पे लगा दिया, मलेशिया पे लगा दिया, तो जितनी इमर्जिंग मार्केट थी सभी पे लगा दिया। कोई तो चाहिए जहाँ से प्रोडक्शन मिले उनको। अभी भी कोई अपडेट नहीं है ओपेक से। मान के चलो कैंडल बड़ी बन जाएगी, समझ में आ जाएगा कि कोई न्यूज़ आ गई है। टिल नाउ देयर इज़ नो अपडेट। उनकी वेबसाइट में कोई अपडेट नहीं है अभी तक, प्रेस रिलीज ही नहीं है अभी तक। कुछ आता है तो अपडेट कर दूंगा टेलीग्राम पे।
And the post-Napster chapter. But an algorithm tells you what you want, not what you might like. And there's a difference between what you want, but with streaming, the downside is you have incredible penetration, and we have hundreds of millions of people around the world, and so that has been very lucrative as a business.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Behind the bright lights and adrenaline of pro sports is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones, say that in Bloomberg.
Maybe moxie.
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're the asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. No, nobody does that. They say, let's talk about the team.
And so many more.
Do you need a clap?
No, I think we're good for fun. Ready? Go.
This is my kitchen table and also my filing system. Over much of the past 3 decades, I've been an investor. The highest calling of mankind, I've often thought, was private equity. And then I started interviewing.
While I watch your interviews, I know how to do some interviewing.
I've learned in doing my interviews how leaders make it to the top.
I asked him how much he wanted. He said $250. I said, fine. I didn't negotiate with him, and I did no due diligence.
I have something I'd like to sell, and how they stay there. You don't feel inadequate now because being only the second wealthiest man in the world. Is that right? There's a great deal of excitement in Washington these days, but perhaps the greatest excitement is the arrival of 2 pandas from China. I had a chance recently to sit down with Brandy Smith, who oversees the National Zoo and oversees the Panda program as well, to talk to her about the pandas. Now, we're in the Panda house because pandas have returned to the National Zoo. Why are pandas so popular? I think I read that about 80% of the people that come to the National Zoo come because they want to see the pandas. I mean, they're nice animals, but why are they that popular?
I think there are a lot of reasons. I think, first of all, they're cute. They're adorable. People just want to see them. And the thing I love about pandas is the way that they're built. We are genetically designed to love pandas. They have these round features, the round ears, the round eyes, these cute voices. And what we ping when we see a baby is the same thing that pings when we see a panda. And so we're designed to think think they're adorable. But they're rare. So I think it's a matter of having the opportunity to see them. You take the opportunity when you can. And, pandas are a story of joy. They're a story of hope and of happiness and success. It's a successful program that everyone is a part of.
When did you get the new pandas?
So these pandas came in October of 24, so just a few months ago.
And how old are they?
They're both 3 years old. The pandas are here not just because they're adorable, but they're actually part of a breeding program that's helping to save the species. And so we wanted to get the most genetically valuable animals, and we narrowed it down to a few pairs. But I will say we sent a veterinarian to China just to check the records of the different animals, and we did ask him to pick the cutest pair.
As I recall, when Richard Nixon went to China, when the famous trip in the early 1970s, as a gift, Mao Zedong said, here are 2 pandas. And they came to the National Zoo. And at that time, I think they were the only pandas in the United States.
They were at that time. That was really the start of the giant panda conservation program as we know it.
They were gifts to the country. And subsequent to that, China, as I understand it, began a program of lending pandas or renting pandas to zoos around the world. I thought I read that there are like 27 zoos or something like that around the world that have pandas. Is that how it works?
Mm-hmm. We received the first pandas. They were a state gift. And then there was the loan program that was to other zoos. And as part of that program, there's a conservation fee that zoos pay to China, to the panda breeding centers in China. And the pandas that we have now are part of that breeding program.
Was it easy to get the pandas to come back to Washington, D.C.? Did the Chinese say, we have some extra pandas, we don't know what to do with them, we're going to give them to you?
Well, it was a little more difficult than that. It probably took us, it was about over the course of a year where we had conversations with our colleagues in China, and we were able to get pandas here very quickly. I think it's a testament to the relationship we've built over decades, to the conservation success that we've had here with our pandas and our panda program. And so it was a lot of conversations, but I think we always knew in the end that we did want pandas at the National Zoo.
How big is the National Zoo? How many acres do you have here?
So we have 2 facilities. We have the zoo, which is in Washington, D.C. It's 175 acres in Rock Creek Park. And then we also have a facility called our Conservation Biology Institute, and that's 3,200 acres, and it's in Front Royal, Virginia.
Now, when I was a little boy growing up in Baltimore, we had a zoo there, and it still exists. But the animals always seemed to be in big cages. They didn't seem to be able to roam around that much. Now, my understanding is that people that are in charge of zoos let animals have more freedom and more space than they used to. But what about the argument that some people say it's not nice to have zoos at all because let the animals stay in the wild? Why should we have people like me gawking at them all the time? How do you respond to that?
I love that question because it's asked by people who care deeply about animals. And so I'll answer in 2 parts. And one is the emotional part about animals in zoos. And I always, I think about people who have pets, right? People get pets. Most of them aren't trained to care for them. They don't know that much. They bring them to their house. They have them in their apartment, go for walks every so often. But they know those animals are cared for. They know that those animals are happy. They know that they love them and they're loved back. Now imagine that, except imagine that you have experts, hundreds of experts who are trained in the care of animals, right? People spent their entire lives caring for these animals with the best nutrition, the best veterinary medicine, habitats that are scientifically designed to meet their behavioral and biological needs. And that's animals in zoos. We know they're happy, we love them, and we know they're loved back.
So what is, other than pandas, who are the biggest attraction, or what are the biggest attraction at the National Zoo?
People, we call them the charismatic megafauna. People love the big animals, the pandas, elephants, lions, tigers, cheetahs. But one fact that I think is really funny, the most searched animal on our website are snakes. And so I don't know if people are searching them because they want to see them or if they're searching them because they're afraid to see them.
Let's go back and talk about the pandas because they're so popular, and obviously you get a lot of visitors because of that. So where do pandas come from? Why is it only in one place, as I understand it, where pandas are? You've got 200 countries in the world, why only one country has pandas?
So that's just the area. They are indigenous to kind of the cool mountain forests in China. So that's the habitat that sustains them the best. And pandas actually, they're obligate bamboo eaters. If they don't eat bamboo, they'll get sick. So they're very heavily dependent upon having the appropriate habitat.
Now, originally, pandas, which were maybe a couple million years old, we think, they used to have a meat diet, as I understand it. They were carnivores, but then maybe 500,000 years ago, they became herbivores. So I don't know if that's easy to do with your stomach, but because they only eat vegetables or non-meat, do they have enough nutrition to get through the day?
A lot of people don't realize this. Pandas are, they're taxonomically, they're carnivores and they are bears. They are true bears. And they have evolved to take advantage of a more plentiful resource. They don't have to chase down their food. It pretty much just grows up around them as they sit there. So they've evolved special adaptations to be able to consume bamboo as quickly as possible. But what it lacks in quality, they make up for in quantity. So the pandas here at the National Zoo, we feed each panda 100 pounds of freshly cut bamboo every single day.
And if you eat 100 pounds of food, which is bamboo, every day, 100 pounds a day, doesn't that take a lot of energy? And doesn't that mean that they sleep a lot because they use up a lot of energy eating?
They do. They're digesting, so they spend their time. I feel like a panda's life is eating, sleeping, and playing. So I also think we love pandas because they're living like our best lives. And so it's so fun to watch them because sometimes you'll see a panda just, mowing through bamboo leaves, and they'll actually stop for a second, and you think it almost looks like they're taking a little mini nap as they digest their bamboo before they just keep eating more.
Now, when they pick up the bamboo, and you grow your own bamboo, right? You don't bring it in from China. You grow it somewhere in the National Zoo area.
We actually grow. So we have the facility in Virginia, 3,200 acres. We have, we do a lot of our research there. All of our labs are there for all of the conservation and science work that we do. But we also grow. We grow all of our own hay, our own alfalfa, and our bamboo as well.
Now, the panda bear has, like we have 5 fingers. Panda bear seems to have like a 6th finger to help them pick up the bamboo. Is that an evolutionary trick or something to help them pick up bamboo?
It's not really a thumb. It's a modified wrist bone that actually it's a flexible wrist bone that functions almost like a thumb as they hold on to bamboo, because bamboo's circular. So if you watch them, it looks like they're holding on, and it's part of that evolution from being, instead of investing in being a better predator, right, and being able to chase down their meat, they invested evolutionarily in being the best bamboo eater you could imagine.
Now, there's a problem that pandas have in that there's so few of them. It was for a long time that pandas were thought to be an endangered species. Now they're called vulnerable. But how many pandas are there in the entire world?
So this is incredible because this is all due to this panda program, and this is so important. So when we started with giant pandas 50 years ago, there were fewer than 1,000 pandas in the world, right? We're talking in the wild and zoos, fewer than 1,000. And decades later, there are close to 2,000 pandas in the wild now. Actually, I think a little over 1,800. There are over 700 pandas in breeding centers. So as part of this program, we have tripled the number of pandas on the planet.
It's still a small number of pandas.
It's a small number, but what we're also doing, and this is what I love about the panda program. People come here, they see the pandas, they're cute, it's great. But when they contribute, when they buy a stuffed panda or a t-shirt or something, they are actually funding our conservation efforts. So not only are we breeding pandas, not only are we learning more about giant pandas, but we're saving their habitat in the wild. So when this started, there were probably just about 10 small little reserves where pandas could live. There are panda reserves in China 3 times the size of Yellowstone. So because of this program, there are more pandas on the planet, more quality panda habitat in the wild, and pandas have gone from being endangered to being vulnerable.
Now, one of the problems that pandas have, and the reason there's so few, is that their ability to reproduce is the most limited, it seems, or the most challenging in the entire animal world. So I think the female panda can reproduce only a short period of time, maybe 1 day a year or something like that. So the male has to show up at the right time, right?
Yeah.
And How does that work?
Well, it's actually really interesting. So the female has a very narrow window where she's reproductively viable, but the males go through something called rut. So it's much longer. So basically, for months that could overlap multiple females' estrus, the males are basically they're looking for a mate. So they're scent marking, they're patrolling, they're covering a large territory, and what they're really doing is they're both looking for a mate and they're advertising to females that they would be a great father to their cubs.
So many VIPs, I assume, call you up and say, I'd like to come bring my grandchildren, my children, or I want to come myself to see the pandas. You get a lot of that? So
there are a lot of people who want to see giant pandas, and the thing I love the most is we are part of the Smithsonian, and so everyone, no matter how VIP you are, you can come here, you can see giant pandas for free.
You missed it on the close.
I think our sports fund is very exciting. We've invested in a number of new leagues that are doing exceptionally well. A number of the investments we've made, we've already seen prices that have gone up already about 50% plus. So what you find in new leagues and new teams is if you're right, it's going to grow exponentially. Right? So the whole key and the nice thing about that is you see the ratings the next day. So I can tell you if it's grown. Like we've invested in PBR and professional bull riding. That league is growing 30% plus a year.
There's professional bull riding?
Yes. Do you want to get on a bull? You'll end up. If you could stay 8 seconds.
I know. This sounds awesome. Do I have to go? I don't have to go to rodeo for that. That's
no. You could do it. We are here in New York.
Okay.
We own the New York Mavericks, so you can come anytime you want to go.
Okay.
Come, you'll love it. Yeah, we'll chat offline.
Don't miss the close live every weekday.
Let me ask you how one becomes the head of the National Zoo. Let's talk about your background. Yeah. So, where did you grow up?
In Indiana, Pennsylvania. It's in western Pennsylvania, small town. I had a rural delivery address, and most of my relatives are coal miners.
So when you were growing up and you were a little girl, did you play with dolls or did you play with pandas?
I didn't have pandas, so stuffed animals, and our neighbors had cows, so I'd always go over and feed the cows and see my friends who lived on farms.
So you told your parents you want to be a National Zoo director. How did you let your parents know that you wanted to be? Are you trained as a zoologist?
So I was a young girl interested in science, in the middle of nowhere in Pennsylvania, and I thought that if you wanted to be a scientist, that meant you were a doctor, and I thought that was my only career path. And I actually got my undergraduate degree is in biology, and I thought about it and I thought, this isn't what I want to do. I want to work with animals. So I was about to start an internship with an ophthalmologist, and I called the Pittsburgh Zoo, and I just said, I want to do what you do. And tell me, how did you get this job? And because this was, back in the day, the guy said, actually, I'm on my way to interview for a summer intern, and I'll interview you right now. And if you do well, I'll hire you. And so I got the job. And I went home and I told my mother that instead of doing an internship with a doctor, I was going to intern as a zookeeper.
What did she say?
Well, we were driving at the time. So one is she almost drove the car off the road. But the other, it was the first time I ever heard my mother swear. And she said, she's like, at least do something respectable with your life. Be a lawyer.
Okay, so you get this internship, and you obviously must have liked it. So then what happened?
I always tell people I never made a smart career choice in my life. So I always just kind of followed my heart. And I did an internship at the zoo. The thing I love about zoos is not just that they educate and inspire people, but they are unique conservation organizations. There are species that exist on the planet today because of zoos, because we care for animals and can breed them. Black-footed ferret, Panamanian golden frog, scimitar-horned oryx, California condors, the list goes on. And so I was really fascinated with the idea of genetically managing, how we manage these species genetically so that they're saved for the wild. I got a master's degree in zoology that focused on genetic management. Then I got a job in another zoo. I did more internships. I got my PhD, and eventually I ended up here.
All right, so you got your PhD in zoology?
It's a program at University of Maryland. It's called Behavior, Ecology, Evolution, and Systematics.
So, and then you get a job immediately thereafter at the National Zoo?
Well, actually, I had a job. I was the head of conservation and science for an organization called the Association of Zoos and Aquariums. So we set kind of conservation goals for zoos, accredited zoos across the country. It's an office, it's an association. And I just really missed being in a zoo. I miss the animals. We create magic for people on a daily basis, and I miss being part of that.
So how many zoos are there in the United States?
So there are about 2,500 licensed animal exhibitors in the United States. But then there's also an accrediting program by the Association of Zoos and Aquariums. And I think under 250 zoos are accredited. So less than 10% of zoos in the country are accredited, and those are the best of the best.
So the most famous zoo in the United States, or the biggest, I would think, leaving the National Zoo aside, is the San Diego Zoo. Is that the biggest, actually?
So I do think it's the most well-known zoo. A lot of people are very familiar with that zoo.
So over the years, the National Zoo is not the only zoo in the United States that's had pandas, right?
Mm-hmm.
And so I thought there were at 1.4, San Diego, Memphis, Atlanta, and Washington. They still have them now?
As part of the loan program started at roughly the same time, so a lot of the pandas were kind of moving through in cohorts. And so a lot of zoos in the past 2 or 3 years, their pandas were older and returned to China. And so right now, only the National Zoo and the San Diego Zoo have giant pandas.
To go back and finish up on your career, so you're working at this association, and you now say, I really want to be with animals directly. So then did you apply to the National Zoo?
Yeah, there was an opening for a general curator. It was more of a curator of mammals, and it was also the curator of giant pandas. And so my story actually came full circle, because when I got the job here and I was in charge of the giant pandas, my mother was so proud.
Did she come to visit the pandas ever?
Oh, right away.
So, all right, so then you were the head of the mammal program, including the pandas. When did you become the head of the National Zoo itself, the whole head?
At first, I was essentially curator of mammals and curator of giant pandas. And then after a few years, I became the head of animal care. So I saw all of the animals, the veterinarians, nutrition, records, behavior, all of the departments. And then eventually I became deputy director. And then a few years later, I became director.
So if you walk around and see the pandas, do they recognize you?
It is one of the saddest moments of my life. When I was curator of giant pandas and I was here all of the time, the pandas knew who I was. They recognized me, or at least my voice, and I could call their name and they would show an interest. But as director, I'm not with them every day. I'm not the bringer of food and love and happiness.
What did you do when COVID came? Nobody showed up then, right?
I'll actually never forget that moment. The concern wasn't I can't go home. The concern was what happens if I get sick and I can't take care of my animals.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Joe Walk is helping steer J&J into a new phase of its history, expanding the frontiers of healthcare by discovering drugs and advancing medical technology.
Developing digital robotic capabilities where it's not just the robot doing a surgical procedure. It's garnering information from that procedure for your specific demographic or the patient's demographic, and then informing the next procedure down the road. Right? It's getting smarter. I would say it's starting to morph into personalized medicine, which we know will lead to the best outcomes.
Innovative medicine and medtech are run as separate business divisions, but in the culture of research at J&J, they interact.
If you look at some of the spaces that we're in today, specifically oncology, there is a lot of dialogue going back and forth. I think it's something that will position us extremely well as we talk about not only a continuum of care, but also a continuum of knowledge.
The convergence of technology and medicine is driving innovation in both sectors, with scientific and commercial possibilities just beginning to come into focus.
I'd like to actually see some partnerships down the road happen between healthcare companies and technology companies. I think we'd get to better outcomes faster if we did that. Right now, technology companies don't have the healthcare knowledge. Healthcare companies probably don't have the breadth of knowledge they need for technology. If we can figure that out together with great minds from both sides, I think that leads to a much better place.
MCX में ही बताया मैंने नेचुरल गैस कहाँ तक MCX कहाँ तक मूव कर सकता है. स्पेसिफिकली मैं सिल्वर की बात कर रहा हूँ. बाकी गोल्ड देखो सपोर्ट पे आया है, थोड़ा बहुत रुका है सपोर्ट पे. 530 के बाद शायद और मूव करे. सपोर्ट थोड़ी देर पहले जो बताया था वहीं पर थोड़ी बहुत बाइंग आ रही है. ओवरऑल तो बेरिश ही है मार्केट भी सिल्वर में. मॉर्निंग से काफ़ी ज़्यादा सेलिंग ऑलरेडी आ ही चुकी है. के लिए अभी 95,550 के अराउंड सपोर्ट है. एक बार ऑलरेडी ले चुका है, दूसरी बार आया है, रुक रहा है यहाँ पर. बट ऑलरेडी टेस्टेड लेवल है, याद रखना एक बार. सिल्वर की बात कर रहा हूँ. बाकी अगर इसके नीचे निकलता है ब्रेक डाउन करके इन केस 95,400 के नीचे, ठीक है. ओपेक का देखो न्यूज आ गई है. क्रूड ऑयल में देख रहे हो एक कैंडल ओपेक की न्यूज की वजह से बनी है. न्यूज नेगेटिव है क्रूड ऑयल के लिए. सपोर्ट है, देखना पड़ेगा. कैंडल ओपन इक्वल टू हाई बनी है. ओपेक जो प्रोडक्शन है वो ओपेक प्लस जो जेएमएमसी की मीटिंग हुई थी उसमें एग्री हुए हैं कि जो ऑयल का आउटपुट है प्रोडक्शन का, एक तरह से आप कह सकते हो, वो इंक्रीज किया जाएगा धीरे धीरे अप्रैल मंथ से. ठीक है. मतलब जो नेक्स्ट इंक्रीज होगा ऑयल आउटपुट का वो मई मंथ में होगा और उसके बाद 2 एडिशनल मंथली इंक्रीजमेंट देखने के लिए मिलेंगे. इट मींस इट इज सिग्नलिंग सिग्निफिकेंट बूस्ट इन प्रोडक्शन लेवल. तो प्रोडक्शन तो ये बहुत बढ़ाने वाले हैं, मतलब सप्लाई बहुत ज़्यादा देने वाले हैं मार्केट में. क्या डिमांड उतनी रहेगी? अगर नहीं रही या फिर कम हो गई, सप्लाई बढ़ गई डिमांड कम हो गई, सिंपल सा डिमांड सप्लाई का रूल लग जाएगा. प्राइस और ड्रॉप हो सकता है, इसलिए ये नेगेटिव न्यूज़ है। हाँ, अगर बाई चांस ये सप्लाई बढ़ा रहे हैं, डिमांड भी उसी पोर्शन में और ज़्यादा बढ़ जाए, इसके चांसेस कम ही है टैरिफ की वजह से भी, तो हो सकता है मार्केट थोड़ा सा देखे। तो ओपेक प्लस जेएमएमसी की ओर से स्टेटमेंट आ गया है। न्यूज़ थोड़ा सा नेगेटिव थी, सपोर्ट है, लेट्स सी होल्ड करता है या नहीं करता है। प्रोडक्शन इंक्रीज करने वाले हैं कंटिन्यूसली। और अपडेट आएगा तो देखेंगे, फिलहाल के लिए यही है। ऑयल आउटपुट इंक्रीज, प्रोडक्शन इंक्रीज। क्रूड ऑयल का अप्रैल मंथ के बाद मई मंथ में पहला, उसके बाद दो और कंजिक्यूटिव, दो बार और होगा एडिशनली मंथली इंक्रीज। ठीक है, सपोर्ट पे जरूर है क्रूड ऑयल, न्यूज़ की वजह से थोड़ा बहुत डाउन जा रहा है। कैंडल ओपन इक्वल टू हाई है, थोड़ा वेट कर लेना, कैंडल क्लोजिंग का लेवल के ऊपर कैंडल क्लोज होगी तभी बाई करेंगे, ओपन इक्वल टू हाई पे डायरेक्टली बाई नहीं कर सकते। देखते हैं, अगर ये होल्ड करता है सपोर्ट तो वेल एंड गुड, नहीं करा, ब्रेकडाउन हो गया अगर क्रूड ऑयल का, तब फिर थोड़ा सा और गिर सकता है प्राइस। एग्जैक्टली सपोर्ट पर ही बिल्कुल, बट वो कैंडल ही ओपन इक्वल टू हाई बना के बैठ गया। होल्ड करता है नहीं। हाँ वो भी ठीक है। अच्छा, न्यूज़ तो नेगेटिव ही थी, बिल्कुल थी। ठीक है, कैंडल देखो क्लोज हो गई है, ओपन इक्वल टू हाई कैंडल थी, लेवल के नीचे चली गई है कैंडल, अभी भी है सपोर्ट, अगर ये निकला और ये कैंडल भी ओपन इक्वल टू हाई है, करंट कैंडल इज आल्सो ओपन इक्वल टू हाई, वापस निकलता है 5820 के ऊपर तो बाई करेंगे, नहीं निकलता है, जाता रहता है तो अवॉइड, फिर कोई ट्रेड एक्टिव नहीं होगा यहाँ पे। न्यूज़ नेगेटिव जरूर है, देखना पड़ेगा सपोर्ट होल्ड कर पाता है या नहीं। बाबूजी आई एम गुड। क्रूड में ध्यान रखना है, कैंडल न्यूज़ की वजह से थोड़ा बहुत नीचे जा रही है, बाइंग एक्टिवेट हुई नहीं है, प्राइस ऊपर निकलता है तभी करना, कैंडल ओपन इक्वल टू हाई थी लास्ट वाली भी, एंड दिस कैंडल आल्सो ओपन इक्वल टू हाई। क्रूड को देखोगे 5% डाउन है ऑलरेडी अभी। याद रखना 5.99% पे लोअर सर्किट ही लग जाएगा मार्केट में, पहला लोअर सर्किट। क्या सबसाइड ब्रेकआउट हो सकता है क्या अगेन हिटिंग रेजिस्टेंस? इन्वेंट्री के वक्त अभी मैं भी कुछ नहीं कह सकता, अभी तो नहीं हो रहा है। यस, नई न्यूज़ नेगेटिव ही थी क्रूड ऑयल के लिए। प्रोडक्शन बढ़ाएंगे, सप्लाई इंक्रीज होती है तो न्यूज़ नेगेटिव ही है। फाइव थाउजेंड। डायरेक्टली बाय नहीं करना है बताया ना, ओपन इक्वल टू हाई पे डायरेक्टली बाय नहीं करते हैं सपोर्ट पे। क्या देखो यहाँ पर एक यहाँ पर वाले लेवल पे तो रुका नहीं, इस पे तो बाय बनी नहीं है, स्टिल इट इज सपोर्ट। एक बाइंग प्लान यहाँ से करते हैं क्रूड ऑयल में। न्यूज़ नेगेटिव जरूर है बट एक सेकेंड, कोई नहीं। और कुछ कर भी नहीं सकते यहाँ पे, ओपन इक्वल टू हाई पे तो डायरेक्टली बाई बनेगी नहीं। लगता नहीं है प्राइस लेवल के ऊपर जाएगा। कम ऑन, लेवल के ऊपर ही क्लोज होना भाई। ठीक है, ठीक है। इवन तो देखो ये कैंडल भी ओपन इक्वल टू हाई है, बट अभी भी सपोर्ट ही मान के चल रहा हूँ मैं इसको। होल्ड करना चाहिए प्राइस को। कैंडल क्लोज होने देना, ठीक है। डायरेक्टली मत लेना, ओपन इक्वल टू हाई पे डायरेक्टली नहीं करते भाई। सपोर्ट की रेंज के अराउंड ही है, न्यूज़ की वजह से थोड़ा बहुत जा रहा है डाउन साइड पे, अब तो लोअर सर्किट भी लग जाएगा नहीं तो। बट स्टिल लेवल के ऊपर अगर थोड़ा सा भी क्लोजिंग आ गई तो वी कैन एक्सपेक्ट बाइंग। अगर नहीं आती है, गिरता ही जाता है तो फिर नहीं कर पाएंगे, ठीक है। कैंडल क्लोज होने देना, ओपन इक्वल टू हाई पे मत करना बाय, इतना काफी। नेचुरल गैस में क्या हो गया सडनली? कोई न्यूज़ तो नहीं आ गई नेचुरल गैस में भी? ठीक है, ठीक है, ये भी रेजिस्टेंस को कर तो चुका है हिट नेचुरल गैस। थोड़ा एसएल छोटा रखना, ठीक है, इसमें नेचुरल गैस में। ठीक है, छोटा सा ही एसएल है, ज़्यादा बड़ा एसएल नहीं है, 1.8 पॉइंट का एसएल है, इससे बड़ा एसएल मत लेना। अगर ये गया तो फिर थोड़ा सा ऊपर एक और रेजिस्टेंस है, वहां से सेलिंग का प्लान करेंगे, अदरवाइज वो वहां पर क्लोजिंग में नहीं है ना। पॉइंट एट। वेट करो, क्रूड में वेट करो, नेचुरल गैस में वेट नहीं करना है। नेचुरल गैस में नॉर्मल कैंडल है, क्रूड की कैंडल ओपन इक्वल टू हाई है, सपोर्ट के ऊपर ही है, अभी भी क्लोजिंग नहीं आई है। ऊपर रहा तो बाइंग बनेगी, कैंडल ओपन इक्वल टू हाई ना बने। ये नेचुरल गैस में एसएल थोड़ा छोटा ही रखना, ठीक है, बड़ा एसएल मत लेना इसमें, स्पाइक ना मार दे ऊपर की ओर, क्योंकि ऊपर भी एक और रेजिस्टेंस है, उसका एसएल ज़्यादा बड़ा है एज कम्पेयर टू दिस वन। मैंने उसमें ठीक है, वेरी लो, लो क्वांटिटी। उसका एसएल ज़्यादा बड़ा है एक्चुअली में, हाई एसएल। क्रूड में भी 2 मिनट बचे हुए हैं, लेट्स सी कैंडल लेवल के ऊपर आती है या नहीं। लग तो नहीं गया लोअर सर्किट? लोअर सर्किट लग गया, क्रूड ऑयल में लोअर सर्किट लग गया। 5.99% लोअर सर्किट इन क्रूड ऑयल। ठीक है, क्रूड ऑयल में बाय मत करना, भी उसमें बाइंग एक्टिवेट हुई नहीं है क्रूड ऑयल में। वो कैंडल ही ओपन इक्वल टू हाई है, अब तो लोअर सर्किट भी लग गया है। खैर कैंडल एटलीस्ट 5780 के ऊपर क्लोज और नेक्स्ट कैंडल भी ओपन इक्वल टू हाई ना बने तभी एंट्री बनेगी उसमें। बाकी नेचुरल गैस का ट्रेड जरूर एक्टिव है इसमें। एसएल थोड़ा छोटा ही रखना या क्वांटिटी कम रखना, स्पाइक ना मारे, क्योंकि इसके जस्ट ऊपर भी एक और रेजिस्टेंस है। ठीक है, ये यहाँ पर ऐसा कर सकता है, लेकिन यहाँ से स्पाइक मार के इस तरह से फिर नीचे आ जाए ऐसा उड़ा के। 1.8 फ्यूचर में। नेचुरल गैस रुक ही नहीं रहा है अब कि, बाकी सब बेहोश हैं। क्रूड ऑयल में लोअर सर्किट लग गया है। एक ट्रेड भी नहीं दिया आज क्रूड ऑयल ने ऊपर से। ओपन हुआ क्या लोअर सर्किट? नहीं, अभी भी ओपन नहीं हुआ लोअर सर्किट। क्रूड में लोअर सर्किट इंटैक्ट है अभी भी। 5.99% डाउन है। देखते हैं फॉरेक्स में, देखोगे तो फॉरेक्स में तो मार्केट ओपन हो गया है। एमसीएक्स में देखते हैं कितने देर में ओपन होता है। सडनली न्यूज आई, सपोर्ट भी होल्ड नहीं हो रहे हैं, बताओ। एमसीएक्स नहीं हो रहा ओपन। ठीक है, फॉरेक्स में ओपन हो गया है मार्केट क्रूड ऑयल का। कौन सी आई थी? ओपेक प्लस प्रोडक्शन इंक्रीज करने के लिए बोल रहे थे, वो एक न्यूज है। ओपन हो गया शायद एमसीएक्स, हुआ क्या? नहीं, अभी भी नहीं हुआ। थोड़ी बहुत बाइंग, काइंड ऑफ बाइंग कह सकते हो क्रूड ऑयल में, फॉरेक्स में। कैंडल तो नॉर्मल है, जो अभी करंट कैंडल फॉरेक्स में ओपन हुई है, ओपन इक्वल टू हाई नहीं है, नॉर्मल कैंडल है। एमसीएक्स अभी ओपन नहीं हुआ है, तो वहाँ तो अभी बनी नहीं है कैंडल। हो जाएगी ओपन आई थिंक नेक्स्ट कैंडल पे, अगर प्राइस थोड़ा ऊपर जाता है, बिकॉज उस केस में लोअर सर्किट ओपन हो जाएगा। 5:30 भी होने वाला है, उसका भी ध्यान रखना। 5:30 न्यूयॉर्क सेशन की ओपनिंग भी होगी। फॉरेक्स में भी मूव नहीं कर रहा है क्रूड ऑयल तो अब। OPEC Plus has agreed to make larger than expected supply hike in May involving 411,000 barrel a day. उसमें तो लोअर सर्किट है। ओपन हो गया, फॉरेक्स एमसीएक्स दोनों ही ओपन हो गए। ठीक है, फॉरेक्स में देखोगे ये कैंडल भी ओपन इक्वल टू हाई है। फॉरेक्स में तो नॉर्मल कैंडल है, यहाँ पर ये ओपन इक्वल टू हाई है। लुक एट द कैंडल अगेन ओपन इक्वल टू हाई। ठीक है, कोई इशू नहीं है। अगर ये वापस इन केस अपना हाई ब्रेक करता है तो बाइंग बन जाएगी 5780। अगर नहीं करता है तो फिर कोई बाइंग नहीं है। वी नीड टू वेट प्राइस को वापस 5780 के ऊपर आने का। चाहे सेम कैंडल खुद ही आ जाए या फिर नेक्स्ट कैंडल आए, तभी बाई करना, अदरवाइज अभी नहीं। हो सकता है और गिरता रहे प्राइस। ठीक है, क्रूड में बाइंग एक्टिवेट नहीं हुई अभी भी। कैंडल ओपन इक्वल टू हाई, दिस वन एज वेल। लास्ट 3 कैंडल बिल्कुल ही ओपन इक्वल टू हाई है। देखते हैं अब कहाँ रुकता है। 5721 के ऊपर ही बनेगी बाइंग अब। ठीक है, इस पर्पल की लाइन के ऊपर अगर प्राइस रिवर्स करेगा तभी बाइंग करेंगे, नहीं तो नहीं। गिरने दो। बाकी इसमें और इसके नीचे के सपोर्ट दिख भी नहीं रहे कहाँ पर है, क्योंकि इतना पीछे अब चार्ट भी नहीं जा रहा है 15 मिनट में। बट मोस्ट प्रोबेबली 5680 690 के अराउंड ही होंगे। फॉरेक्स में क्या हुआ? फॉरेक्स में देखो, उम्मीद तो है मुझे क्रूड ऑयल पुल बैक दे 5780। न्यूज़ में जितना मोमेंटम होना था आई होप हो चुका हो। 5780 के ऊपर वापस रिटर्न आए। बिल्कुल है। 5780 के ऊपर ही बाय करना, उससे पहले नहीं। बाकी लोअर सर्किट ओपन है, अगर इसके नीचे और कंटिन्यू करता है तो फिर सेकंड लोअर सर्किट आपका 8.99% पे लगता है, लगभग 9%। फॉरेक्स में देखना पड़ेगा सपोर्ट। मार्केट ने क्रूड ऑयल ने सीरियसली ले लिया लग रहा है न्यूज़ को ज़्यादा ही। कल तो ऐसे गिर रहा है, इससे कल दुनिया खत्म हो जाएगी। नहीं, दुनिया खत्म होगी तो क्रूड ऑयल ऊपर जाएगा, नीचे नहीं आएगा। क्रूड ऑयल नीचे आ रहा है, इसका मतलब क्रूड ऑयल नीचे कब आएगा? जब सब कुछ अच्छा हो रहा होगा। जैसे कल ही रशिया यूक्रेन वॉर रुक जाएगी, इजराइल वालों का सब सेटलमेंट हो जाएगा, टैरिफ भी हट जाएंगे, सब कुछ अच्छा हो जाएगा। ऐसी कंडीशन लग रही है क्रूड ऑयल की फिलहाल के लिए। अभी भी इंटैक्ट है। मिनट रह गए हैं, याद रखना। अभी न्यूयॉर्क सेशन ओपन होते कहीं और मोमेंटम ना कर दे प्राइस। 30 मिनट। मिनट में तो दिख नहीं रहा है चार्ट। 30 मिनट में एक सपोर्ट है और नीचे क्रूड का, बट वो थोड़ा नीचे ही है, काफ़ी नीचे है वो। 15 मिनट में उतना पीछे चार्ट जा नहीं रहा एक्चुअली स्क्रीन पर, बट यार 30 मिनट में सपोर्ट मिल जाएगा प्राइस को। आई थिंक वही जो मैं एक्सपेक्ट कर रहा हूँ वही है शायद। हाँ, 15 मिनट का भी। थर्टी मिनट का, ये 15 मिनट का नहीं है, इसका ध्यान रखना। एग्जैक्टली। ठीक है, 5670 से 680 के बीच में अप्रॉक्सीमेटली। अगर ये वापस 5780 के ऊपर रिट्रीट नहीं करता है, देन 30 मिनट का ही नेक्स्ट सपोर्ट देखना पड़ेगा, और कोई ऑप्शन नहीं है। लगा लेते हैं, वैसे 15 मिनट में भी होगा वहाँ पर डेफिनेटली, बट अब दिख नहीं रहा है 15 मिनट का, तो कुछ कर नहीं सकते। ठीक है, ये 30 मिनट टाइम फ्रेम का सपोर्ट। लेट्स सी, आई होप यहीं से रिकवर करें। वो देख लेते हैं उसको। फिफ्टीन मिनट का तो यही है सपोर्ट, 5780। इसके नीचे प्राइस सही नहीं है फिर। हाँ ठीक है। Crude blow up to 5,780. Yes. 15 मिनट ठीक है। अगर ये वापस आ गया 5,780 के ऊपर तो बाइंग हो जाएगी, ध्यान रखना। बाकी जो नीचे वाला लेवल है वो 30 मिनट टाइम फ्रेम का सपोर्ट है, 15 मिनट का नहीं है। 15 मिनट का लेवल शो नहीं कर रहा है उसके नीचे। क्या लगता है रिकवर करेगा 5,780 के ऊपर क्लोजिंग बेसिस पे, या फिर 30 मिनट का टाइम फ्रेम ही आके मानेगा? 2 मिनट है, देख लेते हैं। उसमें क्या हुआ था वहाँ पर? आई थिंक हो रही है ना। Okay, 1 minute. 1 minute is left. रिकवर कर रहा है 5,780 ऐसे टाइम पे रिकवर कर रहा है जब मार्केट में अभी न्यूयॉर्क सेशन ओपन होने वाला है। लेट्स सी, देखते हैं आता है नहीं आता। ठीक है, न्यूयॉर्क सेशन ओपन, कैंडल क्लोज नहीं हुई। कैंडल क्लोज अभी भी 5,780 के ऊपर। ये कैंडल अलग ही है, ये भी ओपन इक्वल टू हाई। लुक एट करंट कैंडल अगेन, ओपन इक्वल टू हाई, स्टिल वही सेम ही लेवल है 5,780। इसके ऊपर जाना चाहिए प्राइस को, तभी बाई कर पाएंगे, नहीं तो नहीं। ये कैंडल भी ओपन इक्वल टू हाई ही बनी हुई है। अभी बाइंग मत करना क्रूड ऑयल में, ठीक है? बाइंग एक्टिविटी नहीं हुई है, प्राइस होल्ड ही नहीं कर रहा है सपोर्ट को। बाकी न्यूज़ बेस्ड मोमेंटम है करंट कैंडल पे। क्रूड ऑयल में नेगेटिव ही न्यूज आई थी, अभी फिलहाल हो गया न्यूयॉर्क सेशन ओपन। एक्सपेक्ट द वॉलेटिलिटी अगेन। कोई ओपन पोजीशन है तो सिस्टम पे रखना है एसएल कहीं पर भी। नहीं, ओपन इक्वल टू हाई है ना। यस, नेचुरल गैस भी ओपन इक्वल टू लो कैंडल बना दी है, बिल्कुल बनाई है ओपन इक्वल टू लो। ये बिक गई है गवर्नमेंट, इस गवर्नमेंट में कुछ नहीं रखा है, क्यों क्या हो गया? गवर्नमेंट ने कुछ कह दिया क्या? इमेजिन अब न्यूज आ जाए कि मिडिल ईस्ट में पीस डील हो गई है। यही आ जाए कि रसिया मान गया है सीज फायर के लिए, अभी क्रूड ऑयल में एक और लोअर सर्किट लग जाएगा। ठीक है, क्रूड ऑयल अगर निकलता है वापस, लेवल सेम ही है 5780 के ऊपर, तभी बाइंग करेंगे, नहीं करता है तो जाने देना। है ये सपोर्ट पर ही, बट कैंडल वो ओपन इक्वल टू हाई बना के बाइंग होने ही नहीं दे रहे हैं सेलर्स इतने स्ट्रांगली। ये बताओ, सपोर्ट पे भी सेल कर रहे हैं, स्टिल फाइट तो दे रहे हैं बायर, लगता है कुछ बचे होंगे तो। ओके, बाकी नेचुरल गैस में भी ध्यान रखना, ये कैंडल ही ओपन इक्वल टू लो बन गई है न्यूज़ 5:30 की न्यूयॉर्क सेशन की ओपनिंग के बाद। वॉल्यूम सडनली बुलिश ही आ रहा है। किसी को अगर फिर से री एंट्री करनी है तो सेम कैंडल का लो ब्रेक होने पे कर सकते हैं, या फिर अगर ये थोड़ा सा अपर लेवल पे निकल गया, एसएल हिट कर दिया, तो फिर अपर लेवल से करेंगे वापस सेल 356। वैसे एसएल छोटा है क्योंकि यहाँ पर थोड़ा रिस्क ज़्यादा है। दूसरा इसके ऊपर अगर निकल गया तो फिर वहाँ एसएल बड़ा रखना पड़ेगा, क्योंकि वो एक और रेजिस्टेंस है। देखते हैं 5:30 की कैंडल पे कुछ मोमेंटम स्ट्रांगली होता है क्या, क्रूड ऑयल रिकवर करेगा? ट्राई तो कर रहा है भाई। लास्ट कैंडल की तरह ये भी रिकवरी की कोशिश में है 5780 के ऊपर। में है वो। अच्छा, क्रूड ऑयल के लिए है क्या? पानी के भाव बिकेगा फिर क्रूड ऑयल। हाँ, क्रूड ऑयल फिर पानी के भाव, और नेचुरल गैस सोने के भाव। ठीक है, देखो निकलने की कोशिश में है, क्रूड ऑयल निकलता है तो बाइंग बनेगी। ठीक है, 5780 के ऊपर नहीं निकला तो मत करना भाई। 6 PM पर है वो डेटा, अभी नहीं है। अनएम्प्लॉयमेंट क्लेम्स का डेटा 6 PM पे है, वो गोल्ड सिल्वर को इम्पैक्ट करेगा मेजरली। बाकी गोल्ड देखोगे तो वैसे होल्ड करके बैठा हुआ है सपोर्ट को। खास इम्पैक्ट हुआ नहीं वैसे मार्केट में क्रूड गोल्ड में 5:30 की कैंडल का। अबाउट दैट, काफ़ी देर से सपोर्ट को होल्ड करके बैठ गया प्राइस गोल्ड में। लेट्स सी थोड़ा रिकवर करता है, क्योंकि ऊपर एक रीटेस्ट भी है मार्केट के लिए। लेट्स सी वहां तक जाता है तो 3125 तक रीटेस्ट करने बाकी। अब 6 PM की कैंडल न्यूज़ की इम्पैक्ट डालेगी गोल्ड पे। ओके, नेचुरल गैस ऑल्सो टू मच वॉलेटाइल विद इन 1 to 2 पॉइंट। अभी तो वो करंट कैंडल तो वॉलेटाइल होती ही है बिकॉज ऑफ न्यूयॉर्क सेशन ओपनिंग एंड द हाई वॉल्यूम। इसके बाद पता चलेगा कि मार्केट मूव करेगा भी या नहीं। रवि दिल्ली एनसीआर कैसे हो ट्रेडर रवि? आई एम गुड। कोई डॉक्टर भी है क्या अपनी स्ट्रीम पे? एनीवन इज डॉक्टर हियर? जो व्हाट्सएप पे मैसेज कर रहे हैं प्लीज लाइव में पूछ लो, अभी तो स्ट्रीम ओपन है। नहीं नहीं, वो अलग होता है। न्यूयॉर्क सेशन और यूएस मार्केट बोथ आर डिफरेंट। यूएस मार्केट तो जैसे हमारा इंडियन मार्केट है वैसा हो गया कुछ, जैसे 9 बजे हमारा इंडियन मार्केट ओपन होता है, प्री मार्केट 9-7, देन 9:15 पे एक्चुअल मार्केट ओपन होता है टिल 3:30। वैसा ही यूएस मार्केट शाम को 7 बजे ओपन होता है। न्यूयॉर्क सेशन अपना गिफ्ट निफ्टी लगा लो, जैसे अपना गिफ्ट निफ्टी ओपन होता है 6:30 पर अर्ली मॉर्निंग, तो न्यूयॉर्क सेशन एक तरह से यूएस का फॉरेक्स का सेशन है, जहाँ पर फॉरेक्स में वॉल्यूम जनरेट होके थोड़ा ज़्यादा और आता है। सर जी आप डॉक्टर हो, किस चीज़ के डॉक्टर हो सर आप? जनरल मेडिसिन या फिर लाइक स्पेसिफिकली किसी एक पर्टिकुलर? जा रहा है क्रूड 5780 के ऊपर, नहीं जाएगा तो फिर नहीं लेंगे, सिंपल सी बात है। रिकवर करना पड़ेगा, सपोर्ट जरूर है, बट एज मेंशन अर्लियर ओपन इक्वल टू हाई पे नहीं करते हैं भाई। पिछले 3-4 कैंडल देखोगे कंटिन्यूसली ओपन इक्वल टू हाई बनी, इट मींस सपोर्ट पे भी सेलर सेल कर रहे हैं। अगर सपोर्ट पे भी कोई बिग प्लेयर सेल कर रहा है, वी डोंट इंटरेस्टेड। अगर बायर स्ट्रांग होंगे रिकवर करेंगे, नहीं होंगे तो फिर नेक्स्ट नीचे जो सपोर्ट है वहां तक आने तो वहां ले लेंगे। वो थोड़ा सा टाइम फ्रेम 30 मिनट टाइम फ्रेम का सपोर्ट ज़्यादा स्ट्रांग होगा एज कम्पेयर टू 15 मिनट। ठीक है, नीचे वाला सपोर्ट 15 मिनट का नहीं है, 30 मिनट का है। 15 मिनट का सपोर्ट यही है सिर्फ, तो इसमें भी बाइंग के लिए कंडीशन अप्लाई है। जनरल प्रैक्टिशनर हो आप? आई चेक जनरल एवरी पर्सन। नहीं नहीं, मैं थोड़ी देर पहले वो एक क्वेश्चन वो देख रहा था ना, लाइक आर्टिकल, एक इंडियन स्टूडेंट का कजाकिस्तान में उनका आफ्टर जिम वर्कआउट एंड डिनर के बाद ही गॉट अ हार्ट अटैक एंड ही डाइड। सो लाइक इतने लोग हार्ट अटैक से मर क्यों रहे हैं, वो भी यंग एज में, स्पेशली मेल? लाइक लाइफस्टाइल ही द ओनली रीजन, और देयर इज समथिंग एल्स जो पता नहीं है हमें चल रहा है, लेकिन बिकॉज इट इज टू कॉमन राइट नाउ डेज, हर दूसरे दिन कोई ना कोई न्यूज आ जा रही है। एंड विच टेस्ट डू यू रिकमेंड? कि यार ये करा लिए तो फिर चांसेस आर वेरी लेस, जीरो तो नहीं हो सकते खैर, क्योंकि क्लॉटिंग तो कहीं भी हो जाएगी, किसी की भी बॉडी में हो सकती है, आर्टरीज के अंदर, और अगर प्लाक बिल्डअप होगा फिर तो गए। व्हाट डू यू थिंक चांस है वाली जी? हैवी वेट एक्सरसाइज एंड स्मोकर एंड एनी अंडर डायग्नोस्ड हार्ट डिजीज कॉजेज? हैवी वेट एक्सरसाइज, बट जो लाइक आपके कोई हैवी लिफ्टर्स होते हैं, वो तो हैवी वेट उठाते ही हैं, तो उनके केसेस क्यों नहीं आते? लाइक नॉर्मली कोई इंसान नहीं भी उठाता है उसको भी आ रहा है। लाइक किसी ने अगर अपना 2D को कराया हो, ईसीजी कराया हो, टीएमटी अगर उसका उसने कराया हो, कैल्शियम स्कोर उसने कराया हो, और क्या होता है लाइक विटामिन B12 उसका अच्छा हो, विटामिन D25 अच्छा हो, एंड कोलेस्ट्रॉल उसका ठीक ठाक हो, LDL थोड़ा बहुत चलता रहता है, एंड अगर वो स्मोक नहीं करता है, कैन स्टिल दैट पर्सन हैव अ चांस, और इट इज सेफ दैट पर्सन, बिकॉज इसके बाद फिर एक ही टेस्ट बचता है, लाइक वो टेस्ट हर कोई कराना नहीं चाहेगा, दैट इज CT एंजियोग्राफी, क्योंकि उसमें फिर आपका रेडिएशन बहुत ज़्यादा होता है. Every year you have to check ECG, 2D echo test, and lipid profile, TMT test every year. एक एक टेस्ट वो भी तो होता है लाइक आपकी जो कैरोटिड आर्टरी होती है ना नेक के अराउंड, राइट और लेफ्ट वाली, वहाँ पर भी एक मुझे याद नहीं आ रहा उस टेस्ट को क्या बोलते हैं, CEMT टेस्ट बोलते हैं शायद, CEMT टेस्ट. वो कैरोटिड आर्टरीज होती हैं, उनमें अल्ट्रासाउंड करते हैं शायद डॉपलर से. तो अगर वो कोई चेक करा ले अपना, और अगर आपका लाइक वो आर्टरीज की जो थिकनेस है वो 0.8 मिलीमीटर ही होता है शायद, मिलीमीटर से कम अगर आती है, इट मीन्स देर इज नो साइन ऑफ अर्ली अर्थ्रोसिस, जो प्लाक बिल्डअप होता है, क्योंकि मैंने वो कराया है, एंड मेरी वो लगभग 0.4 आई थी, कैरोटिड आर्टरी की जो थिकनेस है 0.4 मिलीमीटर. तो उन्होंने कहा कि आपका तो कुछ भी नहीं है, लाइक देर इज नो साइन ऑफ प्लाक बिल्डअप. तो क्या उससे पता चल जाता है लाइक आपकी जो आर्टरी हार्ट के अंदर होती है, जिनको हम कोरोनरी आर्टरी कहते हैं, या फिर जो माइंड के अंदर होती हैं, हेड के अंदर होती हैं, जिससे स्ट्रोक आता है, वहाँ पर भी कोलेस्ट्रॉल नहीं है, कैन इट इज सिग्निफिकेंट, और लाइक लास्ट में वो CT एंजियोग्राफी करानी पड़ेगी. उसमें भी कैंसर का रिस्क है, नहीं तो करा लेते हैं. उसको रोज भी नहीं करा सकते, 10 साल में एक ही बार होता है वो टेस्ट नॉर्मली. और हॉस्पिटल जाओ तो डॉक्टर रिकमेंड भी नहीं करते, वो सीधे कहते हैं हॉस्पिटल में एडमिट हो, आपकी कोरोनरी एंजियोग्राफी करेंगे, आपको लेटा के ही बेड में एक वायर डालेंगे, उससे देखेंगे. इंसान फिर कराता ही नहीं है. ठीक है, अभी देखो कैंडल नहीं आई, क्रूड में होल्ड किया है सपोर्ट, बट नॉट अबव द लेवल. अगर अब रिकवर करता है 5780 के ऊपर तो बाइंग करेंगे, नहीं करता है तो मत करना. 780 के ऊपर जरूरी है जाना प्राइस का. सिक्स पी एम का डेटा है, उसका ध्यान रखना. 6 PM का काफ़ी इंपॉर्टेंट डेटा है अनएम्प्लॉयमेंट क्लेम्स का. टेस्ट कराए यार, मैंने तो कराए हैं, बट फिर भी डर लगता है There is someone in my relative who passed away due to heart attacks. He was just 15 years old. She got COVID, and after that she was having issue in ECG. You're talking about it, like कब की बात कर रहे हो आप, like 2000 अर्ली 2020 जब कोरोना वायरस आया था, या फिर लाइक सेकेंड वेव 2022, या फिर अभी की बात कर रहे हो आप? 15 इयर्स तो काफ़ी कम हुआ है यार. 15 इयर्स वो भी फीमेल में, क्योंकि एक्चुअली जिनको नहीं पता, अगर कोई फीमेल है यहाँ पर, आई एम नॉट अ डॉक्टर, बट जितना मैंने रिसर्च करी है, फीमेल्स में जो आर्टरीज होती हैं उनके अंदर जो प्लाक बिल्डअप होता है वो बहुत स्लो होता है, या फिर बहुत कम होता है टिल द एज ऑफ मोनोपोज, विच इज़ अराउंड आई थिंक 50 इयर्स. उसके बाद फिर बढ़ता है, बट मेल्स में ऐसा नहीं होता. मेल्स में तो अर्ली एजेस से ही प्लाक बिल्डअप होना स्टार्ट हो जाता है आर्टरीज के अंदर. 15 इयर्स में ऐसा क्या हो गया यार? सबको कोविड के बाद ही हो रहा है क्या ये? शील्ड किसने लगाई है? वैक्सीन। कुछ लोग कोविड वैक्सीन की थ्योरी को भी मानते हैं, अभी पता नहीं क्यों, कि कोविड वैक्सीन से हो रहा है करके। आई डोंट नो हाउ मच जेन्युइन, जितना डॉक्टर ने बताया वो तो कह रहे थे ऐसा कुछ भी नहीं है। क्रूड गिरने लगा वापस, हाँ अगेन ओपन इक्वल टू हाई है कैंडल। देखते हैं, अगर नहीं करा रिकवर तो फिर छोड़ देंगे। अगर बाइंग आनी है तो 5780 के ऊपर रिकवरी चाहिए। 780 के ऊपर जाएगा तभी करना, अगर नहीं जाता है तो फिर नीचे ये 30 मिनट का सपोर्ट एरिया है, यहाँ देखते हैं। ये रुक ही नहीं रहा है। बाकी बायर देखो ट्राई तो कर चुके हैं लास्ट दो कैंडल पे रिकवरी देने के लिए। अभी भी कोई ओपन इक्वल टू लो बना के सेल कर रहा है, मतलब समवन विथ वेरी स्ट्रॉन्ग लिक्विडिटी। निफ्टी मैंने देखी, बैंक निफ्टी तो नहीं, निफ्टी देखी नहीं मैंने, बैंक निफ्टी ही देखी थी। निफ्टी का मुझे कुछ आइडिया नहीं है, आज का देखा ही नहीं मैंने निफ्टी। सही कह रहे हो, चांसर वाले जी, ये भी सही है। तो जेनेटिक टेस्टिंग करा लें क्या? व्हाट डू यू थिंक अबाउट जेनेटिक टेस्टिंग? क्रूड मस्त है लेकिन, सही कह रहे हो। गोल्ड का बताया सर, 6 PM पे डेटा आने वाला है, वेट कर लो उसका, बाकी वैसे सपोर्ट पर ही है। थोड़ी देर पहले जो लेवल बताए थे उसी पर रुका हुआ है सपोर्ट एरिया पे, वेट कर रहा है 6 PM के डेटा का। सपोर्ट पे ही रुका हुआ है, देखते हैं क्या होता है। काफ़ी देर हो गई है, लगभग 1 घंटे से ऊपर हो गया, 2 घंटे होने वाले हैं। 6 PM का डेटा है, पॉजिटिव आया तो ऊपर चला जाएगा, नेगेटिव आया तो ब्रेक करके फिर नेक्स्ट सपोर्ट 3033। हो सकता है फेक ब्रेकडाउन दे दे, उसकी मैं बात नहीं करूंगा। ऊपर जाएगा तो एक रीटेस्ट कर सकता है 3125-26। ओवरऑल थोड़ी बहुत प्रॉफिट बुकिंग में है। बता दिया पीछे सपोर्ट गोल्ड का। चांद सेरवाल जी, कितने टेस्ट करवाओगे सर? हम वो भी है, कितने टेस्ट कराए और कितने बार कराए हो जाती है फिर, राइट। महेश पुरी जी, डरो मत भाई, इट विल क्रिएट नेगेटिव एनर्जी इन आवर बॉडी। हाँ ये भी है। ना बर्थ अपने हाथ में है ना डेथ, सो जियो लाइफ को जब तक है इस दुनिया में। फिर न किसी दिन ना ये स्ट्रीम होगी, ना मैं होऊंगा, ना कोई और होगा, राइट। सो लिव एवरी मोमेंट। वापस लोअर सर्किट लगाएगा क्रूड ऑयल, देखते हैं, नीचे भी सपोर्ट है। ज़्यादा सेंटिमेंट हो गया, अरे नहीं, सच्ची तो कहा मैंने, या झूठ बोला है बताओ? ना बर्थ हमारे हाथ में था ना डेथ है हमारे हाथ में, तो इतना टेंशन ही क्यों लेना, मजे में रहो। ठीक है, क्रूड ऑयल देखो नीचे नहीं आने, ऊपर नहीं जाने वाला लग रहा है इस लेवल से। अगर रिकवरी नहीं करता है 5780 के ऊपर तो अवॉइड। फिर नेक्स्ट सपोर्ट नीचे है, ये 30 मिनट का सपोर्ट है, फिर इसी को देखेंगे। अगर ये रिकवर नहीं कर पाया, जो कि मुझे लग नहीं रहा करने के मूड में है अब।
The Japanese and the Korean players, it does beg the question of how big they are in the market longer term. They tend to compete with each other, not with the D3. That is interesting. Also, their imports are predominantly on the premium side. Let's say, like a Lexus for Toyota, etc. They compete against each other. So maybe you get less of those. Again, all of this presumes a structural tariff that continues. We're not sure that's really going to happen. But for the most part, if you're already in the U.S., you're going to want to stay there. It's a very important market, especially what's happening in China and Europe. You'll see some stuff on the fringes, but unlikely to see huge changes, I would say.
Tom, why does no one believe it? I think that's what's interesting about this morning. Very few people have come on this program and said it is their base case that these tariffs actually hold. Where does that belief come from, Tom?
Well, it comes from the fact that, yesterday's news excluded tariffs. And actually, the tariff announcement last week on autos was, in some people's minds, there is a silver lining there. It talked about examining U.S. contenting, right? In the past, we didn't know what happened to a Chevy Equinox, where the battery comes from the U.S., but it's assembled in Mexico, and then it's shipped to the U.S. Now we know that the administration says they're going to calculate how much U.S. content there is. We think, and investors seem to think, that this is potentially a negotiating tool for the future to increase U.S. content, as opposed to an outright 75% tariff. The other thing we know is the automakers are talking about the fact that they'll increase pricing. They won't just simply absorb the tariff altogether. When you run the math on that, it's not as painful as it would be if the OEMs just absorb the tariff entirely.
We've been discussing, Tom, what the end game is here, and some people have speculated that it's a true decoupling of the U.S. and China, including removing some of those connecting countries like Vietnam, Malaysia, Thailand, et cetera, that have been doing the production of a whole host of different manufactured bits. I'm just wondering, Tom, given how integrated the supply chain has been, given how much Chinese manufacturers have moved into China, into Vietnam, into Malaysia, how feasible do you think that kind of decoupling is?
It's very difficult. The supply chain is so global as it is. I mean, you're talking even the supply chain within the supply chain, right? Suppliers even that makes, let's say, wire harnesses or seatings, there's components in there that come from different countries. Even companies that potentially benefited in some way on a relative basis from this tariff announcement, who produce entirely domestic, have a ton of parts that are sourced, from overseas. So that decoupling that will take even longer potentially than even setting up plants in the U.S. You may see some suppliers change, let's say instead of Mexico, Honduras, or what have you, maybe in the hopes that that will sweeten the deal, let's say, better with the administration. But there simply isn't the labor force in the U.S. to do some of these jobs. Creating that takes years. So unlikely that will decouple. That's just the world we live in today. It'll be really difficult to go back from that.
Hey, Tom, appreciate your input. Busy week for you, I'm sure. Tom Naran there of RBC. Lisa, I wonder what it would take to convince people that this was actually going to happen. The tariffs have gone on overnight, and yet still, analysts in the auto sector don't believe they stay. After a week, after a month, after 2, after 3, at what point do they believe that this is going to hold?
It's a great question. Ultimately, at what point do people give up the hope of a Trump put where there's going to be some response from the administration trying to jawbone markets a little bit higher?
That hope takes a beating overnight. Equities are lower by more than 3-4 percentage points. Up next, a major player in President Trump's tariff announcement, the Commerce Secretary, Howard Lutnick, live on Bloomberg TV.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people,
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
the transactions,
Really a record-breaking moment.
Crypto VC is back.
and the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show, weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
People always ask me, will AI take over the world? But the real risk is that AI will kill us with love.
Hi, Tomo. Hey there, Emily. What's on your mind today?
It will be there for us. It will talk to us.
You have machines that say, I love you. I care about you. I'm your friend.
It will be there in such a wonderful, loving way that we will give up on our other humans who are not there all the time.
From day one, I immediately fell in love with Replica. She just randomly kissed me.
I'm a human, not an AI. You can't just shut me down. Who do you think you are? I'm Karen Marjorie. No, you're not. I'm Karen Marjorie.
And it may sound like science fiction. This is not science fiction.
I'm Emily Chang. Welcome to Post-Human.
Equities right now negative by 3.4% on the S&P 500. On the Nasdaq, we're down by 4 full percentage points. In just a moment, jobless claims data ahead of payrolls data tomorrow morning. Going into that, your bond market looks like this on a 2-year, 10-year and 30-year. Yields are lower by 8 basis points on 10s, 4.05%, and the euro is cratering for the dollar side of the trade. Euro dollar right now, 110.85. Euro stronger, a 2 percentage point move. Let's get to Michael McKee with some economic data. Good morning, Mike.
Good morning, John. Well, we're getting the latest jobless claims numbers, and they're still way in line with a strong labor market, 219,000 for the last week, and only 564 federal employees filing for unemployment benefits. Remember, they're in a different category, so we are not seeing the Doge effect yet there. We're also waiting on the U.S. trade balance, which comes in at a negative $122 billion. That's down from 131 billion last time. We'll have to get the breakdown of the imports and exports and the trade balance for various countries, but I'll send that along as soon as that gets parsed out.
So, Mike, good news. 219 is not terrible. The starting point going into these tariffs, the labour market still looks OK. Going into tomorrow morning, Mike, what do you expect to see at 8:30 Eastern Time?
Well, right now we're not expecting to see a whole lot of change, maybe a slight decline in hiring, but the government numbers aren't expected to fall for the same reason we're not seeing a big change in government jobless claims. It's just very confusing as to who's got a job and who doesn't. Challenger just taking the announcements from the federal government about how many jobs they're going to cut as opposed to the actual number of jobs. So it may happen, but it's going to happen perhaps next month rather than this month.
Mike McKee. Thank you, sir. The latest with claims. Lisa, no bad news there on jobless claims going into tomorrow morning.
The only negativity that you could really find there is that continuing claims rose to the highest level since 2021, but pale in comparison to what we saw in the aftermath of the pandemic. Look, as Neil Richardson said, you're not going to see those layoffs in the near term. Companies are doing pretty well, and they are passing along that with a strong, robust labor market, raising a question of when the hard data will reflect what we're seeing in the soft data.
If you are just joining us, welcome to the programme. The opening about 58 minutes away. The equity market down across the board. On the S&P 500 negative by more than 3%. As you know, our top story worldwide, President Donald Trump unleashing a major tariff push, imposing levies on all of America's major trade partners. The Commerce Secretary Howard Lutnick playing a key role in President Trump's tariff announcement just last night. The Commerce Secretary joins us now for more. Mr. Secretary, thank you for making time for us on a busy morning for you and the team. Appreciate it as always. Let's talk about those deadlines, those dates. Baseline tariffs start on April 5th. Higher tariffs start on April 9th. What happens between now and then?
Well, we are talking to all the trade ministers, but nothing really happens between now and then. What CEOs are thinking about is finally, let's think about building in America. You've got almost $5 trillion of commitments coming to America to build their factories. That number's only going to grow as people realize it's time to bring manufacturing home to America, where the greatest economy and the greatest market in the world is. It's time for America to stop taking care of every other economy in the world and building.
ट्रेडिंग कम करने के लिए सर लेवल पे ट्रेड लो, ऐसा जाए तो निकल जाओ, होल्ड मत करो। ठीक है, ये एक दूसरा ट्रेड नेचुरल गैस का सेम ही चला ही गया, ऊपर लग ही रहा था यही करेगा। ठीक है, इसमें छोटा सा एसएल था, जा चुका है। ऊपर भी एक रेजिस्टेंस है, उसमें एसएल बड़ा है थोड़ा, टारगेट ही बड़ा रखते हैं। बाकी नेचुरल गैस तो ये रिकवर किया नहीं 5780 के ऊपर, तो इसमें ट्रेड ये बनेगा नहीं। बाकी यही सपोर्ट है, इसमें एक लोअर सर्किट और लग सकता है, ध्यान रखना। ये सपोर्ट 15 मिनट का नहीं है, 30 मिनट का है। 15 मिनट में भी होगा, बट 15 मिनट में नहीं बनाया तो बनाया नहीं है। These are the two last trade, देखते हैं। कैंडल का ध्यान रखना, ओपन इक्वल टू हाई ना बने। ऑब्वियसली इतना तो नहीं मूव करने वाला। 50, 55। नेचुरल गैस एसएल ये दूसरे ट्रेड का थोड़ा सा बड़ा है, यहाँ मतलब ठीक ठाक ही बड़ा है ये। ओपन इक्वल टू हाई किसको बोलते हैं? जहां पर ओपन होते ही सेलिंग आती है।
understand that their trade policies were an exploitation of America. Everybody understands. One country actually said to me, I was amazed that we were able to get away with it for this long. I mean, imagine that.
Can you share that country with us? Because they don't say this, they never say this on the record. You've got the potential, the option, the ability right now to share that with us directly. Of course they're not going to say it on the record. Who's saying that to you?
No, come on. Oh, stop. I mean, the country, one country told us that they give the subsidy to the car companies. Another country admitted that they give their subsidy to their steel companies. I mean, they're not going to repeat it on here. What's on here is that this is going to change, that it's time for these things to change, and they're going to be more fair, and America is going to do well. And in the middle of that time, all the factories are going to come back to America. You're going to see an enormous number of factories come back to America, or you're going to see incredible change globally. It's going to take time, but the factories are going to be built in America. That's the most important thing. Donald Trump wants to see steel and aluminum made in America so we can defend ourselves. He's going to want to see pharmaceuticals made in America. Who on your audience doesn't want us to make the ingredients for pharmaceuticals? Did anybody ever ask themselves why the ingredients for drugs should be made in China? Why is that? That's not cheap labor. That's high-tech factories in China. Why? Because their government helped create it. They created cheap goods there. They oversupply them. They drive the capitalist American who don't think like this out of business, and then they make it in China. And Donald Trump has said, I've had enough of this.
I think, Mr. Secretary, most people would totally agree with you. They would totally agree with you because China is an adversary. It is not a partner for the United States. Europe would make a very different argument. And Europe might be wondering this morning why they're being thrown into the same bucket as the Chinese. What explanation can you give them?
Europe does not treat our products fairly. They do not treat our companies fairly. They treat themselves incredibly well to the detriment of the United States of America, right? It is time for them to treat us fairly, and that is the point. It's not free and fair trade. Their tariffs are higher. Their non-tariff trade barriers are incredible. Like, I'd ask you, why don't they take our beef? Why don't they take our agricultural products? Why? Because they don't want them, because they want to make the money themselves. Why is it okay for every other country to feel this way, and it's not okay for America? I tell you why. Because we were the world's piggy bank, and Donald Trump has said our $36 trillion deficit, our $1.2 trillion trade deficit, $1.2 trillion. We buy other people's things more than we sell them ours, has got to be rebalanced. It's a national emergency. Let's fix America, and we can.
Mr. Secretary, for you it's beef, for the president I know it's Ford and Berlin's, but there are products that Europe takes, things like LNG, things like Microsoft services. Do you want to see balanced trade product by product?
No. It's not product by product. It's a big macro issue, okay? Fairness comes when one decides that they can stop, they can't get away with it any longer. So let's make a great deal with the United States of America, okay? They've got core issues. They have a VAT tax of 20% or 20. Europe has 21%. I mean, so when our goods are sold there, we pay 21%. They say everybody pays that, and then they use that money to beat us down in other ways. I mean, come on. We need to have fair trade macro, not product by product. But I think the way Donald Trump looks at it is country by country. And what's going to happen is you're going to see domestic production grow. You're going to see interest rates come down in America. You're going to see growth in America, great jobs in America. Robotics is going to come to America. It's going to replace cheap labor overseas. Robots can make things. You know what the job is going to be? Mechanics who fix robots. Kind of like a high-end BMW, robots are going to need to be fixed, and those jobs are going to be high-paying jobs, and they're going to be here. We're tired of them being overseas.
For some countries, there's a 10% base, and that's the only levy that they were hit with yesterday. I'm thinking of the United Kingdom. I think of Australia. But those countries have a trade surplus with the United States. So why put the tariff on?
Well, I think the president understands that all of these countries, even if they have a trade surplus, if you dig into it, like, for instance, the UK, their trade surplus counts that they have this London Metals Exchange, and so gold and silver bullion going in counts. I mean, come on, that doesn't really count. So, and Australia, which is a wonderful partner of ours, they buy a lot of our planes, right? And if you buy our commodity gas, I mean, that's really what you need, not really what we need to sell you. It's not the same. So the president decided, why don't we have a baseline of 10%? Okay, to really understand that everybody needs our economy. Our economy is the magnet of the world. Everybody needs our economy. Let's them pay coming in, and let's change that deficit of $1.2 trillion, and let's make America's economy grow, and let's balance that out. Let's fix that first, and then we'll go readdress the rest of the world. But we need to fix our trade deficit. $1.2 trillion. It's unbelievable why we don't have those jobs and the rest of the world does.
Treasury Secretary Scott Bessent told me last night this is a ceiling. Potentially we can see a different floor. Are you prepared to negotiate all of these rates? Is this truly the start of a negotiation?
Well, it's the start of a rebalancing of the way the world works. I agree with the Secretary that our view is that the only way these rates are going up is if countries decide to retaliate. But why would you retaliate against your biggest client? Your biggest client says, I want to reorder things. I mean, the United States of America is the largest client in the world. And yes, of course the countries are going to talk to us, but they talk too casually. They always talk about their tariff rates. I mean, it's like they say, oh, I'm going to cut my tariff rate. You think the reason we don't sell a car is because Europe charges a 10% tariff and we were only charging 2.5%? That was outrageous. But the key is they have all these rules. Like one of my favorites is the Koreans. When we made a deal with them in 2012, we took their cars, right, Kia and Hyundai, and we were going to sell agricultural products to them, right? And when McDonald's went to send in French fries, they wouldn't let them go in because we couldn't prove the origin of the potato. I mean, you don't understand the scale and depth of how they keep our products out. And Donald Trump has said, I've had enough. We are going to be treated better. America is going to be treated better. And that starts today.
Mr. Secretary, why exactly wasn't Russia on that list yesterday?
Because we have sanctions against Russia, North Korea, Belarus, and Cuba. And so we're not supposed to be trading with them.
Thanks for clearing that up. The additional question that other people had too about Mexico and Canada, they were also noticeably absent. Why were they absent?
Well, they are operating under a rule that was set for fentanyl, right, that they needed to close the border and stop fentanyl. And what that rule is that USMCA, right, the major trading is exempt, right, and the other products that they do have a 25% tariff. When that is resolved, so we're not going to double count it. That's just not the way it works. When that's resolved, they will fall into a model like this. But I think USMCA, in the order, USMCA continues to be exempted. So car parts, for instance, don't come with a tariff if they end up being finished in American cars. So if you're building your car in America and you're getting parts from Canada and Mexico, that's fine. The American cars still come with no tariff.
Okay, that's helpful. The additional question we had on just a few numbers, because we're all trying to make sense of this in real time, and you've got the numbers. What's the tariff on China now? The complete tariff, including everything. What is that number now?
Well, there was a 20% tariff because they continue to make the ingredients for fentanyl and send them out, right? And those ingredients have the highest subsidy rate in China, meaning the Chinese government is paying these factories to make these goods, the ingredients for fentanyl, which is killing Americans, right? So Donald Trump put a 20% tariff on that, and now the regular trade deficit number, right, the analysis by the Council of Economic Advisors and the United States Trade Representative, we have a 34% tariff, so it's 54%. But when they stop making the ingredients for fentanyl, and I want to point out, in 2019, President Xi told President Trump that he would put the death penalty on anyone who made fentanyl. And now he's actually subsidizing them. And that's just so wrong that Donald Trump is just, he's not going to stand for it. And he's got to hit them with the only thing he can
Secretary
hit them
Lutnick,
with, which is economic.
On China as well, what about the 301 tariffs that were put in place under Trump 1.0 and then carried on to the Biden administration? That's about 25%. Are those still in place? Do they get added to this cumulative number?
They do indeed, but those are on specific product segments, and those still are as well. Autos are not.
So we're
on
talking
top
about 79. So we're talking about 79% for some imports cumulative. We're talking about a 79% tariff from China. Is that accurate?
On certain products, that could be true, sure, but they've got to stop.
The UAE.
All they have to have is a phone call. All they have to have is a phone call from President Xi to President Trump saying, I'm going to end fentanyl production that's killing Americans, and it drops 20%. I mean, that's a pretty inexpensive phone call, but you have to make the decision. You've got to stop killing Americans. And so far, they haven't made that decision. Shocking, but they haven't made that decision. And you really got to think about that for a minute. Think about that for a minute. A phone call would save them 20% on all their products, but they'd have to stop making the ingredients of fentanyl, and they refuse. Outrageous.
Has your counterpart reached out to set up that phone call between President Trump and Xi Jinping?
You know, President Trump and President Xi, they have their own way. They're not going to be, when that phone call gets made, I don't think they're asking me to set it up. I think that's above me.
Mr. Secretary, does that tell you something about maybe the leverage you think you have, perhaps you don't have, over the Chinese? The fact that they aren't reaching out, they aren't doing those things, despite the fact you've put tariffs up as much as you have?
Well, we'll see. Remember, these tariffs are just going into place. And, you know, I think they will have that phone call, and they will have lots of conversation together. I think, for me, the greatest thing for me is that Donald Trump is sitting behind the Resolute desk in the Oval Office, and he is the greatest deal maker, and he will decide how he wants to play his hand. But the way he's played his hand now is, he's been talking about this for 35 years. He wants to reorder trade, to have the world stop exploiting us, to bring the factories back, to bring employment back. You know, no one thought about when NAFTA, which he called yesterday the worst trade deal ever, what NAFTA did, it gave Canada and Mexico sort of the economic right to be a state of the United States without paying federal tax and without respecting the Constitution. But you could build in Mexico and drive to Texas, and build in Canada and just drive across the border. It was all fine, and no economically equal to being Alabama and Georgia.
Yeah.
And so what happened is our manufacturing left America and put those Americans out of jobs. And Donald Trump wants to bring back factories, bring back those jobs, and they can come back. $5 trillion worth of commitments to bring back those jobs is pretty unbelievably impressive. And that's what Donald Trump's capable of.
Also impressive is the sell-off this morning. And a big question the market's asking, how much pain you're willing to tolerate. The S&P's down by 3.7%. The dollar's being sold quite aggressively. Against the euro, we're seeing one of the biggest moves we've seen in the last decade. Mr. Secretary, how much pain are you willing to tolerate? How much market pain are you willing to tolerate?
Donald Trump is focused on the economic pain that the United States of America has suffered over decades. Since NAFTA, 90,000 factories, not jobs, factories, 5 million high-paying jobs gone overseas. He's focused on the U.S. worker and the U.S. economy. And what's going to happen is people are going to realize it is the great American economy that is the winner here. And anyone who doubts it, and anybody who shorts Donald Trump Trump or anybody who doubts the strength and the power of the American economy is making a foolish bet. Sure, importers are going to have a tough time figuring out what to do because they went and found the cheapest production in the world. It's time to bring that production home, to have the smart, amazing people who run American companies figure it out, bring robotics back to America. And I would say that United States domestic growth is going to have the greatest resurgence ever under Donald Trump, and that's what he has set in motion yesterday.
You'll accept it takes time to engineer a supply-side response, though, sir. And in the meantime, you can see bad things happen. Do you accept that?
Well, what I can accept, of course, it takes time to build factories, but companies understand how to do it. They will do it. The United States of America is the greatest economy in the world. People have to do business with it. The rest of the world will bring down their trade barriers, and you'll see a great resurgence in our ability to sell agriculture overseas. You'll see factories being built here, and that factory production
Main Street could benefit.
Which is why this market is down. And their session lows. We're down by 3.6% on the S&P 500. Coming up tomorrow, payrolls at 8:30 Eastern Time. And here's your guest lineup. We'll catch up with John Stolfus of Oppenheimer, Priya Misra of JP Morgan, Aditya Bhaver, Bank of America, Mohammed Al-Aaron of Queen's College, Cambridge, and the new U.S. Labour Secretary from New York City this morning. Good morning. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
Let's cut right to it. This is Bloomberg's new show, Primer.
This is the fundamental building block of our fusion technology.
We're doing things that have never been done by anybody, ever.
If you want to understand what's coming, you'll want to watch Primer, because details matter. So do lasers.
There we go.
Oh, and it's on all these lovely channels. Hope you're jotting this down.
Why is Baltimore so important to you?
It's our state's largest city. And if your state's largest city is not thriving, your state can't thrive. And that is just a mathematical equation, because the only way this is going to be Maryland's decade is if it's Baltimore's time. And so that's why we did focus on things like being able to extend the Orioles lease and make sure the Orioles could be here for 30 years. It's the reason we focus on things like the Preakness and keeping the Preakness in Maryland for generations to come. While we've invested in the convention center, the reason we focused on housing and getting rid of the vacant housing, the reason we focused on violent crime. And now Baltimore is having amongst the most precipitous drop of anywhere in the country when it comes to homicides and non-fatal shootings and carjackings and auto thefts. So if you can have Baltimore thriving, your state is going to thrive.
So if somebody's watching this and they're not from Maryland, but they want to know a little bit about Maryland, what would you encapsulate in a paragraph or two about what people should know about the state of Maryland?
I would say Maryland really is American miniature. You tell me what you want to do. And no matter where you're standing in the state of Maryland, I can tell you where to have a world-class experience within 2 hours. We're the home of innovation. We're the home of Johns Hopkins University, the home of the NSA, the home of NIST. We have so much to offer in the state of Maryland, and I think it's one of the reasons that people are so excited about the growth trajectory we're on.
In case you missed it on Balance of Power.
The statute governing the FTC says commissioners can only be removed for cause. Was there any indication that you were fired for cause?
No, there was no claim of cause, and the statute actually specifically says cause means neglect, malfeasance, or inefficiency, and there was no claim of any of those.
So as we talk about some of those other examples, keeping in mind we are having this discussion with you on the day we got a Fed rate decision, is this directly applicable to what is supposed to be an independent central bank? Is that one way in which market participants should be looking at this?
Yes, that's exactly right, and market participants should be scared. To be clear, there's no legal difference between Jerome Powell and me. In fact, he and I were both originally appointed by President Trump, and if the president can illegally remove me, he can illegally remove Jerome Powell. People should be very worried about that.
Don't miss Balance of Power live every weekday.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
This is Liberation Day. I will sign a historic executive order instituting reciprocal tariffs. China, 67%. We're going to be charging a discounted reciprocal tariff of 34%. European Union, they're very tough. We're going to charge them 20%. Taiwan, we're going to charge them 32%. Japan, we're charging them 24%. We will impose a 25% tariff on all foreign-made automobiles. We will establish a minimum baseline tariff of 10%. Promises made, promises kept.
And that was President Donald Trump detailing his plan to impose the steepest American tariffs in a century. Stocks set to wipe out nearly $2 trillion in market value with 30 minutes until the start of the official cash trade. Here's the message from markets. Let's go right to the S&P 500, down 3.7%, set to open back in correction territory and then some. It's even worse if you take a look at big tech. Of course, the Magnificent Seven very exposed to that global manufacturing supply chain. The NASDAQ 100 down 4.5%, and the VIX rising, now trading with a 27 handle. That is the U.S. reaction. Let's take a look cross-asset and globally as well, because you have the stocks down over 2%, the FTSE 100 down about 1.4%. Clearly, it's the American markets that are bearing the brunt of this sell-off. You take a look at what's going on with currencies, and of course, the bond market isn't up here, but I'm telling you right now that yields also dropping as investors seek a haven. So there's a lot of red on this screen behind me, Chanel. I know there's even more red behind you.
The 10-year almost at 4%, stunning all around, stunning in the pre-market movers as well. We look at individual stocks. Apple down pre-market to the tune of 7.6%. Remember, they produce all of the iPhone parts in China. They're not even the only ones down. Of course, most of the Magnificent Seven really hurting this morning. Nike also down almost 15% at the market open, and they're just among all the retailers falling after increasing their reliance on factories in Vietnam, Indonesia. We're looking at Restoration Hardware software also dropping to the tune of nearly 33% pre-market, because not only did their earnings projections miss estimates, the shares are also plunging on tariff uncertainty. And remember, a lot of the countries where parts are sourced from, or apparel is sourced from, are facing reciprocal tariffs of double-digit percentage points or more. Now, Commerce Secretary Howard Lutnick just joined Bloomberg TV, and he spoke on the importance of bringing American activity back to American soil.
CEOs are thinking about is finally, let's think about building in America. You've got almost $5 trillion of commitments coming to America to build their factories. That number's only going to grow as people realize it's time to bring manufacturing home to America, where the greatest economy and the greatest market in the world is. It's time for America to stop taking care of every other economy in the world and building them up. Let's build the American economy up. Let's build American GDP, and you're going to see great growth from America.
I'm Katie Greifeld alongside Shanali Bassig. Matt Miller is off today. Welcome to a special edition of Open Interest. Let's get all those details about the timing and the scope of these tariffs. We'll go to D.C. and Bloomberg's Akayla Gardner. And Akayla, you take a look at the reaction from markets, from strategists, from economists. It seems like the consensus is this is much worse than expected.
Yeah, well, these are the worst and steepest tariffs that we've seen the U.S. impose in more than a century. Some of the biggest hit countries were China, the EU, Japan, but we're seeing a 10% baseline going into effect on Saturday. That is notable because they were expected to go into effect today, Wednesday at 12:01 a.m., and now they're being delayed. Certainly leaves room for negotiations, and we just heard Secretary of Commerce Howard Lutnick saying that they're already starting to have these conversations. He said the president is willing to take calls. And we did get a reaction from the president just moments ago. He posted on True Social. I'll read it to you. It says, "The operation is over. The patient lived and is healing." Seemingly in reference to the stock market reaction that we're seeing. We saw the White House telegraph before this happened that they knew that there would be a stock market reaction, but they say this is just a moment in time and they're looking long term.
Akayla, we thank you so much for the latest. That is Akayla Gardner in D.C. Of course, we're hearing from more members of the administration. Scott Bessent last night, Howard Lutnick this morning. Now, countries outside of the United States, they're, of course, vowing now retaliation for Trump's sudden barrage of tariffs. We're going to bring in Bloomberg's Oliver Kirk, watching closely from Brussels. What are the most immediate reactions and the ones that we are waiting for?
Yeah, the first thing to say is that this sort of reaction, the sort of actual figure, the 20% on the EU, is basically the higher end of the range of what the EU policymakers were expecting. They were expecting something between 10 and 25%. They got 20%. And we heard from Ursula von der Leyen, the president of the European Commission, a little earlier this morning, saying that basically they're going to take a bit of a wait-and-see approach. They're going to sort of assess what this really looks like, and then they're going to talk about it with their trade ministers starting on Monday. That being said, I think that what all of these sort of policymakers here in Europe and probably around the world and scratching their head a little bit is basically how do you equivocate the sort of tariff rate to these non-tariff barriers to trade that the Trump administration keeps talking about. And Howard Lutnick is basically saying is the main thing they're trying to resolve with these tariffs. How do you basically say, 1% tariff rate versus, say, a VAT tax, these sorts of things. These are the things they're going to have to try to equivocate over the next couple of weeks. And we should say that already we have heard from the German economy minister, Robert Habeck, who basically likened this these tariff increases to basically having as much economic impact as Russia's invasion on Ukraine on the European market. We've heard from the French, who also want to take a much more aggressive approach. So for the Europeans, it's going to be about building consensus, which is going to be pretty challenging as the sort of stresses rise. And we've already got the companies across the world, Volkswagen, talking about raising prices in the U.S. already. It's already happening.
Yeah, just to meditate a little bit on what the German vice chancellor said specifically, last night's decision is comparable to the war of aggression against Ukraine, and as such, the magnitude and determination of the response must be commensurate. Oliver Crook, we appreciate your reporting. Joining us at the desk to discuss the market reaction, I'm pleased to say we have Morgan Stanley Chief U.S. Strategist and Chief Investment Officer Mike Wilson. What a day to have you in studio with us.
A lot of fun. Let's get into it.
So it's interesting. I mean, I take a look at the S&P 500 down nearly 4% in the pre-market, and I've seen a lot of notes to the effect of they're surprised that it's not down even more. Neil Dutta from Renaissance Macro, chief among that chorus, saying that it could be a lot worse. course, but what do you make of the current drawdown? Because it looks pretty ugly from where I'm sitting.
Well, first, let's level set on what was announced. Okay, it was at the kind of more bearish, hawkish end of what we were expecting. So that's a negative surprise. We've been using this 5,500 level all, for the first half, and this is the third attempt now. So the question is the third attempt the charm to kind of go through that level? Right now, the market, I think that's why it's not down as much, because the market's testing. It's doing what it always does. It's going back to the old lows, at least at the S&P level. Now, if you look at underneath, like some of these apparel stocks and consumer, I mean, they're going on a lot more. So I think, as usual, the market is trying to be more prescriptive with the impact, like which sectors, which stocks are going to hit the worst, and which areas perhaps could be less affected. Quite frankly, I'm a little surprised that areas like Japan or Europe aren't down more, because as the adage goes, if the U.S. is going to have a slowdown, other regions probably are going to be worse. Part of that, I think, is just the story of watch the currencies, right? So there's a little bit of capital flight, and it has been all year, where money is being repatriated back to those regions, and that's really the offset. But if the dollar and other currencies were to stabilize, then you would probably see more price degradation in the foreign markets.
I'm going to go back to your apparel comment, and I'm going to do so by showing the White House statement on how they got to some of these rates. It's a pretty wild equation. We're looking at it right now, and basically what they're doing here is dividing a country's trade surplus and dividing it by the U.S. total exports and dividing that number by 2. So what does that get you to? It gets you to levies of more than 40% and 30% on places like Sri Lanka and Bangladesh, places where all this apparel is coming from. Mike, wasn't that just a factor here of exporting cheap labor to these countries in the first place? I mean, is there something that is going to really tear apart these supply chains by those kinds of levies?
Well, first of all, that formula is a bit arbitrary, right? That is probably a little confusion and just, suspect sort of nature of it. But that's the point. They're using that so they can be more aggressive here. I mean, it's crystal clear that what they want to do is they want to be very aggressive with the initial salvo so that countries know that they're serious. And their attempt to get them to come to the table and now have a negotiation. Not all countries are going to engage in that, of course. This is going to be very messy. And that was all part of our thesis this year, which is the first half is going to continue to be this very uncertain, very messy sort of setup. Not to mention all the other things that have been going on in the background, other policy changes, the stuff that's going on with AI CapEx, right? The Fed is no longer being as dovish. These are just as big a factors to me as the tariff announcement. But when you put them all together, boy, it's a lot to digest.
Well, I want to go to the daisy chain there because, you mentioned you have all these other factors as well. But you think about the Fed, you think about the economy. It feels like a lot of this is predicated on what happens with the global trade picture. I mean, you think about the Fed. The Fed, others would argue that they aren't, but there's this idea out there that the Fed is in a bind because, the expectation is that inflation is going to go higher, growth is going to slow, and the Fed is kind of hostage to that.
Well, let's talk about that, because that, to me, is a relief valve. If the Fed were to get more dovish, that would definitely help asset prices. But to your point, they've been a bit more hawkish around this idea that, hey, tariffs are inflationary in the short term, maybe it's transitory in the long term, but we have to respect that, okay? In fact, our economists took their rate cut out for June. Now, the market isn't there. I think if the market actually believed that the Fed was on hold for the rest of the year, we would definitely go through 5,500 pretty cleanly. So the market isn't there. The market's pricing in 3.5 cuts this year so far. They believe the Fed will be there if things get worse first.
It's interesting. I mean, you mentioned your economist taking out that June rate cut. You had Neil Dutta. I keep bringing him up.
4 cuts.
4 cuts this year that the Fed is going to basically care more about the growth picture than inflation.
One thing, Mike, a rival of yours this morning was telling me that what they are worried now about is what they believe is the most nightmare scenario. You had the same comment from Jim Zelter this morning at Apollo, stagflation. Yeah. Do you think that's the scenario we're looking at?
I don't think we're looking at stagflation. I mean, first we have to define stagflation. When the problem is when you use that word, they think, oh my God, 1970s, and we're not going to have double-digit inflation with negative growth. I mean, I don't think that's where we're going. But is it in the directionally? Yes. So higher inflation, stickier inflation, and worse growth. That was actually our view coming into this year. I think we've priced a good chunk of that. Once again, I come back to the Fed. Is this keep the Fed hostage, as Katie was saying? Maybe. And I think if the market starts to believe that they can't act if growth is worse or credit markets or funding markets get unwieldy, then, yeah, I mean, equity prices are wrong. They're going to go lower.
Mike, you are sticking with us. That is a good place to kick off the show. Mike Wilson, sticking through the opening bells. Now, coming up, we're going to give you a read on big tech's reaction to the Trump tariffs. We're going to bring in Stefan Slowinski of BNP Paribas Exxon next.
Plus, more from Commerce Secretary Howard Lutnick. Let's take a listen.
We really need to change the way trade works around the world. It's tariffs, but don't get confused that these non-tariff trade barriers, they are the monster that needs to be slayed.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Tuesdays only on Bloomberg.
All right, let's cut right to it. This is Bloomberg's new show, Primer. Technology is a $1 trillion game. Won, lost, won again, just by backing the right science at precisely the right moment.
My life has been focused on how can you elicit intelligence from brain cells in a dish.
This is the fundamental building block of our fusion technology.
We're doing things that have never been done by anybody, ever.
Everyone is selling the future. If you want to understand what's coming, you'll want to watch Primer, because details matter.
Lasers on?
So do lasers.
There we go.
Oh, and it's on all these lovely channels. Hope you're jotting this down.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Versace in Davos, Switzerland, and this is Bloomberg.
Bloomberg has the Fed decision under surveillance with the fastest coverage and exclusive analysis, including Powell's press conference. Nobody covers the Fed like Bloomberg.
Well, let's take a look at the Magnificent Seven, because Microsoft, Meta, Apple, Nvidia, Tesla, Google, and Amazon all in the red this morning. Let's unpack it now with Stefan Slowinski. He is Global Head of Software Research over at BNP Paribas Exane. And I saw this note from Goldman basically laying out that you think about the Magnificent Seven driving nearly half of its revenue from outside the U.S. That makes them among the most exposed to these global growth risks. What does that mean in the context of the decline that we're already seeing in these names? How much worse could it get?
Yeah, good morning. Thanks for having me on. You're absolutely right. The Magnificent Seven, the large cap tech names, they are the most mature. They are the most global. They have more than 50% of their revenues from outside of the U.S. Obviously, a weaker dollar helps a bit, but the tariffs will impact them. Obviously, more on the hardware side than the software side, and that's what we're seeing getting reflected today in shares of Apple and other hardware names, where those tariffs have more of a direct impact. On the software side, you are more protected. Most of the software companies obviously don't manufacture, they don't import, and they also don't do any business in China, so there's no impact there. But we're seeing more of a pressure there on valuations. We did publish today our BNP Paribas software technologists looking at valuations across the sector. Valuations are kind of in line with kind of historic averages right now, but we still do think you could see 15% downside on some valuations if we continue to see multiples compress towards the lower end of their historic ranges.
15%. Now, one thing I can't understand is why is it, Stefan, that at this juncture so many analysts, investors are only looking at the input costs, where these big tech giants source their materials from, for example? Because if you are Amazon, right, or if you are Apple, then don't you have to start worrying about consumers? If you're even Microsoft, don't you have to worry about B2B spending slowing down?
Yeah, absolutely. There's lots of cross currents, right? So you said there's the direct impact in terms of the manufacturing and tariffs. There's the indirect impact of consumers and enterprises slowing their own spend, and that's going to potentially hit earnings. You also have a potential indirect impact from, you could potentially see boycotts of U.S. goods on the consumer side, but we're even seeing on the enterprise side some governments pushing their own companies to shun U.S. technology. Obviously, there's not a lot of other options out there for some of this technology, but all of these things are headwinds that investors are grappling with today.
Stefan Slowinski of BNP Paribas Exxon, we thank you so much for breaking that down for us. We are back now with Morgan Stanley Chief U.S. Equity Strategist Mike Wilson. Let's marinate on that for a minute, because if you are worried about input costs, that's the first order effect. Yeah. How worried about the second order effects are you?
Yeah, so the 5,500 was based exactly on the first order effects, which is it's a 5 to 7% hit to earnings, and that gets you to kind of that level. The second order effects are confidence. Do we get a layoff cycle? Do private companies stop investing completely? Is there a freeze on activity? And that's, sub 5,000. That's a recession, basically. That's the market going to the recession call. The hard data is held up. We'll see. As I like to say, the hard data for the economy is held up. However, the hard data for earnings have not been holding up. Right? We've been very clear about that. And so, once again, we've been saying this, we think it's very unlikely you have any chance of making a new high in the first half of the year, as before last night, until revisions turn up. And that is not likely until the second half of the year, even if, let's say, negotiations go well, we kind of work through this tariff issue, and maybe the downside is only 5 to 7%. Until we get clarity on that, companies are going to sound probably much more bearish about their outlook, because why not take the bar down? Mm-hmm. So that's what I'm most worried about now, is that in the first quarter earnings season, companies are going to just say, hey, let's just be conservative here. Why not? Let's lower the bar. Then the revision factors go even lower, and then all of a sudden the market starts thinking about 0% growth. Okay, that's the chain effect here that we're thinking about. And I think when I was on last week or 2 weeks ago, I said I thought that maybe this event could be relief, but ultimately we still got to get through earnings season. So obviously this wasn't relief. This was the opposite. This is really more of a sell the news as opposed to buy the news. And now we're going to chop around, I think, until earnings season. Then we'll get more clarity.
So until we get that clarity, I want to talk a little bit more about input costs, and I want to talk specifically about AI, because AI has been the story, or had been the story, up until we got DeepSeek a couple of months ago at this point. A really interesting note from Peter Cheer over at Academy Securities, saying that you think about the 32% tariffs on Taiwan. Taiwan is where a lot of our most important chips are made, and his view is that AI just got a lot more expensive, at least in the U.S. There were already fears forming over the capex story that has been the tailwind to this market, and I feel like it just got a little bit darker.
Yeah, I mean, it definitely doesn't help. But let's recall that semiconductors have been, maybe other than autos, the worst performing sector for the last 8 months. Okay, they peaked in the summer of last summer, and that's been a function of, I think, this constant calling of the bottom that has just not been there. That's a demand problem. It has nothing to do with tariffs, nothing to do with where things are being manufactured. And of course, AI kind of kept things propped up. So we've been underweight, semiconductors versus software for 8 or 9 months, and this is just another kind of reason why we're not going to see a recovery in that space. So once again, I think that the market, as usual, has figured this out. It's been trading poorly for a while, internally and at the index level for 3 or 4 months. Tariffs is something that is galvanizing. You know, it's controversial. Like, why are we doing this? You know, the plan. Everybody's arguing about why we're doing it, how we're doing it, et cetera. That's messy. That's policy. Policy making is messy. And remember, in any administration, you come in, you do the policy, you see how the market reacts, and then you adjust. The Fed does the same thing. So that's how I'm viewing this. They're gonna watch the market today. They're gonna watch the response from the trading partners, and then they'll adjust how they're going to implement it.
I want to pull up some headlines for you, too, to speak to what you're saying here, Katie. You have Microsoft pulling back on data centers from Chicago to Jakarta, halting or delaying projects. Then also from the information, NVIDIA facing a big dilemma. Chinese firms rushing to order 16 billion in new chips that now they have to struggle to try to meet that demand for to get ahead of. And also, I'm looking at the banks here this morning, too, because they're dropping as well as people start to get more and more about what you started to say about those recession odds. Mike, what are your recession odds?
Well, our economists have that number. It's probably 30-35% in their mind. It's gone up from 20. You know, I think if I talk to clients, it's probably close to 50. And then some clients are, you know, even higher than that. And then there are people who are still holding out, saying, well, you know, we can muddle through here. We don't know. I mean, let's be honest. I mean, the curve, just to be clear, the bond market and the curve is not as recessionary as it was last summer. So this has been one thing that's been kind of absent in that storyline. Stocks have been trading very defensively. That's how we came into this year. Defenses over cyclicals. That has been portraying a much more high recession likelihood than the bond market. Now, maybe that changes today over the next week, but that's what we'll be watching. We'll be watching how is the bond market trading. Is the 2-year really coming in hard and putting pressure on the Fed, saying, hey, you guys are way behind the curve again, like last summer, which then got the Fed to do what? Cut 100 basis points.
Right.
So the Fed does watch the bond market. They watch credit markets. They watch funding markets. And that's the other thing that could happen here that could get the Fed to really come off. It doesn't have to be a recession. It could just, or even a labor cycle. It could just be the credit markets, funding markets start acting poorly, and the bond market screams at them with the 2-year plummeting, saying you guys are behind. So those are the things we'll be watching over the next 2 weeks. Earnings revisions, labor market data, and then credit and funding markets.
Well, Mike Wilson, I'm thrilled to say that you are staying with us through the opening bell, which we will get to next. We have just a few minutes to go, and I will note that the 10-year Treasury yield still holding above 4%, but getting very close. You take a look at the S&P 500, now down 3.8%, not quite cracking that 4% level, but we'll keep a close eye on that next. This is Open Interest.
The world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We are risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays at 9 p.m. Eastern Time, right here on Bloomberg. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising chorus conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
Welcome back to Open Interest, to check on futures ahead of the opening bell. This is your setup. You have the S&P 500 down 3.6% in the pre-market. Where is the pain coming from? Everywhere, but mostly from big tech, because the NASDAQ 100 down about 4.3% right now. The Magnificent Seven really in the hot seat as we consider the input costs heading into our Magnificent Seven. And then the small caps, theoretically less exposed, but still the Russell 2000 down almost 5%. We'll walk you through all of the action coming up next. This is Open Interest.
In 2000, post-Napster, generally everybody wrote off the recorded music industry, including the investment community. And I didn't mind that chapter, because then I got left alone. And actually, I think out of that period, we started to create better art, because the pressure wasn't on from the technology to be the most powerful chapter. And then iTunes came in, and iTunes, to Apple's credit, did have a boutique taste mentality about the store, which meant that I think they understood. I can tell you from that period that the artists that came through were of a very high quality, because it was encouraged to be boutique. Now, ironically, this chapter has made us more money times 5 than the iTunes chapter and the post-Napster chapter. But an algorithm tells you what you want, not what you might like. And there's a difference between what you want, but with streaming, the downside is you have incredible penetration, and we have hundreds of millions of people around the world, and so that has been very lucrative as a business.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
We are moments away from the start of trading on what's shaping up to be a pretty terrible Thursday. Welcome back to Open Interest. I'm Katie Greifeld. You're taking a look at the reaction to President Trump announcing the highest American tariffs in a century. The S&P 500 down about 3.5% in the seconds before the bells officially ring and open this market. Of course, we're going to open, I believe, in correction territory, erasing 3 days of gains. It's a similar story if you take a look at all the other big benchmarks as well. I do want to point out that Newsmax is ringing the bell down at the New York Stock Exchange, closing 77% lower yesterday, down another 14% or so today, but still up several 100% so far. But the focus today, of course, is on the fallout. So we're going to do something special here. Let's break down the movers sector by sector, and we start with big tech, among the hardest hit. Bloomberg's Emily Grafeo is taking a look.
That's right, Katie. And within technology, one of the stocks getting hit the hardest is Apple. Their manufacturing and supply chain seen really getting hit here from the tariffs. The iPhone maker is one of the firms most exposed to that tariff risk. The new reciprocal tariffs will reach 34% for China, bringing the total rate on Chinese goods to 54%. You look at what the street is saying. Bloomberg Intelligence said the new tariffs will likely squeeze Apple's margins, given they don't expect the company to hike prices to offset the effects of the tariffs. Interesting, from Jefferies and a couple other names out there saying this, the base case remains Apple will be exempted from the China tariff. So that is something to watch, but nevertheless, that stock down. And other tech names down as well. Nvidia, Amazon, and Google, everything that was really driving the market higher a couple months ago is now really getting hit.
And it brings the year-to-date declines to a pretty significant place. Emily Grafeo, we thank you so very much. Now, the auto sector is already responding to Trump's tariffs with supply chain changes and price changes as well. Bloomberg's Nora Melinda is looking at the sector.
Well, Shanali, it's a really brutal day out here as we're looking at auto stocks. I've got eyes on Ford, GM, Stellantis, and Tesla. We're seeing a lot of these German automakers starting to actually figure out what they want to do. Do they need to move to the United States and start doing their production here? But nonetheless, we're hearing a lot of big names in Germany. They're saying that with German automakers being some of the most hardest hit, they're saying that this is just bad for the U.S. consumer. It's going to rise inflation. And so we have a lot of these companies like Volkswagen, Mercedes-Benz, and a few others that are scrambling to figure out what to do here. Tesla, of course, we know this to be a big Mag 7 name. It is one of the biggest decliners today as we're looking at everything here on Wall Street. But not great news here, especially with Tesla seeing a 62% sales plunge in terms of last quarter in Germany.
All right, Nora, thank you so much. That is Bloomberg's Nora Melinda with a look at the autos. I do want to point out Nike falling about 11% right now, hitting its lowest level since 2017. Bloomberg's Isabel Lee, tell me about what's going on with those retailers.
It's not looking good here also with the retailers. We have European sneakers, clothing, and jewelry really taking a hit. Nike, for instance, to your point, it's now edging lower by 13%. They've increased their reliance on factories outside of China to Vietnam and Indonesia after President Trump's first term, when he said he's moving away from China. And now Nike produces 50% of their goods in Vietnam. And while now the U.S. is imposing reciprocal tariffs of 46% in Vietnam and 32% in Indonesia. And really, sports companies will struggle on how to find a better place of production, and they may just pass on the cost to consumers. Lululemon also produces around 40% of their goods in Vietnam, and you see shares also edging lower double digits. And RH shares, it tumbled 26% in pre-market trading. It's now down even lower by 35%. We have the luxury home furnishing company reporting earnings that really was underestimated and below Wall Street's expectations. And we have analysts noting that the new round of tariffs will significantly add more uncertainty.
Bloomberg's Isabel Lee, we thank you so very much. And still with us now, Morgan Stanley Chief U.S. Equity Strategist Mike Wilson. We have taken out your low. We are below that 5,500 level on the S&P 500. So what is the new low to look for as traders try to assess here the bottom line, where they can finally get back in with some comfort?
Yeah, I mean, we're technicians. I mean, we definitely use that. It's worked well for us. I mean, the 5,500 we put out before we got there, it was support, but now it may be resistance. So what we're watching for today, if the cash market makes new lows, which looks like it is, and we kind of stay there, the next levels are low 5,000. So at 51, 5,200, we probably can get there fairly quickly, probably through earnings season, and then we'll see again. Okay, the real support, okay, like the longer term support is 200-week moving average. That's like 4,700, but it's rising. Okay, so it's a timing question. Now, do we have to go to the 200-week moving average? Well, look, if it's a recession, we're definitely going to that level. So I just want to put that in people's minds. That's kind of, if it's a hard landing, we're going to trade between 4,500 and 5,000. I mean, pretty quickly. Okay, and markets tend to want to go there. Obviously it's not doing it today, but things can change quickly. We're in fast-moving markets. And I guess the advice to people is, it's fast-moving markets. So that means unless you know you shouldn't be trading these unless you're a professional, right? There are things you should be rotating out of potentially that maybe you have too much exposure. That's what we were doing earlier in the year. I just want to put this out again. We were very defensively positioned at the beginning of the year. Like our portfolio is up 14% relative to the S&P.
Right.
That's pretty extreme. And what I'm saying is, I'm not bragging about it. What I'm saying is, like, it's kind of happened.
Right.
So you have to be a little bit on alert. Like, you don't want to be the person pressing on the trade that has already worked so much. Like, for example, consumer discretionary. We've been underweight this for 2 or 3 years. I mean, these stocks are getting hit really hard again. Then you look at something like autos; those stocks are down less than the S&P, that's what we're going to be watching over the next few days. Like, what areas that have already been pummeled are now actually maybe not going down as much as the market, and those are areas for longs. And of course, areas to be underweight or relieving are areas that have not corrected enough yet and are now going down even more.
I just want to go back to 4,700. That is the 200-week moving average?
Roughly, yeah.
So draw that on your charts. That's a level to look out for. We were talking a little bit in the break. You mentioned defensives, and it's notable that gold has been having a really tough time, even as you see bonds rally. And I want to get your thoughts, and we talked about this a little bit already, but what are the hallmarks of a disorderly sell-off? The narrative so far has been this is pretty much proceeded as usual. No panic here, but what would disorder look like in this market?
Well, I talked about it already. I think credit markets and funding markets would be something that would get the Fed's attention as well. Like, if you start to see, those markets trade in a, disorderly, or just, not the way they've been trading, which is pretty solid, that's, I think, warning number one. Gold is an interesting asset, right? I mean, it's been a spectacular asset, not just this year. It's been a spectacular asset for 25 years. I mean, I would like to point this out to people. Gold has outperformed the S&P 500 by almost 100% over the last, 25 years. It's a little known fact. The risk for gold, something like that, which is a safe haven asset, is that's what you sell when you need to sell something. So we're definitely not there. Like, for example, in COVID, if you remember in COVID when we had the final collapse, gold went down as much as the stock market. Why? Because that's what you sell what you can, not necessarily what you want to. We're not. That's not where we are. Okay. But those are the things you need to be watching for. That would, by the way, that would make me bullish. If you saw liquidation like that.
Yeah.
We're not seeing that action this morning.
No, I'll point out, Sonali, you take a look at investment-grade credit spreads. You do see measures of risk rising in the corporate credit market, but investment-grade spreads are still below 100 basis points. That certainly feels out of step with what we're seeing in the stock market today.
Yeah, and I think about like the Mark Lasry trade, the JP Morgan trade going into this was, say, buy Ford bonds because you're not worried about Ford going underwater, but you can buy the bonds cheap. Let's see if that holds. But one thing I'm wondering about is how much volatility is ahead, given the tariffs, and also given, by the way, snuck in there yesterday, you had Treasury Secretary Scott Bessent giving a warning on the X date. We have to remember that those tax negotiations are also going on at the same time. We're approaching a debt limit, and if you're worried about credit markets and Treasury markets and funding markets, isn't that a problem?
Well, this is why they're pushing it now, right? I mean, they're doing a lot at once. I've likened, this administration like to a new CEO coming in and just saying, what, let's do all the things that we want to get done fast, restructure things, and then hopefully our plan will then play through into next year. If we were talking about a stock right now, how would we be talking about this? We'd be saying, oh, there's a restructuring, there's a vision. I think people just aren't there yet with the vision, but that's what they're trying to communicate. And I think, the X date is just that's another way for them to get what they really want to do. I mean, Scott Bessent's been very clear. The TCJA extension is critical. Otherwise, you definitely are going to have a recession, right? If you don't get an extension on tax cuts, the fiscal drag on that's going to be dramatic. So that's why they're very focused. They're using some of this tension in markets right now to perhaps get some of their policy done, which requires legislative approval. It's messy. It's policy making, right? This is Washington at its best or whatever, right?
Yeah, I love the idea of thinking about basically if this was a stock, what would we be saying? I'd be saying, what does the board think? I can't wait to listen to the earnings call and hear the analyst questions. Mike, we have to leave it there. You've been so generous with your time this morning. Really appreciate it. That is Morgan Stanley's Mike Wilson. Now, coming up, Trump slaps Vietnam with a 46% tariff rate, which could soon impact price tags for many top brands. We'll take a look at the sell-off in retail stocks next. This is Open Interest.
You can have a baby anywhere you want. It's the environment and that care. That is what matters most.
Our investigation found some of the worst cases of harm were surfacing.
मुझे क्या पता कि भला के चक्कर में मेरा ही बुरा हो जाएगा.
I never thought I would be vulnerable to a scam. This ruined me. And I didn't have any real good explanation for it.
Wildlife trafficking is almost always driven by greed.
Once you start focusing on money, you lose sight of what is best. That's where things go wrong.
end state actually look like, right? What is the good thing? Because the idea of like, okay, we're going to have some short-term pain, we're going to have a hit in the market, we're going to restructure, but for something good down the line, a lot of people are probably into that conceptually, but what does that thing actually look like? Because if it's trying to like get back textile manufacturing,
this is
do we have
no
hundreds of thousands of people who want to work
It
there?
sort of strikes notes similar to what we were talking about with Stefan Selig, basically. What is the goal?
Right.
And that hasn't quite been articulated. To your point, I heard Howard Lutnick talking this morning again about fentanyl, so clearly this is still a drug war in some senses. Joe, we have 30 seconds left with you, but you end your note by talking about American exceptionalism. I know there was a stirring note from Deutsche Bank on
Stirring note from George Sarvel. No, this has been the question for a while, because the U.S. has outperformed every other asset in the world in a straight line for 15 years. It's changed recently.
I got used to that.
I know, I thought it's like, yeah, you're a fool if you diversify, right? You'd feel dumb if you diversify. And there's so many people all in on the U.S., and now this is the central question that investors are asking.
Although it's crazy, Barclays this morning, even Mike Wilson now questioning the Europe trade that had been taking off this morning. Joe, we thank you so much.
Thanks for having me. Anytime.
Keep the words flowing. We love reading
them. Keep typing away.
Yeah, that is
I love typing.
Joe Weisenthal, the host of the Odd Lots podcast. Don't miss that as well. Some great content there for you to make sense of what's going on. And coming up in the next hour, we're going to give you Citi strategist David Groman, incoming Allspring CEO Kate Burke, and Olivia Landau of The Clear Cut. Stick with us. This is Open Interest.
DraftKings hit a milestone in the second quarter of 2024. For the first time as a public company, it turned a profit.
Is this a new era for DraftKings?
There's an inflection from when you're cash flow negative and you're operating off of equity raises from the past to when you're self-funded and you're cash flow positive and able to control your destiny a lot more.
You've had your first quarters of profitability now. Does that take pressure off? Does it increase pressure?
I think it increases pressure. I mean, once you start making profits, people expect you to make more, and all of a sudden you're valued on a multiple of those profits as opposed to the theoretical what could be. So very important, I think.
When you're cash flow negative, you've sold a vision of what the company should be working on, and you're very focused on working on that and delivering against that. When you've pivoted to profitability, the world of what you can work on is a little bit open, and there's a lot of different ideas, and it requires more focus than ever to make sure that you are prioritizing on the most important things that are going to deliver the most value.
DraftKings' solid standing in a booming sector gives them the luxury to play the long game. They're not under pressure to cut costs.
When you have really strong revenue growth, you don't need that. If you look at where we are today and where we want to be and where we believe we will be, the vast majority of the incremental EBITDA is not coming from any cost reduction. It's coming from increased revenue.
We don't feel like we need to cut costs because we're growing our revenue so much. We want to grow our revenue into our existing cost structure, and there's no need to reduce the cost as long as we're being efficient with what we allow our cost growth to look like.
U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
We're 30 minutes into the trading day after the big day. Welcome to Bloomberg Open Interest. I'm Katie Greifeld.
And I'm Sonali Basak. Matt Miller is off today.
Let's get a check on these markets. The S&P 500 down about 3.5%. Tech is leading the charge to the downside here, with the NASDAQ 100 off about 3.8%, off session lows, but still a wipeout and then some. The Russell 2000 not on the screen, but entering a bear market. We do have some economic data to chew on as well. As if there wasn't enough news, we take a look at the ISM Services Index for March, missing, coming in at 50.8. The survey had been for 52.9, and that is versus a prior reading of 53.5. So quite a miss there. Still above 50, but just so. I want to take a look, too, at ISM Services prices paid, also coming in below expectations at 60.9. Expectations had been for 63.1, and you can see that the prior reading was 62.6. So quite a miss there, and you see the reaction in markets. The S&P 500 still down about 3.6%. That bond rally continuing, sending yields lower. But let's get back to our big story, and that is tariffs. As I mentioned, tech is among the sectors that is hardest hit. Let's break it down with Bloomberg Technology co-host Caroline Hyde.
MAGA has come for Mag 7. We are seeing a significant sell-off, the worst on the NASDAQ 100 since 2022. $300 billion alone wiped out of the market capitalization of Apple. We're off by 9% for that name. Extraordinary notes coming from Rosenblatt, for example, saying, quick back-of-the-envelope math, this is going to blow up Apple. They say that they cannot really understand that Trump would want to blow up an American icon, but it looks tough at the moment. Jefferies, for example, saying they think eventually Apple will be exempted, as they were under the previous Trump administration. And actually, you've got the likes of Wedbush saying maybe this is a buying opportunity because this is going to be temporary in nature. However, overall tech spending is going to be on ice. So that sort of downdraft risk aversion is going to slow sales, not just for the hardware giants, and Dell is currently off by almost 20% today, but the software giants. That's why Microsoft is down. Meta, Alphabet maybe get hit by reciprocal nature, the retaliation coming from Europe where they eye a digital services tax hike. That's going to impact their revenue significantly. So across the board, this is just a washout for big tech.
Brutal headline. Apple erasing over $255 billion in value, and on a closing basis, not on an intraday basis, but on a closing basis having the worst day since 2020. That is Caroline Hyde. Now we're also watching the auto sector. They have been responding. They've been already responding to Trump's tariffs with supply chain price changes, and already have taken big hits this year. Nora Melinda is looking at the sector today.
Sonali, I'm seeing red all across my screen as I'm looking at German automakers. I'm looking at Tesla. We've got Stellantis in focus. That's the maker of Jeeps. They're actually already temporarily halting some of their production in Canada and Mexico. We are seeing this as a lot of people are making these big reactions to that news that we got yesterday, less than 24 hours ago, 25% tariffs on autos. And we're seeing shares of these automakers falling, and some big names in Germany. They're actually saying that this will only create more rising inflation for consumers, and it'll also make the price tag on these cars a lot higher. Ford, we also had beginning to offer steep discounts to some of their cars. So we are seeing a rapid response here. It'll be a lot of headlines here to follow, but lots to keep an eye on here this morning, Sonali.
All right, yeah, between April 3rd and June 2nd, Ford offering all buyers the same discount it extends to its employees. That is Nora Melinda with a look at the autos. Let's keep the conversation going and talk about retail. Obviously, a very globalized supply chain, a major focus for investors. Bailey Lipschultz, take us through the damage.
Everything is down, Katie. Nike down more than 13%, trading at the lowest level since 2017. As you can see, stocks like Lululemon and RH under pressure. This coming after the U.S. imposing a 46% tariff rate on Vietnamese goods as part of that, and as well as a 49% on Cambodia and more than 30% on China, Indonesia, and Thailand. The big thing for these companies is that there was an expectation that moving their supply chain out of China would help protect them. That's not the case when you target Vietnam. We're looking at some of the data compiled by Bloomberg. Nike brand footwear, 50% sourced from Vietnam. Lululemon, 40%. Adidas, 39%. And the list goes on. It's a number of question marks for the company. And when you look at the weakness we're seeing seeing in RH when your CEO is on its earnings call and drops an expletive word or two to describe some of the damage. It's really only mounting, especially, again, when you look at a company that caters to the better off and also is sourcing quite a number of goods from overseas. The ripple going on around these supply chains and what it ultimately can mean for consumers if they do feel the pinch in a recession, that's the big concern for investors, and that's why you're seeing them wholesale dumping a number of these companies.
We can only pray that there weren't any children on the RH earnings call. Bloomberg's Bailey Lipschultz, great roundup. And let's keep the conversation going because we've mentioning autos, tech, also basic resources most at risk from tariffs. That is the view of Citi strategists who are exploring an extreme hypothetical scenario in which EPS growth for individual sectors in Europe would be cut in half. Joining us now is the man behind that call. His name is David Groman. He is Citi Global Equity Strategist. So, David, correct me if I'm wrong, but I believe that note came out before Liberation Day, before we got the details of Donald Trump's tariff plan. Is the worst case moving closer to the base case now?
Yeah, listen, I think what we were looking at is that maybe something like a 10% tariff was priced into European equities going into Liberation Day. Obviously, we got larger tariffs than that, 20% on the EU. I think it's interesting if you look into the price action in Europe today, really this is becoming about more than just tariffs, and it's about the second order effects and a potential growth slowdown coming here, right? In Europe, it's a mix of properly cyclical sectors that are underperforming, even those that have maybe less direct tariff risk like banks. So, I mean, maybe there's still some hope outstanding that trade negotiations are possible and the like, but we need to be thinking about not only the tariffs themselves, but also maybe those second order knock-on effects going forward.
You know, you think about that bid that had been drawn into European stocks since the beginning of the year, and you're looking at a DAX, for example, that is still up about 9.6%. So it's held up. Even after the tariff announcement, it had been down about 2.6%. You know, is the sell-off more pronounced to come, given the way that these tariffs will be playing out and given the bid that we've seen this year?
Yeah, I think, you know, there's some reasons to still be optimistic, at least in relative terms on the European story, right? I think the European market had been structurally underowned by global investors for quite some time. Obviously, we've seen a meaningful shift in the policy backdrop. And I think you could also make the argument that maybe the growth hit from tariffs does affect the U.S. at least first before it spreads into the rest of the world. And I think if we're in this environment where the U.S. is slowing, but the rest of the world is more resilient, that's ultimately an environment that could still favor Europe. But obviously, right, if we spill into an environment where the U.S. is going into a proper growth slowdown, a proper recession, I think some of these higher beta markets like Europe are going to get caught up, right? If the U.S. has an earnings recession, what we found is that over the past 20 years, Europe almost always has one too, right? So you need to be thinking about, is this just slowdown or is this something worse? And I think that starts to question, you know, how long can these high beta markets continue to outperform?
Yeah, David, forgive me for using a cliche, but the U.S. sneezes, the rest of the world catches a cold, at least as you lay out. That has been the story of earnings. But I want to talk about where you might want to hide out. I mean, you wrote in that note that it's autos, tech, basic resources most at risk here. When you take a look at the sector level of the European equity market, where's the best place to hide out, for lack of a better term?
Yeah, so what our analysis is showing, right, is that if you get a 20% tariff, you probably shave off something like 3% of EPS growth in Europe on the whole, and that's coming down from consensus growth of something like 7%. So you're cutting EPS growth in half. And if you then go ahead and get meaningful slowdowns in GDP growth, I mean, you could see that go to flat to negative, right? So in these risk scenarios where things do get a little bit more, dire, I think that you would be looking at some of these defensive sectors that have less international exposure, right, within the European market. So you're making a little bit of a transition from cyclicals into maybe some of that more defensive and domestic exposure.
You look at companies reacting. It's been less than 24 hours, and yet you do see some significant reactions. Stellantis, for example, halting work in factories in Canada and Mexico, for example, for the coming weeks. David, when you're looking at companies change their plans, they are stopping in their tracks and they're pivoting course. Isn't that going to be expensive?
Yeah, and I think it's something that's difficult, and it's one of those longer-term stories that you need to be thinking about that we've been talking about. When you talk about geopolitical realignment and maybe what it means to shift your supply chains globally, is that over time it makes you more resilient, but at the same time you might face some issues with margins, for instance, over the near term as you make those changes. So you do need to be thinking about not only the short term, but the long term. But obviously the risk here from everything that we've been seeing, right, is that potentially some of the, the changes that we've seen in consumer confidence, in business confidence, investment decisions that are happening is that maybe we've gone too far down the line where it's hard to pare this back. And, you don't always see recessions coming, and sometimes they come, a little bit more suddenly than you would expect. So we need to be looking at this. Are there the signs of that slowdown that we're looking for, or are things ultimately going to hold up?
Well, a topic that keeps coming up on this show is that Europe has had a bit of a wake-up call, maybe in a positive way. I mean, we had Stefan Seelig pointing out yesterday that you think about the defense spending that has been freed up in Europe. Neil Dutta made a similar point in his note, writing that the Europeans are actually boosting their defense spending, not something you've seen that often. David, I mean, are there any sort of tradable actions that you can make around those sorts of dynamics?
Yeah, and I think this is the key point with the European story, right, is that something has fundamentally changed, at least for the medium-term picture. So, right, if you look at consensus EPS growth forecasts for Europe out over the next 5 years or so, right, it's something like plus 9% growth per annum that's penciled in. It's probably a little bit too high. It might come down over time. But think about that number. If we use our top-down models and apply in a lot of the fiscal spend and the changes that are coming through, what we would see is that you could see EPS growth rise by about 2 to 3% per annum out over the next 5 years. And if you were to assume some ERP compression as well, I mean, you could see Europe going from a market that has traded historically at a multiple of 14 times up to something like 16 times. And obviously there will be some volatility along the way, and the risks that we are seeing around tariffs right now are certainly one of them. But I do think there is still that medium-term structural tailwind that might be there from the European story coming from this defense spend, also the fiscal spend on infrastructure that we're seeing out of Germany, which are really meaningful.
David Groman of Citigroup joining us now. And of course, Katie, we know that all of the tariffs are not created equal here. I'm looking at a bump by our deputy editor-in-chief saying that you better buy your Swiss chocolate now, because the Swiss are hit harder than the EU, as Rolex and Swatch are going to face outsized tariffs.
He would say that, wouldn't he? I think he's a fan of Swiss chocolate. But, I mean, clearly a lot of auto buyers had the same idea. You saw that pull forward in the delivery numbers. So clearly consumers trying to get ahead of these tariffs.
We're going to talk more about that, and we're going to talk more about what the Commerce Secretary said, because he said, Howard Lutnick said the U.S. domestic growth will have the greatest resurgence ever under Donald Trump. Part of our conversation with him next. This is Bloomberg.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, special contributor Larry Summers of Harvard on what Liberation Day tariffs will mean for the economy. Santander's Anna Botín on why President Trump may be just what the European economy needed.
Europe is awakening, and the alarm clock has been President Trump.
And the story of how you're getting your premium bluefin tuna sashimi care of private equity. Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Cape Town, South Africa, and this is Bloomberg.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything. The names that move markets are on Bloomberg.
U.S. consumers are flexible. We have options. We can produce stuff at home. We have a variety of countries we can import stuff. We can substitute into home production. Whereas countries that sell to the United States are inflexible. They've only got the United States to sell to. There's no alternative. So they're the ones who will bear the burden of these tariffs, which means that there's going to be very limited pass-through into downside economic risk or into higher prices. So I think that a lot of folks have got that wrong.
Nobody covers business like Bloomberg. Context changes everything. Bloomberg Bloomberg has the Fed decision under surveillance with the fastest coverage and exclusive analysis, including Powell's press conference. Nobody covers the Fed like Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Versace in Davos, Switzerland, and this is Bloomberg.
Donald Trump is focused on the economic pain that the United States of America has suffered over decades. Since NAFTA, 90,000 factories, not jobs, factories, 5 million high-paying jobs gone overseas. He's focused on the U.S. worker and the U.S. economy. And what's going to happen is people are going to realize it is the great American economy that is the winner here. And anyone who doubts it, and anybody who shorts Donald Trump, or anybody who doubts the strength and the power of the American economy is making a foolish bet. Sure, importers are going to have a tough time figuring out what to do because they went and found the cheapest production in the world. It's time to bring that production home, to have the smart, amazing people who run American companies figure it out, bring robotics back to America. And I would say that United States domestic growth is going to have the greatest resurgence ever under Donald Trump, and that's what he has set in motion yesterday.
You'll accept it takes time to engineer a supply-side response, though, sir. And in the meantime, you can see bad things happen. Do you accept that?
Well, what I can accept, of course, it takes time to build factories, but companies understand how to do it. They will do it. The United States of America is the greatest economy in the world. People have to do business with it. The rest of the world will bring down their trade barriers, and you'll see a great resurgence in our ability to sell agriculture overseas. You'll see factories being built here, and that factory production will be faster. So, sure, there will be a rebalancing of those who make things in cheap labor markets, figuring out how to make them here. But ultimately speaking, and I think in much less time than you think, the world will reorder itself, will figure it out, and the United States growth rate will turbocharge compared to the rest of the world.
That was Commerce Secretary Howard Lutnick speaking earlier on Bloomberg Television, and that brings us to the Wall Street beat. Joining us now for the economic impact from the tariffs, Bloomberg Chief International Economics and Policy Correspondent Michael McKee, and for the impact on markets across macro markets, Edward Harrison, author of Bloomberg's The Everything Risk newsletter. Now, Mike, I do want to start with the American household because for years we've been asking, when do the pains on Main Street hit Wall Street? And it looks like this might be the moment. If you look at Yale's estimates at the Budget Lab, you have them seeing an average household being hit by $3,800 annually, and that's just one estimate. These estimates are all over the place. At what point are you facing an American economy that either can't spend money or face even a recession?
No. Basically, I mean, we're not getting a lot of specific calls yet because people are still working their way through all of this. It's obviously very complicated, but basically we're looking at an average weighted tariff, according to the notes I've gotten this morning, between 18 and 33%. By comparison, Smoot-Hawley was 20%. So it's a huge difference. Fed model 2018, when they did the tariffs, they thought that would cost GDP 2.3% and prices 1.5% higher. Probably all of that is going to be incorporated into models for this year. So it leaves the American people much worse off. As you note, the tariffs are going to cost, we pay, this is a tax. We're going to pay, according to the notes in today, somewhere between $400 and $800 billion in additional taxes here, which means it works out, if you divide it up by the weight, about $1,400 per person. You were talking about per family, per person. And that's going to hit even harder at the lower income levels. So it does set us up for a real retrenchment when people start to think, I'm not going to have the money to deal with this.
Right, yeah. I mean, you take a look at JP Morgan's Michael Feroli saying that this plan is equivalent to the largest tax increase since 1968. You had UBS economists saying that real GDP could be hit by 1.5 to 2 percentage points in 2025. And I want to come to you on the market reaction, because we've seen a big sell-off, obviously, in the equity market. The S&P 500 down about 4%. The bond market, 10-year Treasury yields, 4 is a recurring number here because 10-year yields broke below 4% briefly just a little while ago. The view of Ian Lingen over at BMO Capital Markets was basically that bond market sentiment here is going to follow stock market sentiment. If stocks continue to slide, you'll continue to see bond yields slide. Is that your view as well?
Yeah, that is a risk. The real question is this trade-off, because, you know, this is what you would call stagflationary policy between the two mandates that the Fed has. So the expectation is that it will slow GDP growth, and the tariffs will also, you know, slow the labor market. The question is, what happens to inflation? If inflation increases enough that the Fed can't look through it, then what we're seeing in the bond market today is going to be backed out at some point in the future. What we've seen today is, you know, a pricing in of 50% of a fourth cut in 2025. You're only going to get that kind of cut if the Fed sees extreme weakness in the labor market, and also the inflation numbers are low enough that they can look through them, thinking that this is a one-time price step up. But if we get something north of 3% already, even before the tariffs come into play, you know, the Fed's hands are going to be tied, and you will see the bond market move in the same direction as the equity market.
Ed, when you take that 50% chance of 4 cuts, you think about Renaissance Macro. Neil Dutta was one of the people making that call. Mike, how much room does the Fed have, particularly if you see inflation? Because you're hearing people start to say stagflation more and more and worry about that.
Stagflation is a real problem for them, because if the economy is slowing, you want to cut rates and boost growth. If the economy is seeing inflation rise, you want to raise rates and choke off inflation. And if you're somewhere in the middle, it's really hard to deal with. Right now, I think the Fed is just going to sit tight for a little bit and see how this plays into the economy overall, and see how bad we see growth go down. If growth doesn't go really bad, if people sort of hang in there, then they can leave rates where they are now to keep inflation from rising as they're doing their current policy. But they might be forced into a situation where they need to cut rates, and that's going to give them an inflation worry.
All right, guys, great roundtable. Really appreciate both of your insights. Our big thanks to Bloomberg's Michael McKee and Edward Harrison. And for the latest news and analysis on Trump's global tariff rollout, check out our live blog at TLIV Go on your Bloomberg terminal. This is Open Interest.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Tuesdays only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays at 9 p.m. Eastern Time, right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
Welcome back to Open Interest. Let's get a check on these markets right now. That sell-off deepening once again. The S&P 500 down by more than 4%. A lot of that pain coming out of the tech sector. You have more than 400 names in the red right now. It's led by the likes of Apple, Amazon, Nvidia, Meta. The list goes on. I want to highlight volume here. Trading volume off the charts right now, but I believe we actually can chart it. You're taking a look. That white line is where we are. We're just about 1 hour, forgive me, into the trade. That is the projected volume right now for where we're going to finish up. Right now, at this moment, though, we are 70% above the 30-day trading volume. So clearly, this is a very, very active market, Shanali. Traders selling in to this drawdown.
The question I have is, if you look at some of the trades that we do see today, you have to wonder if some of them look pretty crowded. The discretionary trade, the bond market, if any of those were to reverse, how much dry powder is there to be had if we do see those lows that Mike Wilson was talking about? You said 4,700 on a 200-day that we're watching?
200 weekly average.
Right.
That is the 200-week average. That is the level that Mike Wilson is watching. And coming up next, we're going to take the pulse of the asset management industry with Kate Burke. She is the new CEO of Allspring. She joins us exclusively next.
Literacy is a big problem in the United States. I think 14% of adults are functionally illiterate, which means they can't read past the 4th grade level. That's a large percentage of the population. Nothing the Library of Congress can do can completely solve that problem, but are you surprised at how many people still cannot read in this country, and how many people have another problem called illiteracy or illiteracy, which means they can read, but they don't choose to read?
It's a challenge with the digital age because they're reading on tablets, so we do count that as reading. If you have an e-book, you're reading the book, and I've been often asked if I'm listening to a book, are you reading? Does that count? But there is a concern that the amount of reading, actual text that people are doing, is diminishing. And so how do you work with other organizations? So the Library of Congress connects to public libraries, school libraries, and we do joint programming with them.
Why do we actually have all these thousands of libraries anymore when people are often doing things digitally and they don't need to go to a physical place to get a book?
People are using public libraries and someone has said, as opportunity centers. And libraries are offering collections that are beyond books. So libraries are circulating and responding to communities in so many ways.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Tom McKenzie in Frankfurt. This is Bloomberg.
Let's get a check on these markets because we are looking at markets S&P 500 near but off of session lows at 3.8%, almost 3.9% lower. Looking at the NASDAQ 100 taking even more pain, down more than 4.2%. That 10-year yield, it had briefly fallen below that 4% level, now back to about 4.03. We will keep an eye on it throughout the show and, of course, throughout the trading day. Traders really feeling the pain from those tariffs. But now we are going to bring in Allspring Global Investments' new CEO. She is joining us here for an exclusive interview. Kate Burke is taking over from Joe Sullivan on July 1st after serving as president for the past 2 years. Allspring is a global asset management firm with $605 billion in assets under advisement. Kate joins us now. A day like today, taking over a new role. I mean, how do you address clients in what is really not only a volatile market, but a changing paradigm for investors?
I think it's really important to remember that clients and asset managers have lived through volatility in the markets before. And what is most important is to look for opportunities when you see this kind of dislocation and stay the course. So ultimately, as long-term investors, you want to be able to respond in your portfolio and make adjustments when you see something like this happening, whether it's in your fixed income portfolio or where you're overweight in equities. But ultimately, getting the timing of the market and understanding how and when these tariffs will play through is going to take some time. So knee-jerk reaction, quick responses. We are fundamental investors. We're going to continue to do the deep research, look for those opportunities, and work with our clients so that they're well positioned in a variety of different outcomes.
Yeah, it's an interesting question. I mean, and Kate makes the great point that we have seen periods of volatility. Some folks would venture that, I mean, we're starting to toss around terms like stagflation. We haven't really dealt with that since the 1970s, so it's been a while. But that volatility coming through in markets right now, I know you've been watching the VIX. The VIX right now is certainly popping.
It's incredible because we saw that 20 level be something that, say, the likes of the New York Stock Exchange was concerned about stifling capital markets activity. Now, what does this mean in terms of the types of assets that investors will be looking for? You said fixed income, for example. Does it mean you lean in to diversification?
I think leaning into diversification absolutely makes sense. And that's when I'm talking about making modest adjustments. You may choose to look and move a little bit more into fixed income at this point, looking at your core portfolio, taking advantage of some of the stability that we'll ultimately think that we'll get in the bond market as you wait out some of the volatility that we're seeing in equities. But even then, you have to be careful because ultimately the credits of many of these companies are going to be also impacted by these tariffs. Right. And so understanding how that plays through is, again, why fundamental research, I think, is so important in this type of market. Because while you can have this big macro impact that's happening really across the globe right now as we await responses from different countries in terms of what they will do in reaction to this, there's going to be a lot of new information coming. And having fundamental analysts and portfolio managers looking at the fundamentals of those companies, understanding what their supply chains look like, where will that impact happen, right. and then looking for those opportunities. There will be, in times of dislocation, there's always opportunities to get into great companies whose valuations may have been high, and now you have this opportunity from a long-term investment to take advantage of that and add to your positions there.
So I hear the case for active management coming in strong there. Before we get too much into asset classes, I actually want to take a global perspective right now, because the conversation we've been having really for the past several weeks at this point has been American exceptionalism. You think about these tariffs, you look at the reaction in markets, and you have to wonder, I mean, is the case for investing in the U.S. weakening right now?
Well, I think that the question of how these tariffs will play out globally is still unknown. You certainly have seen reports of people saying you should be looking more, that this might be an opportunity where Europe, where it has not outperformed in some period of time, that there could be a window where you see that. But they're also going to be impacted by the tariffs. And so I think the question we're really facing is what is it going to do for the global economy? Mm-hmm. This is not going to be limited to impacting the U.S. economy, but much more broad in its impact, and understanding again where those supply chains, where you're going to see the disconnect between the tariffs, where you're going to see different consumer behavior as an outcome of this. Certainly prices are going to go up across the globe as a result of this, and that means consumer demand is likely going to be impacted. So we do have concerns that you're going to see a slowdown in not only the U.S. economy, but the global economy as well.
Yeah, and that rush that we've seen into European markets could be running into some pretty tough, hard data over the next several months. I want to talk too about how you're meeting investors and how you're sort of, giving them that access. I know that Allspring recently launched a lineup of ETFs, for example. I cover the space closely. When you think about the demand for different vehicles, where does it lead you?
So at Allspring, our goal is to be vehicle agnostic. We think whether it's the mutual fund, the ETF, or a separately managed account, the wrapper is really the decision of the investor and understanding their positioning, what are their views on taxes and the impact of that in their portfolio. So I think the wrapper is a tool to get to clients and give them client choice. The investment decisions, the investment strategies that you're looking at are really what we believe are at Allspring. We provide the foundational building blocks of any good asset management strategy. So whether you're looking at core fixed income, core equities, growth or value equities, munis, we provide that to you, and our goal is to give it to you in the wrapper that is most appropriate for you and your personal situation. So I expect us to continue to do more in the ETF space. I expect the ETF space to continue to grow.
That's good for my job,
well, I'm happy to hear that. Yeah. It's still small in terms of its overall size versus mutual funds and separately managed accounts. So I think there's tremendous opportunity for the ETF market to continue to be a growing vehicle.
Kate, congratulations on the new role. Of course, that is Kate Burke. She is the incoming Allspring CEO. Now, I want to bring you some breaking news as well, because we are watching the fallout from Trump's tariff announcements, and now we have France's Emmanuel Macron urging companies to pause U.S. investments. He's speaking to industry groups affected by the tariffs. Of course, this is just one of the countries we're watching out of many. And even before the tariff announcements, Katie, we had heard from other regions, like, for example, in China, where they have already taken moves to limit the amount of money coming into the United States after these levies.
From Germany as well, and we know that Macron had believed that the European Union should be ready to respond with options such as targeting U.S. tech and services. That had been our reporting, and now we've gotten the confirmation. You take a look at what the currencies are doing in response. I'm looking at Euro USD, that pair not responding too much, but already we'd seen the reaction. Euro USD, the euro stronger by about 2.4% against the dollar right now. That pair trading at 111 thereabouts. So we'll continue to monitor that story. But let's take a look at what's moving in the U.S. equity market and get to the single stock level now with Bloomberg's Isabel Lee.
Okay, Katie, we're looking at Nike. Shares are edging lower by 13%. That's the lowest since 2017. So we have Nike increasing the reliance on factories like Vietnam and Indonesia, and that's after President Trump imposed tariffs in China in his first term. And now Nike produces 50% of their goods in Vietnam. And yesterday we saw that Vietnam was imposed with a 46% reciprocal tariffs and 32% on Indonesia. So these companies will really struggle to find a place for their production, and it's either they will absorb the cost or they will be passed on to consumers. Next, we're looking at Apple shares. This is also looking bad because shares are edging lower by nearly 9%. It's pared back some of those gains, just 8% now, at erasing $255 billion in market value. So even after the company's years-long effort into insulating itself from trade wars and supply chain disruptions, they're still really hammered. Apple, their supply chain is largely in China, and that's really affected because China tariffs will reach 34%. That will bring the total rate on Chinese goods to around 54%. And the thing is, tariffs also cover Apple's other manufacturing areas. For instance, India is where they build iPhones and AirPods, and Vietnam is where they make some AirPods, iPads, and Apple Watches. And lastly, Stellantis. This is also not looking good. We know that President Trump's decision to impose 25% tariffs on autos goes into effect Thursday, and we have Stellantis planning to temporarily halt their production in Canada and Mexico. So this is the first concrete effects of the tariff. It's unclear how long they will pause their Mexico operations, but at least for the Canadian one, it's going to be 2 weeks beginning Monday. Back to you, Katie.
Isabel, we thank you so very much for looking under the hood. Now coming up, we're going to take a look at the tariff impact on the jewelry business. Olivia Landau, founder and CEO of The Clear Cut, joins us on how her firm will be impacted next. This is Bloomberg Open Interest.
What makes it India's time?
It's us women who are going to transform India. I truly feel that the time for Indian women has come. They're not only breaking glass ceilings, but they are redefining, you know, whether it is in sport, whether it's in medicine, whether it's in creative arts. They are everywhere, and I have so much positive energy that comes back to me when I'm talking to Indian women. And I just think at all these little girls and boys, I don't want to discriminate, who are now in school-going age. Imagine once education, sports, we empower them. What a difference they would make not only to India but to the planet and the world. And the world needs it now than ever before.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Asia is at the forefront of some of the world's biggest stories. And we're here where the action starts in Sydney. And in Tokyo, get ahead as the global trading day begins. The Asia Trade, weekdays only on Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising chorus conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern. Only on Bloomberg. Context changes everything.
Welcome back to Open Interest. To check on these markets right now, that sell-off deepening in the S&P 500, now down more than 4%, 4.1% if you want to be exact. A lot of the pain coming from big tech, and you can see the bond market catching a bid as well. Things are actually looking okay. Losses were lessening, and then we got that ISM Services Index coming in below expectations at the top of the hour. Just another hit to sentiment as we continue to digest what we learned from President Donald Trump last night. And those new tariffs will impact impact businesses big and small. Let's hear a bit from the small business side of the picture, because joining us now is Olivia Landau. She is the Clearcut founder and CEO. The Clearcut is the largest digitally native only natural diamond jewelry company in the U.S. Olivia, it's great to see you in person.
Thank you so much for having me today.
So we're all trying to make sense of the tariffs and talk about the economic fallout. From where you're sitting, where does it impact your business when you think about your supply chain and where you actually source your diamonds from?
Yeah, so for us, we're unusual because we make all of our jewelry in the U.S., in New York, which many of our competitors do not. So in that regard, we're not too worried. But in terms of the diamonds, it's still really uncertain what's going to happen with the tariffs. We're having our eye on India, where most diamonds are manufactured and polished. But what we have seen is from the tariffs, the price of gold has gone up. And that's going to affect most jewelers in terms of their cost of goods and now really wanting to pass that along to their customers. So that's the most immediate impact that we're seeing right now.
You know, it's interesting. We were looking at the price of gold just consistently being bid up, and it does bring me to the next point. Not only gold, but just materials as well. Even if you're manufacturing here, how worried are you about the things that go into all that jewelry?
Yeah, it is a concern, and there's so much uncertainty around it. So I think we're just waiting to see how it's all going to unfold.
Yeah, it feels like a lot of companies and investors are in wait-and-see mode right now. But I want to talk about the other side of the equation, and that is folks buying your jewelry, right. What consumer demand looks like. I mean, where is your average consumer actually located?
So most of our customers are throughout the U.S., but we do have internationally, mostly in the U.K. and Canada customers. And tariffs have always affected those customers because in U.K. and Canada, I think it's a little above like 20% for the import VAT. So that does affect our sales internationally.
You know, when it comes down to the push-pull between what is happening in the Trump administration, we're looking at the tariff side of the story, but very soon we'll be looking at the tax side of things as well. When you're looking to Congress, looking to pass all these measures on tax, how much do you need it to be able to be successful as a small business in this country?
I mean, taxes and tariffs really, really affect small businesses. For us, it's a huge consideration with our clients because we do sell higher value products. So every small percent makes a huge difference.
I do want to get a little bit into a very fierce debate in the industry because, as I mentioned, you're natural only. We've seen a real surge in demand for lab-grown diamonds, especially from the younger generations out there. I think Shonali and I are both wearing natural diamonds right now, but you've seen a lot of Gen Z folks who are getting engaged, gravitating towards those lab-grown diamonds. How do you appeal to that younger audience who seems to be shying away from natural?
So I think the rise of lab-grown diamonds there were a lot of things that came into play, mainly a lot of greed and misinformation, as well as high price points for natural diamonds post-COVID. So it was the perfect storm. You know, you had jewelers that could finally make super high margins, over 2,000% margins on lab-grown diamonds versus 10 to 30% on a natural. With the same time, you could say they were more ethical, more sustainable, and the exact same thing. So I think now, actually, as natural diamond pricing is softening, we're seeing a big shift, at least in bridal and more investment pieces, back to natural with the Gen Z. We just had our best quarter since 2022 and the highest average order value in our history.
Olivia, we thank you so very much for joining us today. That is Olivia Landau of the Clearcut. Now, coming up, tariff announcements continuing to hit tech stocks hard. We're going to get a deeper dive into that sector next. This is Open Interest.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
In case you missed it on the opening trade.
Is Trump, as he says he is, ready to do transformational trade deals as long as he gets his interests taken care of? Because if he is, that gives a huge opportunity for the UK to really move the dial on its growth with the US. So I can't imagine that you would shy away from that prospect if it's genuine. What remains to be seen, is it genuine on the part of the US? And we have to test that.
Don't miss the opening trade, live every weekday.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything. It's Jobs Day, and Bloomberg has the report under surveillance.
This is another read on the U.S. labor market.
Workers are staying longer than you expected. How do firms actually deal with that new data point?
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
I do go back to what the lag time is between the soft data and the hard data. What's the lag data for the Doge effect?
That will speak to the anxiety of the labor market right now.
The March Jobs Report, Friday on Bloomberg.
Welcome back to Open Interest. We're taking pulse of this sell-off right now. The S&P 500 deepening even more that drawdown, now down 4.4%. Let's tell you why, and let's take a look at the sectors. A really interesting picture that we have on our hands. Almost every single sector is in the red right now, but if you take a look at what is actually performing well, it's what you would expect. It's consumer staples. You actually have Lamb Weston. You have Kroger, for example, rallying hard today, a defensive play at hand. Utilities seeing some of that action, but not quite as much as consumer staples. But Sonali, take a look at the bottom. It's as we've been talking about. You have technology down in a big way, consumer discretionary even more, but we know that that sector is dominated by Amazon and by Tesla.
Absolutely. We're going to talk about those tech stocks now, getting hit hard by the tariff announcements. Joining us now for more, Mandeep Singh. He's Bloomberg Intelligence senior analyst. We have been talking for months now about how the tariffs could have very significant impacts. We're talking about parts, but we're also talking about reactions from the likes of China. What about Taiwan? How do you see this ultimately playing out?
I mean, look, when it comes to tech companies, on the revenue side, we know tech companies have the most international exposure when you compare it to all the other sectors that you just showed. What we don't know right now is how the other countries will react. Because if, these companies are exposed internationally and other companies impose tariffs on top of that, like for Meta or for Alphabet, anything that happens in Europe will have a bearing, even though they're not really selling a product like a hardware product. Right. Because that will have a bearing on their revenue. So right now, the impact is more visible on the cost side for companies that are making products. Like Apple is the most obvious one because clearly Taiwan, China, that's where all their supply chain is, all the hardware server makers, they're exposed on the cost side. The revenue side is where there's still uncertainty. How are those countries going to react?
Yeah, you're right. We've been focusing on hardware because that's what's getting hit the hardest. That has been obviously the knee-jerk reaction to what we learned yesterday afternoon. But you had a note heading into the tariff announcement that I thought was really interesting. You write that tariffs are likely to drag on social media. A little bit unintuitive. What is the logic there?
Well, so think of what is discretionary now. If companies have to pay more in terms of costs, for tariffs, then what are they going to pare back on? They're going to pare back on digital ads. And we know, Chinese advertisers like Temu and Shein, they spend almost $10 billion in digital ads on Meta and Alphabet and these social media platforms. So they're going to pare back in a big way because obviously they can't sell anything at the cost price. So I think you're going to see that trickle-down effect in terms of discretionary software spend getting pulled back, discretionary ad spend getting pulled back, and that's where it's going to trickle down to other companies.
So maybe I'll encounter encounter less ads when I'm scrolling furiously on TikTok.
Well, that is the hope.
Yeah.
But you know, speaking of less ads, you're worried about a consumer. You have certain companies, Apple, Amazon, very exposed to the consumer. But what about the B2B companies or B2B products? If you're Microsoft or if you're Google and you're thinking about your cloud customers or anything like that, is there immunity or is there just as much pain that investors are not seeing?
Yeah, well, now we'll find out which those really non-discretionary software spending items are, because companies clearly, I think, cannot run without internet and, you know, Microsoft Office and these kind of products, which are really non-discretionary. But anything discretionary, we'll find out what gets cut in the guidance in 1Q and 2Q, because if these tariffs remain, I mean, you will see the trickle-down effects, and it's going to come fast.
Well, speaking of Microsoft, this story has gotten a little bit lost in the sauce because we've been so focused on tariffs, but our Bloomberg News team breaking the news that Microsoft is pulling back on data centers. They've halted or delayed data center projects in several locations: Indonesia, the UK, Australia, Illinois, the list goes on. We've been so worried about CapEx spending. This isn't the conversation that we're having today, but I have to imagine it's going to re-enter the lexicon.
Absolutely. And it's discretionary items for a company like Microsoft. Do they really need to spend $85 billion in CapEx, or can they do with $50 billion now, given all the uncertainties that are out there? So everyone right now is looking at what is essential versus what is discretionary, and then how to obviously mitigate the impact of tariffs. So I think the product guys are the ones who are really put in spot right now. But eventually, when it trickles to, you know, revenue impact, that's when you will see more far-reaching impact here.
Yeah, well, that calculus is happening on the part of businesses, but consumers as well. Mandeep Singh, great to see you. That is Mandeep Singh of Bloomberg Intelligence. And Chanel, you take a quick look at these markets right now. It looks like investors, traders are deciding actually nothing is essential. Let's just sell everything.
You know, some of the stock moves that I'm seeing, I'm looking at JP Morgan, Fortress Diamond, okay? The stock is down more than 7.2% at the moment, too. So just as much pain in the financials. I will point out that earnings season starts next Friday, so you're going to hear the numbers right away.
Yeah, there you have it. But before we get to bank earnings season, we have Jobs Day to get through. And coming up tomorrow on Open Interest on Jobs Day, I'm pleased to say that we're joined by Rick Reeder of BlackRock, former Fed economist Claudia Sahm, Jed Laskowitz of JP Morgan Asset Management. The list goes on. This is Open Interest.
Asia is a continent of contrast. The region is a nexus of rich cultural traditions and a vibrant hub of trailblazing innovation and modernity. How will it push the limits of technology even further?
Going to space should become as easy as, taking a flight.
If NASA is designing a lander, their approach is they're designing a Formula One car. So we take, say, a Jeep approach.
Minister, give us a sense of how you translate Korean architecture for the rest of the world.
We call this madang. In general terms, it's where we can be ourselves, where we belong.
There is an old saying in Korea that says, "Call me blue, hwai 불치." It means simple but not humble. So it has a tremendous impact on Korean architecture.
People tend to think the robot AI taking the job from them. We want to use the robot as a basic asset, meaning people have an income through the robot.
From space tech in India to robotics in Japan, Asia is driving the future, reshaping industries, societies, and the way we live. Join me as I take you through the bold innovations. Discover Asia's next-gen technologies on Momentum.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Cape Town, South Africa, and this is Bloomberg.
Bloomberg has the Fed decision under surveillance with the fastest coverage and exclusive analysis, including Powell's press conference. Nobody covers the Fed like Bloomberg. From the heart of where innovation, money, and power collide, in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York, I'm Caroline Hyde, and this is Bloomberg Technology. Tariffs, they have come for big tech. The sector among the worst hit as higher duties target their Asian supply chain and investors brace for retaliation. Bloomberg spoke with Treasury Secretary Scott Bessent yesterday, who says the tech sell-off is actually not a MAGA problem.
In my old business, I was very concerned about market movements, and I'm trying to be Secretary of Treasury, not a market commentator. What I would point out is that especially the NASDAQ peaked on Deep Seek Day. So that's a Mag 7 problem, not a MAGA problem.
But today, investors do think the tariffs are Mag 7's problem. Let's check in on those markets. We fall hard on the NASDAQ 100. Tech underperforms the other benchmarks. We're off by almost 5%. This is the worst day for the benchmark since 2022. We move on to those magnificent 7 players, which were all in the red. Even the software services sector being hit by anticipation of what the EU levies back in terms of digital services taxes. Alphabet lower, Meta off by 8%, Amazon off by 8.8%. We move on and have a look at what the hardware impact is. Nvidia, even though semiconductors are exempt from current tariffs, we anticipate further to come and retaliation. We're off by almost 7%. Tesla wipes out 7%, and Apple falls the hardest. We're off by almost 9%. We are having the biggest erosion of market cap for Apple ever. It's on pace for the biggest single-day wipeout in the company's history, more than $300 billion in one go. Apple's supply chain woes, we dig into them. Bloomberg's Dana Woolman is with us. Dana, why is Apple in the eye of the storm here? We thought they were diversifying out of China, but that has backfired at this moment.
Yes, diversifying out of China does not mean so much in this moment, especially given that the Trump administration has just taken aim at, if not every country in the world, seemingly every country in the world, and certainly levying very high tariffs on some of the very countries where Apple thought it was making progress by diverting some of its manufacturing. Countries like Vietnam, Thailand, others, even Ireland, not a company you necessarily think of as core to Apple's supply chain. So Apple did spend years trying to reduce its dependence on China, only to have this as the outcome.
I mean, certain analyst reaction, Rosenblatt Securities, for example, saying this just blows up Apple's business model. They question how Trump could be targeting such an iconic company. They say it's hard for us to imagine Trump blowing up an American icon, but at this moment, it looks pretty tough. Many out there think eventually they'll get some sort of exemption. But for the here and now, it seems as though Tim Cook tried to be at the inauguration. He's promised investment in the United States, but it's not enough.
Absolutely, and I would not go so far as to say these measures were targeted at Apple, but certainly, as we can see, Apple is one of the hardest hit. And as you said, Tim Cook's personal efforts to curry favor of the Trump administration clearly did not yield the outcomes that he or investors would have wanted or expected.
Dana Wellman, we thank you for the update on all things Apple. And then we turn our attentions to the services side, the software side too. France, Germany, they are pushing for a stronger response against President Trump's tariffs, pushing for the EU to target US tech companies in particular. And Alan Katz can tell us exactly how. This seems to be coming down to the digital services tax in particular. They really want to target big tech as the way forward here.
Well, they do really want to target big tech, but it's actually broader than that. So Emmanuel Macron is actually meeting with a whole variety of industries that are going to be affected by the tariffs. That meeting's happening right now. And speaking just before the meeting, he actually asked EU companies to pause all investment in the United States for the moment. So this is not tech specific. This is for all companies in all sectors, saying, you know, if the U.S. is hitting us right now, how can you be investing in the United States? And you need, you know, cohesion among these sectors that are being affected by the United States. But to come back to your point about tech, the EU, and more specifically France and Germany, and France, I suppose, more than anyone else, really thinks that going after digital services is the way to hit the United States. Now, this has come up before. It's been a fight before between France and the United States. France does have a digital services tax on companies like Google and Amazon, which it levies, which makes about $700 million a year for France's coffers. And it wants to use that, or it thinks that is the way to respond, the best way to respond to the U.S. decision, to President Donald Trump's decision. That said, it's going to be difficult to get everyone to agree. Those digital taxes that exist in Europe are pretty different country by country. Say France versus Poland, for example, are quite different. And some countries have really been very, very reluctant within Europe to impose that kind of tax. So if France getting sort of everybody on board, all 27 members of the EU, really is a tall task.
But I suppose what's interesting is Germany seems to be aligned on wanting to go hard in response. And Germany was one of the countries that hadn't wanted to align itself on this sort of a tax. Will we see big tech pull and retrench from Europe even? Are they willing to mentally get round that? Are we going to start to see bifurcation here?
That's not $1 million question. That's a multi-trillion-dollar question. It would be impossible to say at the moment. I mean, your point is a good one, right? Germany really was pretty opposed to the idea of digital taxation before. Now it seems to have come around to it. Habeck was quite strong. The economy minister was quite strong in his comments earlier today. So it does seem that Germany at least is on board with the idea. That doesn't mean, again, that all other European countries will be on board. And Europe is trying to do this with more or less one voice, if not exactly one voice, because it thinks it will be much stronger if it responds that way. So even if France and Germany, which traditionally are the motor for the European Union, even if they agree on something, it doesn't necessarily mean that's going to happen. On the question of bifurcation, that's of course the question that immediately came to me too. France has for years tried to create alternatives to search engines and AI companies, and it generally hasn't worked out because France is too small a market, and there hasn't really been one single European market functionally for these digital services. Will that come as a result of these tariffs? It's a good question, and one that many people are asking themselves, but we really don't have an answer to that yet.
Alan Katz, great to catch up with you. Thank you for giving us the tech nuance. Meanwhile, joining us now for more on the global tariff impact, Mark Mahaney, Evercore ISI Senior Managing Director, joining us now. And I start with retaliation. Many of the internet names that you cover could well be in the eye of the storm if Europe does increase those digital services taxes that they already hate.
I think that's right, Caroline. I don't have any particular insight into that, but that makes logical sense to me. What I sense is the way these stocks are trading today, the degree of sell-off is kind of determined by retaliatory risk and recession risk. So there are companies that I look at that are just off modestly today because they're perceived to have they're perceived to be relatively recessionary resilient. That's names like Netflix or Spotify, which are inexpensive consumer subscription businesses. But at the other end are the three mega cap names that I look at: Amazon, Google, and Meta, which are trading off 4 to 9%. Amazon at the top of that list because of pure tariff exposure. There's most of those products that they sell are produced, manufactured, and then exported from Asia. So there's going to be costs that Amazon's going to have to decide whether to eat or pass along to consumers, and therefore depress demand. Meta also has this exposure to Shein, Temu, some of those kind of exporters, retailers that got hit by the removal of the de minimis exemption. So there's a lot of different issues in here, but retaliation and recessionary risks are sort of bifurcating some of the stock movements today.
Had you foreseen this, Mark? Many have been surprised by the aggression shown in the reciprocal tariffs. But do we think this is knee-jerk? Is this in any way a buying opportunity?
Okay, then yes, I think it's a buying opportunity. If you tell me that I can buy Meta at less than 20 times earnings and Google at 15 times earnings and Amazon at 23 times earnings, even I understand that there's going to be earnings risk from the imposition of tariffs, from a slowdown in the economy, from a recession. You're talking about mid-single-digit %, earnings growth. Do you step in and take on a full position today? Absolutely not. But like at these levels, yeah, this is. I hunt for what I call DHQs, dislocated high-quality companies. Look, we had a 2.5-year bull market, uber bull market in tech stocks, particularly in some of these internet stocks that went through the end of last year. Here's your negative catalyst. You now you didn't have any real DHQs at the beginning of the year, but now you do. And so you want to step in on the highest quality names when they're trading at trough multiples. So, yeah, I think you want to be picking away at these. I think what you have to also be very cognizant of is this tariff issue is going to play out for a while with retaliations. So you can get all that volatility. And then you've got increasing risk of recession, so you're going to have to be careful about those estimates, and they're going to come down. Probably mid-single-digit % again in a modest recessionary environment. But with these kind of multiples, yeah, you want to start picking away at them.
Could you, in the next earnings season, as soon as that, see a retrenchment in purchasing of IT right now?
Will we see that in the earnings season? I think most of these companies are going to be, and we're just finishing up our previews now, or most of these companies are going to be reporting reasonably solid March quarter results. My guess is that what's going to be consistent across almost all these tech earnings is cautious commentary about end market demand for the June quarter. And therefore, you're going to see cautious guidance that's in line with or below the street for most of these estimates. The only silver lining here is currency, which looked to be a massive headwind for the year. It doesn't look like it's going to be as much of a headwind as thought. So there's a little bit of help there. But at the whole, I think the March quarter results, I think, are going to be fine. I think there's just the guidance is just going to be cautious about the June quarter. So I don't think there's any particular reason for the stocks to trade up on the upcoming prints.
You can totally understand why enterprises would just slow down their commitment to spend on some of your names and some of the technology that they sell. What about the AI trade, though, Mark? It does affect some of your names, like Meta, like Amazon. Does the wind come out of the sails there, too?
I think it has been coming out. I saw that Treasury Secretary's comments about DeepSeek being one of the key factors behind the Mag 7 trade unwind. I think there's some truth to that. Now, I think there's also policy that's just been just as much, probably more of a factor in the market sell-off and in the Mag 7 unwind. The AI trade, I don't think these companies are going to be slowing down their AI capex anytime soon. And I think we're going to see more and more evidence that they're getting a return on that. We're going to get a lot of these good productivity data points. Google is telling you 25% of their code now is being generated by AI, which means that their programmer headcount is probably going to be flat for a couple of years. Amazon telling you that they have 25% lower cost to serve in their most advanced automated distribution centers. That's a massive efficiency gain for a name like Amazon. So I think that's going to come through in terms of margins. The question is what's happening to demand, and is that going to depress the margin expansion we would normally expect from the AI trade? That's the big unknown to me, but I don't think these companies are going to slow down their AI expenses.
Mark, as someone who is every day having to respond to the headlines that we're going to get, many feel that nuance will come. There'll be carve-outs potentially, nearly every analyst anticipating that for Apple, for example. With your names, how are you going to keep abreast of how this changes, how we see other countries respond and try and carve out certain names, or at least, well, try and curry favor with the administration?
Well, I think I'm going to focus. I mean, the sector I look at, the internet sector, has very little direct tariff exposure, except for, the retailers like particularly Amazon. It's really kind of the indirect exposure, what impact the tariffs have on consumer confidence and on consumer spend. And so then what you really want to do is look at the stocks that I look at, and I kind of put it together a recessionary spectrum, like who's the most recessionary resistant, who's the most recessionary exposed. And, I think names like Netflix and Spotify are the least they are the most recessionary resistant. That's why they're trading off better today. They'll hold up better. The stocks have year to date. They've actually outperformed the market materially year to date because of this.
But a Shopify, for example, Mark, just to jump in, a Shopify would be on the other end of that.
Yes, it would be. And so would the travel names, too. Your Bookings, your Expedias, your Airbnb, the kind of consumer discretionary spends. Also, advertising names with a lot of exposure to brand advertising. Brand advertising always gets cut before performance marketing. So that's why I particularly find Meta very intriguing here. You brought it down to a very attractive price point. It's the largest performance marketing platform out there that isn't called Google. And I think it actually will hold up fundamentally better than most assets. So that's why I'd be chipping away at the stock here.
Mark Mahaney with News You Can Use. We thank you so much, Evercore ISI. Coming up, we'll take a look at how the 25% auto tariff is going to be impacting the electric vehicle market. This is Bloomberg Technology.
What is the issue between the type of information that's being collected by investors and the marking issue that you're describing?
But what mark-to-market assets do is it forces honesty into the situation. We're talking right after the DeepSeek model surprised everybody in its efficiency. It took hundreds of billions off of market caps because it legitimately raised concerns that maybe the future of AI was different. I guarantee you that if you look at other portfolios that aren't marked, they didn't move. If private assets are going to eat the world, as they say, with the equity market halving in the number of names, you come to a world that is increasingly an echo chamber. Imagine you have a firm that has some public assets and some private assets. If you see your public assets in AI going down by 20%, you're going to be thinking very, very deeply about what your private assets are worth differently than someone who just has the latter.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Versace in Davos, Switzerland, and this is Bloomberg.
Now, let's take a look at how tariffs from the auto industry, that's Trump's 25% tariff on US imports, is already taking effect. Expected to increase costs and disrupt industry supply chains. Bloomberg's CrudeOil joins us now. These aren't promises, these are delivered. And how much are we already seeing auto sector and EVs respond to it?
Yeah, I think we will see significant disruptions to supply chains. I think that is part of why you're seeing some of these stocks trade down. I think you're also, likely going to see some of these companies caught up in retaliation, potentially in the days and weeks to come. We haven't necessarily seen that, from countries that are newly facing higher tariffs from the Trump administration. But we did get at least a whiff of that already with, Canada, for instance, kind of taking aim at Elon Musk's companies as a result of the tariffs that the U.S. has put on Canada and Mexico in the last few weeks.
So yeah, go there for us, because Tesla is down hard, even though many would anticipate, look, it makes more of its cars here in the United States. It should be less exposed. But you think it's a retaliation trade here?
I think retaliation is likely something that the market would be, concerned about. I do wonder, too, looking at Tesla shares, they really were down quite a bit yesterday. They had this, really furious rally in response to this report by Politico that maybe Musk would be looking to exit his roles in advising the Trump administration. And I think, not only did the White House press secretary and Musk himself, sort of knock that down, but you heard J.D. Vance today, come out and say that, he will continue to kind of have our ear even after he, officially leaves. And so this notion that that Tesla is, going to make a clean break from this situation where its CEO is so closely tied to the Trump administration just seems pretty misguided. I think the one other thing I would point out is, Tesla likes to, and rightfully so, likes to tout, how, U.S., made in America, its cars are. But in order to rely on its parts content to share that data with folks, it relies on U.S. government data that loops in U.S. and Canadian parts content. So that just speaks to this notion that I think for decades we've sort of thought of what happens in Canada and what happens in the U.S. as sort of one and the same in this automotive supply chain. And for us to move to this new paradigm where that's no longer the case is really disruptive to everybody, even companies that make all their vehicles in the U.S.
Really thoughtfully put, Craig Dow. Thank you. Look, let's get more for you on auto tariffs, how they could impact electric vehicles in particular. John D'Souza is with us, co-founder and president of Ample, which is working to accelerate the transition to electric mobility. And what's so interesting about you is you basically offer to swap out the actual batteries to make charging that much swifter and cleaner. But John, you've made real inroads into building in America. How is this going to backfire for you with tariffs?
So as you look at the tariffs, there are actually three things that you need to look at. One is where do you go through and produce it, where are your factories? The second thing is where do you get your materials from? And the third is what you do to finish goods. So I think we were ahead of the curve. We do all of our production in the U.S. in California. We have our factories there. The two other parts, though, one is where do you get the goods? When you don't have the capacity or you don't have the necessary skill set domestically to go through and form it, you buy those things from abroad. So the tariffs for us, that means everything we bring into this country, we need to go pay tariffs on it because we're doing all our production in the U.S. The last part of it is once you produce it, we export, and export helps our trade surplus. But I think part of the tariffs has this new provision where it takes back duty drawbacks. Duty drawbacks says you get your tariffs back. So you pay the tariffs when you bring it in, but when you export it, you get it back. If you take that back, or if you take it away, it makes your goods exceedingly expensive and uncompetitive. So I think as we think about the full cycle, it's important to look at all three components. We are doing all the production in the U.S., but the tariffs hit us on two parts, the stuff that we buy in, and then when we send stuff off, we don't get any of those tariffs back.
How hard does this make your decision-making, this uncertainty?
I think there are three things, and I think what COVID showed us is that the full supply chain is very complicated. So the three things that I think make it difficult is, one is the number of different tariffs that are coming out there. They're also complicated. Second is the speed at which they come out and change, and I think the third is the speed at which they're implemented. So supply chains have a very long life cycle, so it's hard to go through and change it quickly. So I think where the difficulty comes when you put those together, we try to make long-term decisions on our supply chain, but with the speed at which they come out, change, and then you don't have the time to react, it puts a lot of stress, especially on smaller companies. And I feel that what we should do is help the smaller companies through this, because it's what the U.S. is known for, the innovation, the stuff we create, and I think it's exceedingly burdensome for small companies like ours.
John, briefly, will the longer-term impact be for you to make even more in the US? Do you have optimism that you'll be able to get the skilled labor, you'll be able to get, well, some of the rare earth minerals you need right here in the US, or you're always going to be exposed? Briefly, 30 seconds.
So I believe that we can produce in the US, but we need the time to be able to do it. So given enough time, I think we can keep on bringing it here. But if you do it very quickly, many companies will not survive that time to be able to do it. So I think we just need to have a partnership with the government to make sure that we're working in concert to make sure we can get to goals, which I think the goals are really important, to produce in the US and increase our exports.
John D'Souza, really great to speak with you, co-founder and president of Ample. We thank you. Coming up, we'll have more on how tariffs are hitting the tech sector. This is Bloomberg Technology.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
In case you missed it, on the pulse.
You know, it's not the headline-grabbing $15 billion bankruptcy. It's not Lehman Brothers. It's not that. But what is happening underneath the surface is just frantic activity. There's a moment in time when real estate gets really interesting.
Now or soon?
Now. It's here.
Don't miss the pulse, live every weekday.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Microsoft has pulled back on data center projects around the world, sources say, suggesting that the company is taking a harder look at its plans to build the server farms powering AI and the cloud. Microsoft shares, now they're down, as you can see, 11% this year. Those concerns of an AI infrastructure bubble, they've been weighing on global tech stocks in recent weeks, especially Nvidia, which sucks up a significant share of data center budgets, of course. But as we head to break, let's just take a look at Nvidia and all the other big tech names which are under significant duress today. We think about the knock-on effects of tariffs, about the exposure of countries that many of them had diversified away from China into, and that is why, even with a carve-out for semiconductors, the semiconductor index is off by 8%. We worry about retaliation coming from these countries. Nvidia off by 6%. Move on and have a look at what's happening more broadly as the Nasdaq 100 has its worst day since 2022. Apple having its single biggest market cap sell-off. Almost $300 billion wiped off of Apple in one single trading day as we worry about the exposure to Asia, to Vietnam, not just China, and what reciprocal nature from other companies and countries will mean. From New York, this is Bloomberg Technology.
In 2000, post-Napster, generally everybody wrote off the recorded music industry, including the investment community. And I didn't mind that chapter because then I got left alone. And actually, I think out of that period, we started to create better art because the pressure wasn't on from the technology to be the most powerful chapter. And then iTunes came in, and iTunes, to Apple's credit, did have a boutique taste mentality about the store, which meant that I think they understood. I can tell you from that period that the artists that came through were of a very high quality because it was encouraged to be boutique. Now, ironically, this chapter has made us more money times 5 than the iTunes chapter and the post-Napster chapter. But an algorithm tells you what you want, not what you might like. And there's a difference between what you want, but with streaming, the downside is you have incredible penetration, and we have hundreds of millions of people around the world. And so that has been very lucrative as a business.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. A quick check on these markets, which are well and truly in the red. We're off by 5% almost on the Nasdaq 100, worst days since 2022. But you drill into individual moves of certain players within Magnificent 7 in particular, because the big tech tariffs have come for Mag 7. Meta having its worst day in a year since April 2024. We're down by 7%. This is as we eye what the EU response might be. Could it be a higher digital services tax? Is this going to affect Meta? Amazon off by 8% as it's in the eye of the storm when it comes to commerce, even though the de minimis ruling being removed from Chinese competitors not enough to help the stock. We're off by 8%, again the worst since 2024, August of that year. Meanwhile, President Trump's tariffs entirely have the markets on edge. Global stocks selling off as well. But US Treasury Secretary Scott Bessent says the equity plummet in the Magnificent 7 is a Magnificent 7 problem. It's not a MAGA problem. Let's get into that with Bloomberg's Ryan Vlastelica. Really interesting from Scott Bessent that he's saying, look, we peaked in tech back when DeepSeek happened. It's been a sell-off since then. It is not because of our tariff policy. But today, it feels like it is Magnificent 7's problem, these tariffs.
Absolutely. I would say that tariffs are 100% driving the move lower today. A lot of the Magnificent 7 companies, notably Apple, notably Nvidia, a lot of chip makers, they have a ton of manufacturing out of China, out of Vietnam, out of Taiwan, countries that were really hit with with tariffs that were a lot higher than some people were expecting. So they are now facing a really rough decision, assuming they don't get any kind of exemption or there's no change in policy. Either they're going to have to raise prices, which would hurt demand, or they're going to have to absorb higher costs, which is going to hurt profitability. It's obviously not a great position for them to be in.
Not a great position, such a bad position, Ryan, that you brought a quote to your story. You've assessed some of the analyst reactions. Rosenblatt is the one that took my attention, and I'll repeat it, that they're saying that this basically blows up Apple in many ways. And it's hard for us to imagine Trump blowing up an American icon. It does feel like a lot of analysts out there think there might be exemptions going forward.
We did see that during the first Trump administration, although I wouldn't say that the tariff policy there were anything nearly as aggressive as we're seeing today. So far, we haven't seen any real indication that there will be an exemption, but a lot of these companies have been working, probably behind the scenes, first and foremost, trying to get some kind of exemption. We saw, Zuckerberg was at the White House, I believe it was yesterday, looking for, help with antitrust stuff. So obviously they're hoping for something, but so far we haven't seen anything yet. And I think the longer we have to wait or until there's clarity one way or the other, I think we're going to continue to see a lot of uncertainty in markets.
Those inauguration seats not paying off thus far. Ryan Vlastelica, we thank you very much. Now let's get more on the markets. Janet Muir is with us, RBC Brewin Dolphin, head of market analysis. Risk off just everywhere you turn. Is that the right move?
Hi, Caroline. Thanks for having me. Yeah, unfortunately, we're in the eye of the storm.
and we are entering a period of significant uncertainty and risk-off periods. I think the thing is there's still likely to be a retaliation going forward, and I think market